Welcome to the Bitcoin Treasuries digital conference for October 21st, 2025. Bitcoin custody is evolving, and OnRamp leads this change with multi-institution custody, eliminating single points of failure. Instead of one institution or complex private keys, OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault backed by 3 independent, institutional-grade custodians. No single custodian can move funds by themselves, providing an unprecedented level of security that traditional custody solutions simply can't match. Protected by a $100 million Lloyd's of London insurance policy, all transactions are fully auditable on-chain, never rehypothecated, and executed only at your explicit direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp delivers comprehensive Bitcoin financial services, including lending, trading, inheritance planning, IRAs, and more. OnRamp functions as your private banking partner, coordinating key holder activity, removing technical burdens, and providing a personalized, trust-minimized experience tailored to your specific wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps secure generational wealth with unmatched security and peace of mind. Visit onrampbitcoin.com today to learn more, sign up, or book a free consultation with their team of Bitcoin custody experts.
Everyone should be able to save and protect their wealth across generations. We built this company so billions of people around the world can take control of their financial lives. We've reimagined savings and protection from the ground up with digital money and modern technology. We're the world's first Bitcoin life insurer. For the first time, people can save, protect, and pass on their wealth entirely in Bitcoin. 4 years ago, we started working directly with individuals. Today, as the Bitcoin economy has grown, some of the world's largest and most conservative institutions are joining us in our vision. Every economy is built on patient, long-term capital. Bitcoin is the foundation of the next phase of global finance. We're not just building a Bitcoin company. Meanwhile is the backbone of how everyone will save in the future.
Kadena Bitcoin is a decentralized, peer-to-peer Bitcoin borrowing and lending marketplace. Lenders in this market are looking for a fixed fiat yield, while borrowers are looking for leveraged Bitcoin exposure. Kadena is building Bitcoin native financial services to power the Bitcoin economy with self-sovereign financial tools that do not require giving up custody of your Bitcoin, because as Satoshi said, the main benefit is lost if a trusted third party is still required. Learn more at kadenabitcoin.com. Bitcoin Treasury adoption just exploded past $84 billion, with 15 new companies jumping in this month alone. While your competitors stack Bitcoin, are you still watching from the sidelines? The question isn't if anymore, it's how fast can you catch up. Satoshi Institute pioneered the professional infrastructure that institutional treasurers can trust. Live simulation platforms, battle-tested risk frameworks, and the market's only Bitcoin Treasury performance indexes that track 800,000 plus Bitcoin holdings. Are you ready to join the Bitcoin Treasury revolution? Get your free strategic assessment at satoshiinstitute.com. Satoshi Institute is where billion-dollar Bitcoin treasuries begin. Check them out online at satoshiinstitute.com. The Bitcoin Treasuries digital conference is sponsored by Belgravia Hartford. Belgravia Hartford is revolutionizing corporate finance with cutting-edge Bitcoin treasury strategies tailored for Canada's dynamic markets. Welcome to the Bitcoin Treasuries digital conference for October 21st, 2025. Bitcoin custody is evolving, and OnRamp leads this change with multi-institution custody, eliminating single points of failure. Instead of one institution or complex private keys, OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault backed by 3 independent, institutional-grade custodians. No single custodian can move funds by themselves, providing an unprecedented level of security that traditional custody solutions simply can't match. Protected by a $100 million Lloyd's of London insurance policy, all transactions are fully auditable on-chain, never rehypothecated, and executed only at your explicit direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp delivers comprehensive Bitcoin financial services, including lending, trading, inheritance planning, IRAs, and more. OnRamp functions as your private banking partner, coordinating key holder activity, removing technical burdens, and providing a personalized, trust-minimized experience tailored to your specific wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps secure generational wealth with unmatched security and peace of mind. Visit onrampbitcoin.com today to learn more, sign up, or book a free consultation with their team of Bitcoin custody experts.
Everyone should be able to save and protect their wealth across generations. We built this company so billions of people around the world can take control of their financial lives. We've reimagined savings and protection from the ground up with digital money and modern technology. We're the world's first Bitcoin life insurer. For the first time, people can save, protect, and pass on their wealth entirely in Bitcoin. 4 years ago, we started working directly with individuals. Today, as the Bitcoin economy has grown, some of the world's largest and most conservative institutions are joining us in our vision. Every economy is built on patient, long-term capital. Bitcoin is the foundation of the next phase of global finance. We're not just building a Bitcoin company. Meanwhile is the backbone of how everyone will save in the future.
Cadena Bitcoin is a decentralized, peer-to-peer Bitcoin borrowing and lending marketplace. Lenders in this market are looking for a fixed fiat yield, while borrowers are looking for leveraged Bitcoin exposure. Cadena is building Bitcoin native financial services to power the Bitcoin economy with self-sovereign financial tools that do not require giving up custody of your Bitcoin, because as Satoshi said, the main benefit is lost if a trusted third party is still required. Learn more at cadenabitcoin.com. All right, we're off mute. Welcome everybody to the Bitcoin Treasuries Digital Conference. We're here in New York. You can probably hear the sirens behind me. I'm going to bring to the stage the other guy in an orange tie, but maybe not today, Ed Julien. Ed, good afternoon, sir. How are you?
Good afternoon from beautiful Mexico City, Mexico, here in our Secured Control Center.
Any notes, any housekeeping before we kick it off with King from Treasury?
Nope, we've got a fantastic lineup here today. Real excited about Dylan LeClaire, CJ from Strategy. We got Ben Workman from Strive. We've got Fred Krueger added at the last minute. No, this is going to be a pretty intense 6 hours. I'm sorry I made you cut back from 21. I know you were looking to just keep that marathon going, but we'll pack this into 6 hours, see how it goes. But thrilled to be doing another digital conference. Thrilled to have our sponsors with us, and let's get it rolling.
Absolutely.
Repost.
Absolutely. Thanks, Ed. We'll talk to you in a little bit, and I'm going to bring King to the stage here in just a second. King, good
Tim,
afternoon. How are you, sir?
good to see you. Thanks for having me, and Ed as well.
Absolutely. Absolutely. Thanks for your time. Thanks for being here for the digital conference. I know we've spoken a few times. We've been in the studio together here in New York, but can you, for anyone that is maybe new or just a reminder, was there an aha moment that kind of convinced you that Bitcoin belonged on the balance sheet? Tell us about that a little bit, if you would.
Yeah, for sure. So I've sort of been in traditional finance markets for most of my career. Started at Goldman Sachs many years ago. Ran my own hedge fund, was a number of hedge funds, and I was investing mostly in credit markets in distressed assets. It's always been my thing. And basically, I saw what happened in the global financial crisis in 2008. I saw sort of the hype, the credit cycle before with securitizations. Set up a securitization platform actually in 2007, and then how it all crashed in '08. And then post '09 into the 2010s, what happened with unlimited money printing by governments. I was running my own fund in those days, and I saw, basically a zero rate environment and what it was doing globally with inflation, with assets, with a very artificial environment, monetary environment. And in those days, I got towards the end of that cycle, actually, I got first exposed to Bitcoin, and it was for me a total, I should say, aha moment and real orange pill moment where I immediately saw the value of essentially digital gold, which is not controlled by any government, with limited supply, and that for me was I found it very hard to see a way out of the global inflationary game and money printing game, and that's unfortunately turned out to be true, right? We're still there. It's only getting worse. And the value of Bitcoin for that reason has only become more and more preeminent and unavoidable, frankly. So that was for me the big moment in that sort of cycle post GFC.
Got it. When it comes to kind of the service provider side of things, the running joke that I tell people in private conversations is like, well, there's, some well-known service providers when it comes to like custody, accounting, compliance from the regulatory standpoint. And so it's like, I don't know, it's probably pretty obvious, but were there any challenges when it came to kind of setting up those operationally, those processes, that vetting process, anything that you could share that maybe you're like, was surprising or more challenging than you thought?
Yeah, you mean in this cycle for the treasury company, right?
Yeah, yeah,
Yeah,
yep.
sure. Well, I think unfortunately, and especially being in Europe, this whole idea of it being very hard to essentially be banked as a crypto-related business is very difficult, right? What we've seen in the US pre-current administration, which is very much an anti-crypto stance by the regulator and different institutions. We're kind of in that environment right now in Europe. So I can tell you from experience, just opening something like a bank account is very tricky, right? And you need for a treasury company, the whole point of a treasury company is equitizing Bitcoin. So you need to be part of some of those traditional rails, and none of and it's not it's very often not easy, to be fair. I think for the more crypto native businesses that are service providers in the space, for instance, custodians, that's actually going really well, right? Because they know they can see the value in our business, we can see the value in their business. They've typically hired very good people from banks and from traditional finance that know how to build solutions. So I would say on that side, we're actually very, very pleased with what we've seen.
Got
Because
it.
clearly for a Bitcoin treasury company, I would say the custodian is probably the most important one, right? You to make sure that your assets are safe and well guarded, and all the policies are in place, everything is in place, best practices for every level of security, and that's I think that's a very good part of the ecosystem.
Got it. How do you measure Bitcoin's impact on your company's long-term value? Like, how do you think through that maybe?
Yeah, so for me, it is absolutely clear that Bitcoin treasury companies in general, have a real reason to exist and are going to be a very essential part of their respective financial ecosystems going forward, right? And obviously, strategy create a whole sector for us, and is the 800-pound gorilla. And we're obviously in Europe. Our ambition is to become the largest in Europe. We're the first on a primary exchange here. And to me, the only way I can see that is gaining importance in the ecosystem here, right? So with a growing balance sheet, with a institutionalization, right, an increasing investor base across both individual investors and institutional investors, that will become only more important to be. So I think the funny and interesting thing is clearly we all believe that Bitcoin, in terms of its price, only has one direction to go. We'll have volatile times as we always do, but it's clear that the only way is up essentially. But to me, that's not even the most important thing. To me, it's really about building that Bitcoin balance, becoming a very sizable company in its own right, even at the current price. And if it then so turns out that Bitcoin is a 10 or 20x from here, that will then become essentially one of the largest companies in Europe, in our case. So to me, those combinations, right, having that Bitcoin balance, that balance sheet will become very valuable over time. It already is. But the way exactly it's going to play out, I think it's still to be seen, right? It could start functioning a bit more like a bank, some sort of core anchor in the financial ecosystem. That to me is also clear that it will happen. And then adding to that an increasing balance sheet in terms of number of Bitcoin, and then also in terms of a higher price will become very, very powerful. So I'm a strong believer in that, in that these companies will become some of the four core institutions of their respective markets going forward.
You mentioned that custody is arguably the most important when it comes to, well, probably everything, right? You got to keep your
Yeah.
Bitcoin custodied appropriately. But how do you view the media and events? And part of this comes from the recent announcement that Coinbase bought the Up Only NFT, which I assume is also the podcast, for like $25 million, and certainly also that Treasury that you lead, has purchased the Bitcoin Amsterdam conference. So, how does all of that play together? What is the importance of it? How do you kind of view all of that in this uh, very evolving space, you could say?
Sure, absolutely. Look, we see our role as a broader one, right? We're hopefully a core ecosystem player. So it means we're contributing to the ecosystem. We should broaden it. We should increase education, build adoption, all those things. And indeed, as part of the announcement we made last month, we also announced that we purchased the Bitcoin Amsterdam conference, one of the largest outside of the US. And to us, that's a critical part of Treasury actually, because it allows us to bring the community together, build education, bring more people into Bitcoin. Clearly, it's also a fantastic asset to have from our perspective, from a marketing PR perspective, as you said, an event. So the media and event side, I think, is a critical component of Bitcoin treasuries. So we feel very fortunate that we were able to acquire that. And it's next month, right? We're here in Amsterdam, November 13th and 14th. Great speakers from all over the world, and to us, that's sort of really the beginning of that part of our journey. And I think as mentioned, for Bitcoin treasuries, there is a broader role to be doing these things, and we've seen others do the same thing. So we're all for that.
Awesome. If you could give one piece of advice to a CFO who's on the fence about Bitcoin, what would it be?
So I think
Million dollar question. Million dollar
exactly.
question. Billion dollar question.
Absolutely. So as a CFO, and I've obviously been on the other side of the table for many years, right? I've been an analyst and a portfolio manager for most of my career, investing in companies, meeting management teams. And ultimately, the most critical role of a CEO and CFO is how to allocate capital, right? So, and that could be for building a new factory, it could be for marketing, it could be for M&A, it could be buying back shares, right? It's the capital allocation decision is probably the most important ones. And I think a lot of people sometimes lose track of that sort of first principle. And in I think in many cases, it may very well be that adding Bitcoin to your corporation, right, putting it in your treasury, is one of the best use of capital for the company. And it really depends case by case, right? If it's maybe a healthcare company that needs to do the next round of investments to get to the next approval, clearly they should be doing that, right? It's part of their core business. But if there is a excess working capital they're using at that point in time, and they don't think they don't need to do any of that core part of their business, then it could very well be, then it probably is one of the better use of cash for them. So I think this for a CFO, they always need to think, where are they going to get the highest return on capital employed? Where is their capital best allocated? And I think it's very obvious, and I like to think that Bitcoin is going to be playing more of a role in that decision, at least be one of the factors to consider.
Got it. And can you give us kind of the tear sheet rundown of like where Treasury is right now? How many Bitcoin are on the balance sheet? Oh, thumbs up. That's cool. And and where do you see Treasury maybe 12 months from now?
Sure. No, we're very excited. What we announced, obviously, is our anchor round, $150 million almost, backed by Winklevoss, Cameron Tyler, and Nakamoto David Bailey. They're also on our advisory board. We announced a reverse takeover, which will go to EGM very soon. And then once the listing is completed, we're clearly off to the races with the full suite of capital markets operations, which we have at our disposal, being on Euronext Amsterdam, which is a primary exchange. So that's convertibles, pref securities, at the markets, the whole range. I think we have right now 1,111 Bitcoin on our balance sheet, which we're very excited about. So we're somewhere in the top 50. And clearly our ambition is to grow it as fast as we can. I think what we're also seeing is that in Europe, there's still very much an underinvestment in the space, both in the credit and equity markets. The fixed income markets in Europe are actually massive because of the history. They're actually larger than even in the US, which means that pref securities, which essentially give exposure to Bitcoin, will be a very attractive instrument for European fixed income investors because of the massive premium that you can pay as a Bitcoin treasury company and you can receive as an investor. So that's certainly something it's very high on our list. And then I would say on the equity side, the interesting thing is that actually, if you look at MicroStrategy, for instance, it's the third largest option contract in the US, and its option volume is double the 3 largest contract in Europe. So in other words, US is obviously, there's a lot of high-tech companies with high vol, and MicroStrategy has a very firm place in that. But there's very few of those type of high vol companies in the European landscape. So a company like ours is a real asset for the market, for a variety of market participants, including options traders and vol traders. So clearly get an options chain very soon, being able to be an active participants also in convert markets, we think is a big gain. And then finally on the pure equity side as well, right? It's, if you're a European portfolio manager, which I've been, and you're looking for either a high vol stock or a stock with Bitcoin exposure, is actually impossible to get right now on the main exchange. So we think there's very good product market fit as well for us. So yeah, on all, we're very excited to move forward and build the ecosystem together.
Awesome. Where can people reach out to you and to Treasury online?
Sure. So on X, we're Treasury_BTC. My handle is King Uy, first and last name combined. LinkedIn, pretty much the same. So reach out and also definitely follow the conference. So we're very excited about that next month.
Awesome. Well, I look forward to seeing you in Amsterdam next month. And
very much.
And remind everybody the dates on that and where they can go for it.
Sure. So it's November 13th and 14th, Thursday and Friday in November. And the address is just bitcoin.amsterdam.
Awesome. I mean, that's a great domain, right? Bitcoin.amsterdam.
Absolutely.
All right.
Great.
Thanks for your time. Appreciate you joining us today.
Great. Thanks a lot, Tim. Good to see you.
Thank you. Ed's frozen. Okay. Up next. Boop, boop, boop. Jason, how are you, sir?
Good. How you doing, Tim?
I'm good. Jason Leibowitz, Head of Business Development at Meanwhile.
Right.
Welcome to the conference. Appreciate your time. Can
Happy to
you
be here.
can we just start off with a little bit of your background for those unfamiliar? We had a chance to chat yesterday, and yeah, you have quite the interesting background. So I'd love if you can share just a little bit on the personal professional side.
Yeah, absolutely. I've been in the crypto space since 2013. Traditional Wall Street as a sales and trading before that. And I discovered Bitcoin, became absolutely fascinated, started one of the first crypto funds in New York in 2014, where we actively managed a portfolio of digital currencies. Went on to co-found Credit Suisse's blockchain and digital asset team from 2016 to 2020. The bank, was very much interested in blockchain as a technology, but anti-crypto, as you can imagine, kind of following Jamie Dimon's mantra of Bitcoin bad, blockchain good. And so we built, distributed ledger technology for the bank where blockchain sitting next to AI, machine learning, big data, robotics, cloud, just another technology in the innovation portfolio. But it got very interesting because I was with the bank from 2016 to 2020. And if you recall that time in Bitcoin's history, especially 2017, starting the year at 1,000, ending the year at 20,000, um, everyone at the bank, everyone on Wall Street started to look at Bitcoin as a speculative asset, potential investment. And so we got a lot of our, ultra high net worth clients, being a global Swiss bank, reaching out saying, hey, we'd like to explore a crypto allocation. What coins? Where do you buy? Who are the best counterparties? What do you do with custody, taxes, estate, the whole thing? But those wealth managers knew only to say Bitcoin bad, blockchain good. We have a blockchain team, but we don't help clients invest in crypto. But they still set up calls with me and my team. And in 2018, 2019, we got dozens upon dozens of conference calls set up with the blockchain team where people were asking those questions, generally, baby boomers, patriarchs. And, I knew the answers to those questions, but I wasn't allowed to help them. And so I left, started my own company that helped them allocate from traditional capital markets asset classes into the crypto space, grew that business all throughout COVID. Obviously, the COVID markets were good for crypto, and sold that business to an on-chain asset manager. And then I discovered, meanwhile, last year, and got my own policy, being a low-cost basis Bitcoin investor myself. I have a wife and two young kids. Bitcoin denominated life insurance blew my mind, solved a lot of problems for me, and I joined the company early this year.
Awesome. Maybe we'll just start with the basics when it comes to meanwhile. Like, how did the idea of Bitcoin denominated life insurance kind of come about?
Yeah, so the company was founded in 2022, and my founders realized that life insurance is one of these sort of lesser known financial tools that had all these tax advantages. And they were generally used in whole life, especially with the tax advantages, an investment account that grows tax free, the ability to borrow tax free. It's generally used by the wealthy community, high net worth, family offices, because it allows them to minimize their tax liability. And wouldn't it be great if you could minimize your tax liability with a highly convex asset like Bitcoin, where you can wrap your Bitcoin with a life insurance wrapper? And that was sort of the genesis of the idea. My CEO, Zach Townsend, started the company in 2022 with a memo that raised $22 million. He wrote a memo with that idea, with that framework. He's an ex-McKinsey guy and startup, and his co-founder, tech startup guy, sold businesses to Salesforce. And they both had this idea that if you can create the tools for allowing your Bitcoin to grow tax-free and allowing you to monetize your Bitcoin tax-free via life insurance, that would be amazing. But the only way to do it is to start a brand new life insurance company denominated fully in Bitcoin on the Bitcoin standard, where Bitcoin is the company's currency. And if you go to our website, you'll see our audited financials are a table of numbers with B's in front of them, not dollar signs, because Bitcoin is our currency.
Got it. Can you walk us through maybe the differences between traditional life insurance and Bitcoin life
Yeah.
insurance?
Yeah, I think that'll help to kind of illustrate what Bitcoin life insurance is and how it works. So with traditional life insurance, you go to a carrier and you ask for coverage. You say, I'd like $1 million death benefit, whole life policy. And they'll say, great. They'll crunch some numbers based on your age, health, sex, smoking status, dictate to you an amount of premium that you have to pay in fiat, either every month or every year. And of course, there's fees and expenses baked into that premium payment. And in whole life, it goes into a mutual fund account, so to speak, essentially a market tracker that has a guaranteed growth rate of 4 to 5% a year, every year, regardless of the performance of the underlying assets itself. It's a basket, and you always will be up 4 or 5%. So it's conservative, but it has downside protection, and it grows tax-free. And in the future, you can borrow out of that investment account without paying a dime in taxes. So let's say after 2 decades, that mutual fund is up 30%. You can get a policy loan that you never have to repay and that you don't have to pay taxes on. So if you have $1 million death benefit and you could borrow up to 80 or 90% of your surrender value, let's say you borrow 100K, it comes out of that 30% appreciated mutual fund, and you don't have to pay any gains on that 30%, no capital gains tax. You get the full 100K, and you never have to repay the loan because your death benefit nets from $1 million to 900,000. Pay like a 4, 5, or 6% interest rate on that loan, and then you also allow that to accrue and net out of the remaining death benefit as well. So it's a cool concept, life insurance. The only problem is it's in fiat, and there's extreme inflation in most places that you look in the world. When you look at the fiat dollar, for example. And so Bitcoin life insurance is similar, but it's on the Bitcoin standard. And so we had to change some things around to make it work. So with Bitcoin life insurance, you can't come to us and ask us for coverage and have us tell you an amount of premium you have to pay, because it's a finite supply asset. So we can't say, oh, Tim, you have to pay 10 Bitcoin a premium. Because you might say, what are you talking about? I only have 8 Bitcoin. We don't know how much Bitcoin you have. So instead of asking us for coverage, potential clients come to Meanwhile and they say, this is how much Bitcoin I have that I'd like to potentially use as premium. What do I get for it? Well, we will then crunch numbers based on your age, health, sex, smoking status, and give you a death benefit ratio that you get relative to the amount of Bitcoin you want to use as premium. So the premiums are always going to be paid over 10 years. It's called a 10 pay or limited pay, non-participating, non-mutual policy. You pay your premiums in equal annual installments for a decade for 10 years, and then you're done for life, hence whole life. And the premiums are in Bitcoin. The death benefit is in Bitcoin, and those policy loans are also in Bitcoin. So I can get into the details of how it all works, but I mean, you really now have to start, like everyone, we got to start thinking in Bitcoin, no more fiat. Everything's in Bitcoin here.
This might be going over a little bit the same ground, but to put it simply, what problem does this solve for the Bitcoin holder that the existing financial products can't? I mean, you're just kind of flipping everything from USD to BTC, or is it more nuanced than that?
No, what you essentially get, and the reason I have my own policy, and we've gotten a lot of excitement since our latest funding round was announced a couple of weeks ago too. This solves the problem of huge tax bills for Bitcoiners because we're near all-time highs. And if you want to take some chips off the table, sell some Bitcoin, buy something, whatever it might be, you're going to pay a pretty big capital gains tax relative to your cost basis. And we all want to be as smart as possible by minimizing our tax liability wherever legally allowed. And to have Bitcoin and life insurance, you can really minimize your tax bill. And the way it works is as follows. With Bitcoin and life insurance, Meanwhile, you get 2% yield on your Bitcoin. You get the ability to borrow from your policy tax-free, same with traditional life, and the death benefit ultimately when someone passes and you pass on your Bitcoin to your family, that's tax-free. So I'll explain each of those points. So yield. For it to qualify as life insurance, for anything to qualify as life insurance, you have to grow the portfolio. $100,000 of premium gives you $500,000 of death benefit, traditional life insurance. How do you get from 100K to 500K? Well, the 4% growth rate in that mutual fund, you get yield. What about Bitcoin life insurance? What's premium relative to death benefit? Well, for an example, a 35-year-old healthy non-smoking male who wants to use 10 Bitcoin as premium, paid over 10 years, so 1 Bitcoin a year for 10 years, then you're done for life, pays about 18 Bitcoin in death benefit. It's 8 extra Bitcoin, or an 80% return you get over the course of your life. How do you get 8 extra Bitcoin without buying 8 more Bitcoin? Well, we're going to grow your portfolio, your Bitcoin, by 2% a year in Bitcoin denominated terms every year. And so If we didn't grow your portfolio, if there was 0% and we said, oh, it's hard to get yield in Bitcoin, well, then what's the difference between us and custody? You give us 10 Bitcoin, you die, your family gets 10 Bitcoin. It's not that different. So we're growing it at 2% a year. And the policy loans are where it gets very interesting too, because just like with traditional life, where you can borrow and not have to pay gains and that gains tax on that 30%, and then you never have to repay the loan, same concept. Let's say Bitcoin goes to $1 million a coin. Well, you have two options if you want some cash. Option one is sell Bitcoin at $1 million, but you're going to pay a very large capital gains tax relative to your cost basis. Option two is originate a policy loan if you have a policy with Meanwhile. And the way it works is you're going to be borrowing Bitcoin, but you get a new stepped up cost basis. So at $1 million, you come to Meanwhile, you could borrow up to 90% of your surrender value, log into your account, you see the available loan amount at that point in time, and you say, I want to borrow 2 Bitcoin. We're going to send 2 Bitcoin to a wallet of your choosing. We're going to screen it with Chainalysis, make sure it's not going to North Korea, and send you those 2 Bitcoin. And then it's on you to do whatever you want with the 2 Bitcoin, but presumably you want cash. So you go to an exchange or a broker that you have a relationship with and you sell 2 Bitcoin, but they're going to say, where is this Bitcoin coming from and what's the cost basis? Well, you'll have a loan document that this comes from your regulated life insurance policy at Meanwhile. And the cost basis is established on the day you originate the loan, in this case, $1 million. So the exchange sees that, they say, oh, these are $1 million coins. Even though your premium was paid with low cost basis Bitcoin from many years ago that you bought at $100 or $1,000 or $50,000, you don't borrow or use that Bitcoin. In life insurance, you get new, different Bitcoin at a new stepped up cost basis. Bitcoin happens to be up 1,000% in this example. The mutual fund in traditional life was up 30%. Either way, you don't have to pay gains on it. And because Bitcoin's a finite supply asset, this is how it mechanically works. You get a new stepped up cost basis. So you sell 2 Bitcoin at the exchange, you get 2 million in cash. You never have to repay the loan because your death benefit was 18. You just borrowed 2. Now it's 16. And you pay a 3% interest rate on that borrow on the 2 Bitcoin. For the rest of your life, you can keep that loan outstanding. You never have to repay it. It'll also, the 3% net out of that 16 remaining death benefit. And lastly, there's no margin call risk because you're borrowing Bitcoin against Bitcoin collateral. You're not borrowing Bitcoin or you're not borrowing dollars against Bitcoin. You're not borrowing from an exchange or lending desk. And because there's no margin call risk and you're borrowing Bitcoin against Bitcoin, I mean, it's an incredible way to use life insurance to monetize Bitcoin. Finally, the final point of life insurance is that somebody dies and you pass on Bitcoin to your family. And you're going to pass on more Bitcoin than you originally had. You only had 10 and you're passing on 18 or 16 net of the loan. And it's very seamless. Your beneficiaries, whoever they may be, a spouse, a child, a family member, they might not be as crypto and tech savvy as you. And if you were to pass today with Bitcoin self-custody, that Bitcoin might die with you. They might not know how to use a ledger or the private keys and where they are located, how to use a wallet, how to liquidate Bitcoin. They might not have that level of sophistication. And it's scary, especially if you have a family, you have people that depend on you, and Bitcoin is near all-time highs and it's worth a lot of money. So in life insurance, you simply just file, the beneficiaries need to know there's a policy, the person passed, they reach out to the insurance company, they file a claim, same with traditional life insurance, and they get the choice of either getting Bitcoin or dollars. The reason they can get dollars is because we understand that a lot of these beneficiaries might not know what to do with Bitcoin and they just want cash. And upon death, the Bitcoin receives a new cost basis. So we can send them Bitcoin, new cost basis, or we can help them liquidate the Bitcoin. We custody at Anchorage. We'll work with the Anchorage team, which they're amazing, and sell on their trading desk at a new cost basis. You get all the cash wired to the beneficiary's account, and that's that. It's a pretty incredible product.
For those that might be listening and they are at their computer, can you just call out the website where they can kind of go learn more and maybe click through to, kind of be in touch?
Yeah, we are a Bermuda-based company, so it's meanwhile.bm, boy Mary for Bermuda. The company is Meanwhile. So you go to meanwhile.bm, there's plenty of information on there. You can always also reach out to me if you want to learn more. My Twitter handle is there. My email is simply jason@meanwhile.bm. But happy to get into any of the nuances of how this all works as well.
Awesome. You mentioned Anchorage, and one of my questions was, custody is always a big topic. So Anchorage holds the Bitcoin. Can you talk just for a second about that, like how clients can be confident that it's secure if they're
Yeah,
not
I
familiar with
mean,
Anchorage, maybe?
Anchorage Digital is a federally chartered, by the OCC as a trust company in the U.S. So, being a trust company, their assets are bankruptcy remote, meaning that all your crypto custody at Anchorage is insulated from any type of potential bankruptcy in the future. Plus, they have insurance, Lloyd's of London, and I think other insurance policies protecting from a PNC perspective, hacking, theft, you name it, the assets held in custody. They are a cybersecurity company first, maybe a custodian second. I don't want to, discount the fact that they're a custodian, but the point is that they operate fully in the cyber world and they are as buttoned up and secure as can possibly be. In my opinion, they're the number one or number two best custodian on the planet. Say them and Coinbase. We also have accounts at Coinbase. And so there has to be a level of trust. And we're building a company that has to be around for centuries, generations at least, but centuries, because we have 20-year-olds that have policies with us. They're not going to die for 70 plus years. And so how does your Bitcoin last that long? Well, I'm a believer of self-custody, but you have to ultimately for decades into the future with who knows what types of technology and sophistication will evolve on the internet. You have to trust the professionals at some point with your assets that you want to outlive you and go to the next generation. And we're confident that Anchorage Digital is the best custodian. I mean, sovereign wealth funds trust them, central banks trust them, ETF issuers trust them. They have over 100 billion in assets, over 30 billion in Bitcoin custody. They're fully regulated and licensed, transparent about it, everything they can be transparent about without compromising security. So yeah, I'm very confident in them, having been in the space for 12 years. Yeah.
Outside of custody, what do you think, at least these days, is the most common objection you receive, and how do you kind of address that?
Yeah, there's a number of things people have to get comfortable with Bitcoin and life insurance. One is you're giving your Bitcoin up to somebody. We're Meanwhile. You've never heard of Meanwhile before. Who are these guys? Why should I trust them with my Bitcoin? Well, we're doing everything we can to be as transparent with our clients and potential future clients about who we are, how we operate, what we do. I think this, you know, bridges well into how do we get yield? Because you're going to give us your Bitcoin, we're going to grow by 2%. How are we getting this yield, and is your Bitcoin safe? Well, we have a pretty amazing and clever way to get yield. And I'll just go over that super quick. I know we're probably running up against time, but 2% a year, the way we generate that is by being a life insurance company. We're in a very unique position in the crypto economy where our liabilities are extremely long dated. Therefore, we're duration seeking. And we're willing to take long-term loans with counterparties that meet our regulatory and risk aversion passes and our conservative nature. And so one such loan that we've devised has zero counterparty and credit risk. And we primarily work with Bitcoin miners who have low cost basis Bitcoin. And if you think about Bitcoin, the Bitcoin mining community, especially those miners who've been around for a long time with very low cost basis Bitcoin, well, they all have CapEx or OpEx needs. They need cash, they need fiat. How do they get fiat? Well, there's only really two main ways that miners can get fiat. You can borrow against your ASICs, or you can sell Bitcoin. Now, selling Bitcoin has a tax liability. Their cost basis is established the day they mine the Bitcoin and it lands in their wallet. And then their tax liability is the difference between that price and the price at which they sell. So they'd much rather sell Bitcoin they mined today, yesterday, last week, closer to today's price than Bitcoin they mined at $100, because the tax bill on that is $110,900. And it's a massive tax bill. So what do they do with all that low cost basis Bitcoin? It's non-economic. I mean, you're paying 20+% in taxes. So what can they do with it? Literally nothing. It just sits there. Well, until Meanwhile came along. And what we have been able to figure out is a way through a repurchase agreement, a 1-year repo, allow them to swap low cost basis Bitcoin with at the money Bitcoin with Meanwhile. So they'll lend us 100 Bitcoin as an example, a miner, and we'll lend them back 96.5 Bitcoin because we charge 3.5% up front. So you send us 100 Bitcoin low cost basis, we send you back 96.5 Bitcoin. That assumes today's cost basis, which you could do whatever you want with, sell it for CapEx, do whatever you need. And we have no counterparty or credit risk because this is a fully collateralized loan. We have all 100 Bitcoin of yours. And so if our counterparty does go bankrupt or disappear tomorrow or next month or in 6 months, it doesn't really matter to us because it's fully collateralized and we have all 100 Bitcoin of yours and you only have 96.5 of ours. So what do we accomplish? Well, we get 3.5% yield in Bitcoin denominated terms upfront with no counterparty or credit risk. We pass on 2% to our policyholders and we keep 1.5% for ourselves. That's how Meanwhile makes money. And so we're not lending it out to Three Arrows Capital, BlockFi. We're very, very conservative with how we get yield. And this is a pretty sustainable and clever way of doing it without risk.
Awesome. So on the screen at LeboBTC is where people can maybe reach out to you or follow along on X. Meanwhile.bm is the website. I'll throw it over to you. Any closing thoughts, or if we've just blatantly missed something, maybe cover that too.
Yeah, no, it's a really cool company. We just announced 2 weeks ago that we raised $82 million from Apollo, from Bain, from Han Ventures, Pantera. Earlier this year, we raised from Framework, Fulgur, Wences Cesares. We also have Sam Altman and Northwestern Mutual on our cap table. So we have some pretty big names behind us. We've raised about 140 million to date, a little over. And there's a lot of excitement. Right now, we operate in the US and Canada. Soon we'll be in Hong Kong and Singapore. We're going global. We're getting a credit rating soon. We're doing a lot of things to be the adults in the room in the crypto economy, in the Bitcoin economy, because there's a sore need for that. There's a sore need for trusted professionals to custody and manage your assets, grow your assets, allow them to outlive you and go on to your family. And with all those tax advantages, in our products, 2% yield every year for your life, tax-free monetization, the ability to sell tax-free through policy loans and pass on your Bitcoin to your family tax-free is a pretty powerful set of tools that you get in one product.
Awesome. Jason, thanks for your time today. Appreciate you joining us.
Thanks, Tim.
Thanks. All right, we're going to bring Ed Julien back to the stage. Ed?
You guilted me into it, Tim.
Oh my goodness. 2 guys in orange ties.
I know. I had to match it up with the flannel too, which is probably sacrilege, but I'll do it for you.
It's quite the colorful look.
I know it's probably breaking all the video trying to get all these lines and colors, but oh well. Well, cool. That was pretty amazing. Some of the comments that we had on Jason were, detailed explanation was great, super cool, great guest. This is so interesting. So, Meanwhile.bm, one of our great sponsors on this event, and check it out. It's not for everybody, but it took me a few calls before I understood it, and it's pretty legit. I mean, there is really no true counterparty risk. It's a great way for people that are borrowing money to, get out of their low cost basis Bitcoin, and then also to find a good way to give your Bitcoin to your heirs. So great product.
Yeah. And also shout out to AWS. They're not a sponsor, but just the fact that they have their web servers up so we can do this today is much appreciated, right?
Yeah. Yesterday, this would have sucked.
Yeah, no, I logged in yesterday afternoon to start setting this up, and I got the message. I didn't screenshot it to you, but I did take a picture with my phone. I'm like, I'm so glad this was not a Monday thing. We might have had to reschedule. Should we bring our friend from Mad Bitcoin up to the stage?
Let's bring Aldana.
Okay, Aldana. She's here. Hello, Aldana.
Hello, everyone. How are you?
Very
Buenas
well.
noches.
Buenas noches. Sí, buenas noches. Here already, buenas noches.
Awesome. Well, we have an announcement to make, which is kind of leaked out a little bit, but we want to make it completely official here. You go ahead and do it, Aldana. You take the honors.
Thank you. First of all, thank you so much for having me. Thank you so much for your trust. So the announcement is we are organizing together the first Bitcoin only international conference, which will be called Mad Bitcoin Summit in Madrid next year from 9 to 12 of May. We have now already 25 speakers confirmed, among them like Bradley Duke from Bitwise. We've got Andrew Wembley from the Smart Web Company that I think will be here today also with us. The event focuses on the corporate Bitcoin ecosystem, bringing together Bitcoin treasury companies, financial institutions that are exploring the Bitcoin space, and also the energy sector that is still looking for some solution for the Bitcoin mining. And our goal is to unite businesses, investors, institutions, regulators, foster new ecosystem centered around Bitcoin in Spain. I had this idea last year when I spoke with a lot of my friends, with a lot of my colleagues. Some of them still don't know who Michael Saylor is. I was really worried that the knowledge and everything that's going on in the Bitcoin space in the world is not coming to Spain. So I decided to make up my own My Bitcoin podcast. And then I saw, well, that's not enough. We have to spread the word. Then I met Ed and Tim. They saw what I was doing, and we decided to bring our forces together. The website madbitcoinsummit.com is already up and running. You can
What was
visit
that website?
madbitcoinsummit.com.
All right.
All right. We are expecting up to 1,500 attendees. No such event, as I said, currently exists in this region in Spain. And as you know, Spain serves as the great bridge between Europe, between LATAM, between the US. So we're going to bring the brightest minds in the Bitcoin ecosystem, and I'm having the best team I could dreamt of. Ed and team will gonna be organizing everything with me. So thank you guys for your trust again. Thank you for being with me. And I hope everyone here that are listening to us will visit our site, will start buying ticket, and will start to spread the word. Thank you very much, guys.
Yeah, beautiful. No, I first got the call from Aldana through another connection, and she wanted just some tips on how to run a good conference after we had run our New York event. And it was about a 2.5 hour call. and then I went back to Tim, and I'm like, that hole in our schedule in May, I think I might have found a way. And so we're going to co-produce this with Aldana and her team there in Madrid. If you have not been to Madrid, you should just go to Madrid. It will be on a Monday, Tuesday, but on Saturday, Sunday before, Aldana's got all kinds of cool side activities planned, including a Real Madrid-Barcelona match, which isn't in Madrid, but we'll find a way to watch it in Madrid on a big screen or something. And if you haven't been to a Real Madrid-Barcelona match, even watching on a big screen in Spain will be amazing. I've been to Spain dozens of times, never had a bad meal. You look and look for a bad meal in Madrid and in Spain, and you just can't find it. Some of the most amazing wines in the world. The venue itself is just outstanding. It's an auditorium type seating, so it'll be really comfortable to watch all the great speakers we're going to get in there. We haven't had a speaker we've reached out to yet that has even hesitated, so expect some big names coming. madbitcoinsummit.com, and you can use coupon code KOTZ, KOTZ, which is a shortened version of Kotzman's last name, just the KOTZ. And that'll give you 10% off on tickets. The GA tickets are pretty cheap right now, like all, and the VIP tickets. Like all Bitcoin events do lately, the prices will continue to go up and up. We fully expect to cap out at the 1,500, and the room won't let us hold anymore. So if you're thinking about a early summer, late spring trip to Madrid, get your tickets for the event, get your hotel, get your flight. This is going to be a great corporate event, and Tim and I are going to bring our flavor of Bitcoin treasuries. This is choking me. Hold on. God, yeah. Sorry. Okay. The wrong shirt for the tie. It doesn't have enough neck. Anyway, so it's going to be a fantastic event and fantastic food. Aldana is just so passionate about this space. We're really looking forward to this event. We want to see you all there. Put it on your calendar, and then you can take your summer off and come back to our big Bitcoin Treasuries Unconference, New York City in September. It's going to be a great year for Bitcoin Treasuries Media, but we're thrilled to be able to contribute and co-produce this with Aldana.
Absolutely. Follow us on @MattBitcoin_ on X, and also @MattBitcoin on LinkedIn, or just Google @MattBitcoin, and you're gonna already find the website. So just follow us. You're gonna see the new announcement of the new speakers, and we really are very excited to have you all there.
Yeah, and if you don't have your full 40 hours per week of podcasts, Aldana's podcast, Mad Bitcoin, is a fantastic addition to the lineup. Tim and I just did an episode a few weeks ago that was a lot of fun. Tim, you been to Madrid?
I have not. MadBitcoinSummit.com. I'm going to be there.
Yeah, you just went to Portugal, but Madrid's one of the most amazing cities in the world. So it's going to be a fantastic event that we're going to put on.
Yes, absolutely. Thank you so much, guys, and see you all there. Thank you very much.
Yes.
Thank you, Aldana.
Thank you.
Go to break for a couple of minutes, Tim, before the next guest.
Yeah. Stay right there. We'll be back in just a few minutes with CJ Jane from Strategy. Welcome to the Bitcoin Treasuries Digital Conference for October 21st, 2025. Bitcoin custody is evolving, and OnRamp leads this change with multi-institution custody, eliminating single points of failure. Instead of one institution or complex private keys, OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault backed by 3 independent, institutional-grade custodians. No single custodian can move funds by themselves, providing an unprecedented level of security that traditional custody solutions simply can't match. Protected by a $100 million Lloyd's of London insurance policy, all transactions are fully auditable on-chain, never rehypothecated, and executed only at your explicit direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp delivers comprehensive Bitcoin financial services, including lending, trading, inheritance planning, IRAs, and more. OnRamp functions as your private banking partner, coordinating key holder activity, removing technical burdens, and providing a personalized, trust-minimized experience tailored to your specific wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps secure generational wealth with unmatched security and peace of mind. Visit onrampbitcoin.com today to learn more, sign up, or book a free consultation with their team of Bitcoin custody experts.
Everyone should be able to save and protect their wealth across generations. We built this company so billions of people around the world can take control of their financial lives. We've reimagined savings and protection from the ground up with digital money and modern technology. We're the world's first Bitcoin life insurer. For the first time, people can save, protect, and pass on their wealth entirely in Bitcoin. 4 years ago, we started working directly with individuals. Today, as the Bitcoin economy has grown, some of the world's largest and most conservative institutions are joining us in our vision. Every economy is built on patient, long-term capital. Bitcoin is the foundation of the next phase of global finance. We're not just building a Bitcoin company. Meanwhile is the backbone of how everyone will save in the future.
Cadena Bitcoin is a decentralized, peer-to-peer Bitcoin borrowing and lending marketplace. Lenders in this market are looking for a fixed fiat yield, while borrowers are looking for leveraged Bitcoin exposure. Cadena is building Bitcoin native financial services to power the Bitcoin economy with self-sovereign financial tools that do not require giving up custody of your Bitcoin. Because as Satoshi said, The main benefit is lost if a trusted third party is still required. Learn more at cadenabitcoin.com. Bitcoin Treasury adoption just exploded past $84 billion, with 15 new companies jumping in this month alone. While your competitors stack Bitcoin, are you still watching from the sidelines? The question isn't if anymore, it's how fast can you catch up? Satoshi Institute pioneered the professional infrastructure that institutional treasurers can trust. Live simulation platforms, battle-tested risk frameworks, and the market's only Bitcoin Treasury performance indexes that track 800,000 plus Bitcoin holdings. Are you ready to join the Bitcoin Treasury revolution? Get your free strategic assessment at satoshiinstitute.com. Satoshi Institute is where billion-dollar Bitcoin treasuries begin. Check them out online at satoshiinstitute.com. The Bitcoin Treasuries digital conference is sponsored by Belgravia Hartford. Belgravia Hartford is revolutionizing corporate finance with cutting-edge Bitcoin Treasury strategies tailored for Canada's dynamic markets. Welcome to the Bitcoin Treasuries digital conference for October 21st, 2025. All right, welcome back to the Bitcoin Treasuries Digital Conference. I am excited to welcome up to this stage CJ from Strategy. CJ, good afternoon. How are you?
Hey, good afternoon, Tim. I'm doing well. Thank you so much for having me.
Absolutely.
How is it going so far? It's a long day for you?
Only a couple hours, only 6 hours this time.
Yeah, that's interesting. 6 hours is short for you, but this is a very nice format. And I know you've received a lot of praise for everything you've been doing in the Bitcoin community. But I wanted to say thank you again, on behalf of everyone at Strategy for everything you've done. And I think this virtual format is really good as well. And I hope you keep cranking them out as the months and quarters go by.
Absolutely. That's definitely the plan. So thank you. For those that are not familiar, can you tell us a little bit about your personal and professional background on your journey to Bitcoin and strategy?
Sure. So I am currently a manager in the Bitcoin Treasury team at Strategy. So effectively working on all things related to Bitcoin across capital markets, investor relations, treasury management, and Bitcoin advocacy. And I've been here in the team for about a year and a half now. I was doing it as an internship for the first 12 months, starting last summer. And then I continued during the second year of my MBA program up until May of this year when I joined full time. So I was doing an MBA program in Boston at Harvard Business School for 2 years. Prior to that, I was working in private equity at Blackstone in India, focusing on leveraged buyouts in the tech space and automobile space. And during that 4-year stint in private equity is when I stumbled upon Bitcoin, crypto, a lot of Bitcoin versus crypto debates online, listening to a lot of Michael Saylor on podcasts and TV interviews, fell down that rabbit hole, became obsessed with Bitcoin, and came to the US to do my MBA. Was fully focused on getting a Bitcoin job, got super lucky, I would say, and landed here. So dream job at my dream company, really loving life right now.
Living the dream, not a bad deal for starting out. And yeah, there's so many exciting things happening in the space that just a really cool time. I appreciate that background. Maybe let's cover, like, Strategy has obviously created a new asset class, like Bitcoin backed credit. Can you dive into that, especially since it's like literally this year 2025 that it kind of came to market?
Yeah, sure. I think what will help is to just give some background as well as to what were we doing before getting here in 2025.
Mm-hmm.
So we started the Bitcoin strategy in 2020 when Strategy had about $500 million of cash on the balance sheet and put most of it into Bitcoin, almost out of desperation. And then opportunistically issued some debt, some convertible debt, senior secured debt, a Bitcoin-backed loan, and kind of took leverage to buy Bitcoin. And then I think the management team, the board realized that that is working out really well in the benefit of common shareholders. And it kind of went from being something that was happening opportunistically to becoming like our strategy: issue intelligent leverage, buy more Bitcoin, and allow the common stock to outperform Bitcoin over the long term. And that's what the company did for about 4 years. And then we realized, there are some drawbacks in the convertible debt strategy that we were focusing on, primarily around there being a maturity wall and maturity risk when the convertible debt comes due, and the fact that it was not accessible to a broad base of investors. It's only accessible to institutional investors. So that's when we pivoted from convertible debt to preferred equity, which still kind of adds leverage to the balance sheet and gives amplification to the common stock, but doesn't have the drawbacks of the convertible debt. And that's what we frame as digital credit. So what we've done in 2025 is we've issued four of these different preferred equity securities that are all effectively backed by Bitcoin on our balance sheet. And they all kind of appeal to different sets of investors with different risk reward profiles. So the first one was Strike, STRK, which is our convertible perpetual preferred stock. It offers 8% dividend, and it's convertible into MSTR common stock at a 1:10 ratio. So it's effectively offering part of that equity upside through MSTR conversion, but also that 8% fixed income stream and the downside protection that comes with a preferred stock. Then we did Strife and Stride, that are two different preferred stocks that offer 10% fixed dividend at par. Strife comes with some senior governance rights and payment protections, is the senior most preferred stock. So we've really kind of designed it to compete with investment grade bonds, whereas Stride mirrors Strife but doesn't have those governance rights, doesn't have the payment protections, doesn't have cumulative dividends. So it's more of a high yield junk bond like um, competitor. And then the latest one in our iteration of digital credit is Stretch, STRC, which was the largest IPO that we had this year at $2.5 billion, actually the largest across the US capital markets, common stock and preferred stock both included, which is a variable rate preferred stock. We did the IPO with a 9% dividend rate. We've upped it in the last 3 months to 10.25% now. So every month, at the end of the month, we make a decision on what to do with the rate for the next month. And it's really designed to have stable price dynamics. So we can use the dividend rate as a lever to encourage price stability near $100. And in effect, what that means is Stretch kind of mimics the features of a bank account or a money market fund, where you have price stability and a monthly fixed income stream. But it's a security, so it comes with the risks of a security while it's listed on NASDAQ, and you can just buy it on any brokerage account. So, that's broadly what we've done with digital credit, trying to, create credit instruments backed by Bitcoin, with the benefits of Bitcoin being sliced and diced in different risk reward sort of structures.
You mentioned a few of the details, but could you go pref by pref as far as what market they're really targeting? Because I think that might be helpful, at least for me, just trying to tag along here.
Yeah, I think let me start with the one that we believe is the most well suited for retail investors, which is the latest one, Stretch, STRC.
Mhm.
So what it's really done is it's stripped away all the volatility that exists in Bitcoin and also the other preferred stocks. Bitcoin itself is volatile, and the preferred stocks, the other preferred stocks, and most of different credit instruments in the world, corporate bonds or treasury bonds, have interest rate risk. So if the Federal Reserve moves the interest rate around, the price of that credit instrument also moves, and it has some volatility in it. What we've tried to do is we've tried to strip that away as well and make it more like a stable price instrument. So if you just want some short-term savings, if you want to have a regular treasury as an individual, as a corporate, as an institution, cash for the next 3 months, or the next 6 months, for the next 12 months, or if you're a retiree, uh, a pensioner who doesn't like volatility in their portfolio, then Stretches for you. So it offers a 10.25% yield today, and it's listed on NASDAQ like all the other prefs. So you can just go and buy it on Robinhood, on any other brokerage. So that's Stretch. It's like the short duration, short term savings like security. And Strife and Stride are
Welcome to the Bitcoin Treasuries Digital Conference for October.
Sorry.
Apologize.
No worries at all. So yeah, Strife and Stride, I think they're meant for, Strife is for the person who wants institutional grade collateral coverage, is a senior most preferred stock, wants that 10% fixed income stream, and is a bit more risk averse. So they want those payment protections, they want the governance rights, and they don't want to trust the management team of the company to as much extent as the Stride investor perhaps has to, because Stride is then the junior most preferred on the balance sheet, and it doesn't have those governance rights, doesn't have the payment protections, it doesn't have the cumulative nature of dividends. So it's just meant for someone who would be buying a junk bond in their portfolio, and again wants that high yield. It currently offers about 12 or 13% effective yield. And Strike, the first one that we issued in the year, is what we like to describe as structured Bitcoin. It's meant for someone who would be investing in, let's say, real estate or hedge funds or even the S&P index or the Nasdaq index, that wants capital appreciation, wants equity upside, but also wants that fixed income stream. And that's what you're getting with Strike. So it's giving you kind of the upside benefit of Bitcoin through that conversion into MSTR common stock. It's also giving that fixed income stream, and it's giving you the downside protection. It's what we like to describe as a fellowship in Bitcoin. You are getting paid while you're learning about Bitcoin and the crypto markets.
Got it. How do you kind of think through where strategy is positioned when we're talking about long-term dominance? I mean, it seems like strategy is so far ahead as far as the amount of Bitcoin on the balance sheet, and just the entire journey. How do you think about that and communicate it when you're having conversations?
Sure. I think, even before I joined strategy, I was very convinced that this business model is built for something that's intergenerational and will last 100 years and beyond, and will really become a dominant sort of business empire. The basic idea is that Bitcoin is digital capital. We hold about 640,000 Bitcoin, worth about $70 billion right now. Bitcoin is appreciating at about 50% per year on average for the last 5 years. As Bitcoin maximalists, we all believe it will continue appreciating in the future. And we could have different sort of expectations on what that appreciation will be, but I think we tend to agree that adoption will continue and demand will outstrip the natural supply from mining. So Bitcoin will appreciate 20, 30, 40% into the future for 10, 20, 30 years. And really what strategy is doing right now is it's creating like this digital credit factory where we are taking digital capital, that's Bitcoin, on a balance sheet, and we're doing the financial engineering around it and creating these digital credit instruments that are stripping away the performance, volatility, and risk in Bitcoin, and creating these instruments that are still much better than other traditional credit instruments. And they're giving that extra volatility, extra performance to MSTR, the common stock, which is then outperforming all the other large cap stocks in the US. And I think this will continue into the future. It's a business model that works really, really well. And I think we've found that sweet spot of the leverage or amplification we like using through the preferred equity. So I think this continues in the future. Strategy grows bigger and bigger. We continue to issue more equity, more fixed income, buy more Bitcoin that continues to appreciate at 30% per year. We've gone from being among the top 2,000 largest companies in the US to now close to like top 100, top 150. As this continues in the future, I would anticipate we become amongst the top 50, top 20, eventually the top 10. Our treasury, in terms of the size, is about the fifth largest in the US. The largest is Berkshire Hathaway at about $350 billion. I think soon enough we'll catch up to being number 2 behind Berkshire Hathaway, and hopefully, also catch up and outpace them. So we're building on Bitcoin, which is something that's going to last for the next 100, 500,000 years. And because of that, we're building a business that's built to last for 100, 500,000 years. And we also have this really strong first mover advantage where we started in 2020. We hold over 600,000 Bitcoin now, which is 10x the largest next competitor. But we also continue to benefit from the network effects of corporate adoption of Bitcoin. So as every new participant and individual or corporate enters the Bitcoin world, puts their long-term savings, long-term energy into Bitcoin, we kind of also benefit from that. So I think that's how we view our role in the space and how we anticipate to continue sort of dominating or at least pioneering what's happening in the Bitcoin space.
Got it. Can you walk us through where these preferreds are listed, especially the addition of Robinhood, and maybe what that means for the company, for the ecosystem?
Sure. So I think, as I mentioned earlier, all four preferreds are listed on NASDAQ. Their tickers are STRC for Stretch, STRF for Strife, STRD for Stride, STRK for Strike. So you can just type in these four letters on any brokerage account. So almost all of them have these preferreds listed. And it's obviously a big priority for us to also open up additional distribution through other brokerages that might be smaller, that might be a bit more niche, that don't have preferred stocks listed today. Robinhood, obviously, it's not small or niche, but they did not have preferred stocks listed up until last month, 2 months ago. So, we worked with them, advocated for having them listed, showed them the data, and communicated why it would be in the best interest for their customers and their clients. And it was great to see that they kind of took that step, listed all the four preferreds. So, obviously, in our generation, Gen Z, millennials, a lot of people use Robinhood. It's a great app, great platform. So, you can just download the Robinhood app, buy the stock there, the preferred stock over there if you wanted to. But that's broadly the idea that given it's an SEC registered preferred stock that's listed on NASDAQ, it's almost every other brokerage platform that has it listed. It's as simple as buying or selling Apple stock or Google stock or Microsoft stock.
Got it. Great. How do you think through the S&P 500 index from an inclusion standpoint, and maybe that process, which maybe at least a little bit of a process?
Yeah, sure. I think for a long time, a lot of people have been anticipating the S&P 500 index inclusion as a big catalyst for all the new incremental demand that would come into the stock through the passive index inflows. And again, as you know, and many of your listeners may know, Strategy's been eligible for inclusion since the last quarter. But historically, the committee at S&P that decides the inclusion or exclusion of different companies can use their full discretion in figuring out what they want to do. And they have not necessarily included every company in the first quarter of eligibility. Tesla being a famous example from about 5 or 6 years ago now. So I think something similar seems to be playing out for Strategy right now. As someone working at the company or even the management team at the company, we really have no inside knowledge or insight into that exact process or when they make a decision. We kind of learn as the market learns and as they communicate it to the market. So it's really up to understanding how the committee wants to move forward, and the only way to understand it is by seeing their announcement every quarter. And I think they'll make the next announcement in the first week of December. And the positive news, at least over there, is that they seem to have warmed up to crypto. They've included Robinhood and Coinbase and Block in the recent quarters into the index, the S&P 500 index. So it's not as if they view crypto as or Bitcoin as something that's really bad or they don't have an allergic reaction to it. So I think we just need to wait and watch. As someone in the company and for the company, we just need to continue executing on our strategy. And hopefully, with time, they will see that the strategy is working well and it's in the best interest for the people holding the S&P 500 index to have Strategy in the index. We were included in the NASDAQ 100 index last year. And, the longer that the S&P 500 index doesn't include us and the NASDAQ 100 does have us and maybe eventually has other Bitcoin treasury companies, there would start being like this discrepancy in the performance of the two indices. And the S&P 500 wouldn't want to be left behind. So I think it's more of a matter of when it happens, not if it happens, but just got to sit tight and wait and watch for now.
Awesome. And anything that you can share or any details on where we can watch the Q3 earnings call that's coming up, I believe, October 30th.
Yeah, so the Q3 earnings call, just like last quarter, will be live streamed on our X handle at Strategy, our YouTube channel, and also the Zoom webinar. So all the details can be found on our investor relations webpage, and you can register there. It's starting at 5 p.m. if I remember the time correctly, on October 30th. We had this really interesting Q&A format last quarter, where we had some Bitcoin analysts and equity research analysts from Wall Street join us and directly ask Michael, Fong, Andrew some unscripted questions. A lot of tough questions were asked. A lot of people seem to have really enjoyed that. So we'll probably recreate that this quarter as well, trying to get some interesting folks to join the call again. And yeah, I think we'll provide a great update on everything we've done in the last quarter and what the focus areas and priorities are in the next quarter and 2026 as well. So the next earnings call is always the most important earnings call. And, for me personally and for the rest of the team, it means it's a super busy week this week and next week, grinding it out on, everything related to the earnings call. But we're all excited. It's going to be a great one.
Awesome. And you've had some big news recently. You had a name change on X. You want to tell everyone where they can find you on X these days?
Yeah, it was tough to pronounce earlier for most folks. My first name, which is Chaitanya, and that was my handle as well. But now I've rebranded that to CJ underscore Bitcoin, and that's my Twitter handle where everyone can find me. So easier to spell, easier to remember, and just stays in spirit with the whole MicroStrategy to strategy rebrand as well. But yeah, you can find me on Twitter, CJ underscore Bitcoin.
Awesome. CJ, thanks so much for your time and for joining us on the digital conference today. Super appreciate it.
Thanks a lot, Tim. Hope you have a great rest of your conference, and I'll speak to you soon. Thank you so much.
Okay. Thank you. All right, we're going to keep the conference going, and welcome to the stage, Adrian Pruitt. Adrian, founder of One Big Party. How's it going?
Tim, thank you so much for having me. This is awesome. This is number 3, I think.
Wow. You're just, you're on a roll.
I'm batting 100 here for the digital conferences.
So much to cover. We were just out at Bitcoin Alpha together in Santa Monica. What were your takeaways from that? From networking, sentiment, learnings, Alpha? Did it have the right name?
It absolutely had the right name. It's just one of those events. I mean, you have to be there, literally, because it's the Chapman House rules, and there's no cameras, and barely any pictures emerged. So, but all joking aside, it's just the collection of just the smartest high signal group of people that I think I've ever really been around in real life in this space, particularly. And I'm from LA, and I've been in LA for 20 years. And oddly enough, there are like little pockets of Bitcoiners and little Bitcoin meetups and hangouts, but getting a chance to sort of meet everybody at one time in one room, it's such a inspiring environment, was really refreshing, and I made some new friends and saw some old friends, and I just can't say enough good things. I mean, Fred and Bed and Tim, they just do such a remarkable sort of I think like a high taste level, like they just set the bar so high for the rest of us, and so we all just have to kind of like keep pace, and that's what we need. I think we really need that. We have to kind of keep pushing ourselves and challenging us as a community to keep growing and keep trying to better ourselves and not just fall into the same patterns of doing things the same way.
That makes sense. For those that might not be familiar, can you walk us through a little bit of your background and kind of how that led into what you're currently working on as far as projects?
Absolutely, yeah. I was basically just like a lower middle class kid from South Florida. Decided I wanted to work in movies, and which came as a bit of a shock to my family because we didn't even know anybody west of the Mississippi. But I just did it, and started at the bottom and really just grounded out for many years, trying to prove myself eventually kind of found my way in and stuck with it. And so over 25 years, I managed to work on over 150 television shows, a couple dozen films, dozens of commercials. And, as my career kind of, started to sort of pick up traction and pick up steam, I started to find myself asking that question, like, does my work fulfill me? Am I finding a sense of purpose? And what else is out there? As a content landscape really evolved very dramatically over the last 5 years, it just seemed like there's a real opportunity to start trying to like break new ground someplace. After 20 years of television, you kind of just see it all. You've kind of done everything, so to speak, in some ways, at least for where I was at the time. And I think, Bitcoin really didn't become a huge part of my life until after COVID. But, once it did, I realized like this is a real calling, and this is really something that I want to find a way to participate in a deeper level. I felt like there was some way to combine my passion and my profession, my craft, all together. So I've been on that journey for the last few years, and just kind of planting my flag in different places and trying different things to see what's going to take, and ultimately, I think it wasn't really until you and Ed kind of took a big shot on me to have me come in and produce the Unconference that I had a chance to really sort of make a splash. It's my first time doing a live event, a live conference of any kind of like scale, and it was just awesome. The whole experience was amazing. It felt like I was, building a place, kind of like tapping into community, putting together some really interesting, unique little nook of the world for like-minded people to come together who were like me and wanted to share things that I wanted to share and have the conversations I wanted to have. And I'm like, we got to just kind of keep finding ways of doing this. Alongside that, I've been working on a documentary this year about the rise of the Bitcoin Treasury sort of movement through the eyes of strategy and community investors. Michael Saylor's story, and been kind of building that at the same time. We've been filming since May and plan on filming that well into the future. And then kind of the last thing I've been doing is started a bit of like a digital agency to help some treasury companies with their marketing, their advertising, their brand storytelling, and figure out how to communicate, who they are to investors and to the world at large. I just think there's a massively untapped pool of people who maybe are like Bitcoin skeptical that we can help. We can actually tell better stories. We can communicate in really interesting, fun ways and pull these people in, old, young, everyone in the middle. So it's really exciting. I mean, it's just so much opportunity here,
Talk a little bit, if you could, about storytelling and about what the marketplace is kind of used to in Bitcoin, which is maybe podcasts, whether it's homegrown or more professional studio. Maybe it's like explainer videos or Bitcoin maximalists telling people to stay poor. But like maybe outside of a couple of memes, not that much entertainment or humor, although obviously on X you can find humor here and there.
I could probably talk for about 2 hours uninterrupted about this whole thing. So I'll find a way to truncate it as best I can. I think that for me, my journey of storytelling has really taken me down the road of trying to excavate like the core of story to me, and this is just why it's important to me. And I think the easiest way to define story to me is like, the purpose of story is transformation. I believe it's to inspire us to transform. It's to allow us that ability to reach towards that transformation that we want to have in our lives. And that is an incredibly powerful thing, right? I just don't think there's anything greater than transformation. So, the act of telling story, participating in story, sharing story, I just think it's such a high calling, and in a world of content, sometimes the role of story gets a little bit lost, in the attention economy, and everybody's kind of like grabbing for eyeballs and building a network and building their own platform up. Sometimes like the purpose of why we tell these stories can get a little bit muddied or a little bit lost. And so I hold on to that. I really hold on to that story. To me, there's no higher calling, and so I'm proud to kind of dedicate myself to that. And there have been so many incredible books and documentaries and films and different pieces of work done, in and around Bitcoin, and work that we just constantly revisit, and I don't even want to mention too many because I feel like I would have to cherry pick, but there are certainly books that we, when we want to share with our family members, we want to share with people, we say, okay, you need to read this book. You need to check out this podcast. For me, for instance, one of the podcasts that had a huge effect on me was, the Michael Saylor, What is Money podcast. And that, like, 10 hours really took me through the journey that I needed to go on in order to start coming around to, okay, what is Bitcoin, and what role does it play? So we all have these experiences of tapping into this and wanting to, share things and create things. There are different buckets. There's sort of like the world of Bitcoin and Bitcoin centric, Bitcoin curious people that are already here on the road with us and the journey with us, and that's really awesome. And we want to contribute to those people. We want to keep building, and I think the sort of bucket that I think I can help build and contribute is the world of the people that are maybe Bitcoin skeptical, and that's a lot of my work over the last 10 years has been for platforms like Disney and Fox and NBC and ABC, and we would call them flyover states, in this sort of like in the spirit of you're not in the coasts, then you're sort of traveling over, looking down. But that is a huge audience, and that's where a lot of my family grew up. That's where a lot of the people I care about grew up, and I look at them and go, man, we should really work to talk to them, to speak to them. And so that sometimes means meeting them where they stand, having a lot of empathy, not trying to create an us versus them scenario, but say, okay, what are you concerned with? Why are you Bitcoin skeptical? What about all of this great documentaries, all of this great book? What are the things that are kind of missing from the conversation for you, and listening to them, and then starting to craft work that they can really tap into, that sort of works around a lot of their fears. And the other part of this, I think, is building a better support system. We really, and this is some of the great conversations I had at Alpha, was like, how do we build a better team around the work that we're creating to make sure that it doesn't, die on the vine, so to speak. If you make a film, you spend years and years of your life making this documentary, and all of a sudden it doesn't get picked up by Netflix, and it's not on the cover. It doesn't get, picked up by a major distribution company. How do we make sure that it still finds a way in front of people, and so that's building, I think, a better infrastructure around the work that's being created, pulling tastemakers together, pulling influential people, and saying, hey, like, let's all find a way to support the artists and the storytellers in this space, because there's nothing that shouldn't be done. Everything ranging from a constant outflow of high quality TikToks and 10-second, 5-second meme type work, all the way through the gamut of $50 million films, $100 million films that everyone in the world is talking about and looking at. And yeah, I think that to me is the biggest challenge, and the thing that is the most exciting about Bitcoin right now. It's just the opportunities are limitless. The community is so passionate and so intelligent. There's nothing we can't solve and figure out together.
Where can anyone interested, whether it's a treasury company or just literally anyone in the Bitcoin space, kind of where's the best place to reach you and One Big Party?
Absolutely. Yeah, we have a website. It's just onebigparty.co. I'm also on X all the time at Los Angeles Hodl. And you can just email me, Adrian at onebigparty.co, and yeah, would love to talk to everybody and anyone. This is such a joy, just kind of meeting new people and growing this community and being part of it. And I can't thank you enough for having me on, Tim.
Absolutely. Our backgrounds look so similar that it almost looks like we're in the same room.
I like that.
Like high five. High five. Thank you so much for your time today, Adrian. Super appreciate it.
Tim, thank you. Thanks, Ed. Bye, guys.
Stay right there. We'll be back in just a minute with our next guest on the Bitcoin Treasuries Digital Conference. Welcome to the Bitcoin Treasuries Digital Conference for October 21st, 2025. Bitcoin custody is evolving, and OnRamp leads this change with multi-institution custody, eliminating single points of failure. Instead of one institution or complex private keys, OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault backed by 3 independent, institutional-grade custodians. No single custodian can move funds by themselves, providing an unprecedented level of security that traditional custody solutions simply can't match. Protected by a $100 million Lloyd's of London insurance policy, all transactions are fully auditable on-chain, never rehypothecated, and executed only at your explicit direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp delivers comprehensive Bitcoin financial services, including lending, trading, inheritance planning, IRAs, and more. OnRamp functions as your private banking partner, coordinating key holder activity, removing technical burdens, and providing a personalized, trust-minimized experience tailored to your specific wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps secure generational wealth with unmatched security and peace of mind. Visit onrampbitcoin.com today to learn more, sign up, or book a free consultation with their team of Bitcoin custody experts.
Everyone should be able to save and protect their wealth across generations. We built this company so billions of people around the world can take control of their financial lives. We've reimagined savings and protection from the ground up with digital money and modern technology. We're the world's first Bitcoin life insurer. For the first time, people can save, protect, and pass on their wealth entirely in Bitcoin. 4 years ago, we started working directly with individuals. Today, as the Bitcoin economy has grown, some of the world's largest and most conservative institutions are joining us in our vision. Every economy is built on patient, long-term capital. Bitcoin is the foundation of the next phase of global finance. We're not just building a Bitcoin company. Meanwhile is the backbone of how everyone will save in the future.
Kadena Bitcoin is a decentralized, peer-to-peer Bitcoin borrowing and lending marketplace. Lenders in this market are looking for a fixed fiat yield, while borrowers are looking for leveraged Bitcoin exposure. Kadena is building Bitcoin native financial services to power the Bitcoin economy with self-sovereign financial tools that do not require giving up custody of your Bitcoin, because as Satoshi said, the main benefit is lost if a trusted third party is still required. Learn more at kadenabitcoin.com. Bitcoin Treasury adoption just exploded past $84 billion, with 15 new companies jumping in this month alone. While your competitors stack Bitcoin, are you still watching from the sidelines? The question isn't if anymore, it's how fast can you catch up. Satoshi Institute pioneered the professional infrastructure that institutional treasurers can trust. Live simulation platforms, battle-tested risk frameworks, and the market's only Bitcoin Treasury performance indexes that track 800,000 plus Bitcoin holdings. Are you ready to join the Bitcoin Treasury revolution? Get your free strategic assessment at satoshiinstitute.com. Satoshi Institute is where billion-dollar Bitcoin treasuries begin. Check them out online at satoshiinstitute.com. The Bitcoin Treasuries Digital Conference is sponsored by Belgravia Hartford. Belgravia Hartford is revolutionizing corporate finance with cutting-edge Bitcoin treasury strategies tailored for Canada's dynamic markets. Welcome to the Bitcoin Treasuries Digital Conference for October 21st, 2025. Bitcoin custody is evolving, and OnRamp leads this change with multi-institution custody, eliminating single points of failure. Instead of one institution or complex private keys, OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault backed by 3 independent, institutional-grade custodians. No single custodian can move funds by themselves, providing an unprecedented level of security that traditional custody solutions simply can't match. Protected by a $100 million Lloyd's of London insurance policy, all transactions are fully auditable on-chain, never rehypothecated, and executed only at your explicit direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp delivers comprehensive Bitcoin financial services, including lending, trading, inheritance planning, IRAs, and more. OnRamp functions as your private banking partner, coordinating key holder activity, removing technical burdens, and providing a personalized, trust-minimized experience tailored to your specific wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps secure generational wealth with unmatched security and peace of mind. Visit onrampbitcoin.com today to learn more, sign up, or book a free consultation with their team of Bitcoin custody experts.
Everyone should be able to save and protect their wealth across generations. We built this company so billions of people around the world can take control of their financial lives. We've reimagined savings and protection from the ground up with digital money and modern technology. We're the world's first Bitcoin life insurer. For the first time, people can save, protect, and pass on their wealth entirely in Bitcoin. 4 years ago, we started working directly with individuals. Today, as the Bitcoin economy has grown, some of the world's largest and most conservative institutions are joining us in our vision. Every economy is built on patient, long-term capital. Bitcoin is the foundation of the next phase of global finance. We're not just building a Bitcoin company. Meanwhile is the backbone of how everyone will save in the future.
Kadena Bitcoin is a decentralized, peer-to-peer Bitcoin borrowing and lending marketplace. Lenders in this market are looking for a fixed fiat yield, while borrowers are looking for leveraged Bitcoin exposure. Kadena is building Bitcoin native financial services to power the Bitcoin economy with self-sovereign financial tools that do not require giving up custody of your Bitcoin, because as Satoshi said, the main benefit is lost if a trusted third party is still required. Learn more at kadenabitcoin.com. Bitcoin treasury adoption just exploded past $84 billion, with 15 new companies jumping in this month alone. While your competitors stack Bitcoin, are you still watching from the sidelines? The question isn't if anymore, it's how fast can you catch up. Satoshi Institute pioneered the professional infrastructure that institutional treasurers can trust. Live simulation platforms, battle-tested risk frameworks, and the market's only Bitcoin treasury performance indexes that track 800,000 plus Bitcoin holdings. Are you ready to join the Bitcoin treasury revolution? Get your free strategic assessment at satoshiinstitute.com. Satoshi Institute is where billion-dollar Bitcoin treasuries begin. Check them out online at satoshiinstitute.com. The Bitcoin Treasuries Digital Conference is sponsored by Belgravia Hartford. Belgravia Hartford is revolutionizing corporate finance with cutting-edge Bitcoin treasury strategies tailored for Canada's dynamic markets. Welcome back to the Bitcoin Treasuries Digital Conference. I'm excited to welcome to the stage Mr. Dylan LeClaire. Dylan, how are you, sir?
Tim, it's great to chat again. It's been a while since our first one.
Yeah, I think the audio is a little low. I'm just turning up my volume so I can hear you.
Okay, I'll speak louder.
Oh, that's great. For those unfamiliar with Dylan LeClaire and Metaplanet, do you mind giving a little bit of background, kind of your background and how you kind of found your way to Bitcoin and Metaplanet?
Yeah, well, to keep it short, stumbled down the Bitcoin rabbit hole as I was exploring finance, and left school early, went all in Bitcoin and Bitcoin education on my free time, and started writing research in the Bitcoin industry. And so, a few years down the line, it led to me joining a Japanese public company that was emulating MicroStrategy, now Strategy, and their Bitcoin reserve strategy. So that's where my time is spent now, is we're the leading Bitcoin treasury company in Japan, but also, ex-United States in the world. And we're sort of pushing the ball out on the other side of the Pacific. So it's been a fun ride, and excited to chat here.
Definitely. Can you kind of walk us through what the ultimate aspiration is for Metaplanet in Japan? Like, long-term business visions kind of aside from accumulation and Bitcoin yield and the stuff that we talk about, quite often.
Yeah, well, I mean, the number one kind of fiduciary corporate priority is obviously, growing shareholder value denominated in Bitcoin, and that's our focus, is providing maximum value on a Bitcoin standard to common shareholders. But kind of a second order vision, and I think we're familiar with this here, is we think Bitcoin's not just superior money, but it's going to revolutionize the capital markets. So we're really laser focused on channeling that revolutionary spirit into the equity markets, into the credit markets, fixed income. Outside of that, I think we also are really behind the scenes, putting a lot of thought, time, and energy into thinking about how we can be a leader in Bitcoin in the Japanese market for kind of everything else. So we have examined our stack. What's our normal business practices if we're raising capital or buying Bitcoin or executing our income business, and we thought really long and hard about, and as we've kind of gotten a lot of the passive and active inbound from other Japanese corporates or other Japanese institutions or retail, and sort of thinking about how we can maybe play a role here as not just a Bitcoin treasury company or a company that's kind of monetizing on a Bitcoin standard, capitalizing on a Bitcoin standard rather, but also one that, is kind of, if you think of like a neo financial institution built on Bitcoin, and kind of everything that would entail. So, it's still early days, but we, a common sort of trope in the Japanese market, especially for people that aren't Bitcoiners, is this company does nothing but just buy Bitcoin. And I think, the long arc of history will show, I think our vision is to be much more than just a company that buys Bitcoin. And we really want to be sort of a revolutionary player in the capital markets on this new asset. So it's still really early days for us. We've sort of just kind of ventured into one or two tools, and the operating business itself is still very simple, which is good. Investors love simplicity and an easy story, but I think we have a lot of things we're working on that we're excited about.
Awesome. Can you talk about how Metaplanet kind of approaches volatility in its operations? Like, how has the company's strategy maybe evolved over the last couple of quarters as a result of the volatility?
Yeah, well, I think the the good news for us at the helm is that we're Bitcoiners. So we've sort of seen a thing or two. I can only imagine kind of diving into the Bitcoin treasury kind of craze earlier in the year as an operator, and then facing severe volatility and it completely takes the wind out of your sails. For us, I think we're actually really undeterred by the volatility. Obviously, volatility in one direction is more favorable and more fun than volatility in the other direction, of course. But really, I think the business plan and the strategy and how we look at the day-to-day operations hasn't actually changed all that much in 12, 18 months. I mean, we've definitely learned a lot along the way, and we've cranked up our efficiency and effectiveness in various a lot of things we didn't know 12, 18 months ago that we do know, a lot of connections, a lot of investors that we know that we're kind of talking with on a pretty frequent basis. So in that sense, a lot of things have changed, but from the original vision, not all that much. We know that it's like a tool like common equity is really, really effective in certain conditions, and tools like non-dilutive debt financing are more effective and efficient in other conditions. So I don't think our outlook has changed all that much. We knew that there's going to be sort of an oscillation between hyper enthusiasm and then pessimism, and this isn't a company specific thing. This is just how markets work, how Bitcoin works, especially if you're capitalizing on Bitcoin. And so we've seen sort of everything, and the wide range of kind of outlooks from the in general investor community over the last 12 months. So I don't think all that much has changed. I think just a lot of perceptions have fluctuated wildly, but we're really undeterred. Our largest investors are really, really excited and happy with the future outlook of the business. And we're kind of looking forward to unlocking more tools in our arsenal to be more effective in all kind of life cycles of the business.
Got it. Can you walk us through how you think about, maybe you and Simon and the team think about the factors that inform Metaplanet's current capital structure and leverage ratio? Because you're currently very deleveraged, like maybe less than 1% leverage. Correct me if I'm wrong.
Yeah, that's correct. We've been very diligent and intentional with our capital structure. Among the feedback we've received from the global investor community is just how clean and exceptional our balance sheet is, and I think we've had a lot of offers and a lot of kind of things come across our desk over the last 12 months, stuff that would remain on the capital structure for, half a decade or longer. But we really want to keep our, max optionality open as we look towards the next phase, which we've communicated to the market is preferreds. So we have 2 classes of preferreds authorized. We'll share more when we can in terms of disclosures, but that's what the next phase of our business looks like. And I think we're optimizing for a really, really clean capital structure with maximum flexibility, because we think that could probably bring about the best terms. So anything senior to a preferred would take away collateralization and take away a bit of margin of safety. And we think that to optimize for the best financing terms, our current capital structure is the leverage is intentional. It's not that we're bearish Bitcoin or that we don't want to take on leverage in the balance sheet. The very intention of our business strategy is to be perpetually leveraged long Bitcoin, and we outlined that last May in 2024. We said our intention is to be levered long BTC and levered short fiat forever, and so that's very much the intention. But we're not going to take out bad debt. We don't want to take out anything that will cripple the shareholders or cripple the capital structure. So that's the intention. And, in due course, I think that leverage ratio will crank right up.
Strategy has publicly said that from a leverage standpoint, especially with preferreds, you could, leverage up more, to put it bluntly, like 20%, 30%, 40%, 50%. Is that too aggressive, or is that kind of something in there from a kind of zoom out industry perspective, something that makes sense when you are in the perpetual sort of market where it could make sense to put on more leverage intelligently?
Yeah, I think we definitely have an open mind. We originally, our sort of blank slate sort of target for max leverage ratio with preferreds is 25% of BTC NAV. But in our latest investor presentation, we established that we're working on a lot of different kind of ancillary business lines or arms of the business that we aim to generate revenue with. So we have our Bitcoin income generation business. We're looking to build out a sort of a multimedia, kind of all-in-one Bitcoin hub website called Bitcoin.jp in Japan, and a few other business lines that are under wraps right now that we're working on to generate revenue to pay more on preferred. So I think our intention is to ramp up the leverage ratio as much as we think is prudent, and we're not going to put ourselves in a box there. I think there's something to be said about this being in kind of a new phenomenon and instrument in the Japanese market. Our business model is very, very new and radical to some, the traditional investor community in Japan. So we're going to take it. We're moving as fast as we can. Compared to the traditional Japanese company, we're moving at light speed. We've called like 6 shareholder meetings in 18 months. Have done too many capital raises to count. And a lot of these things would take probably, everything we just did in the last 18 months probably takes a normal Japanese company 5 or 6 years. So we're working as fast as we can. But yeah, I think our intention is to get the market familiar and comfortable with these instruments as we roll them out, and then really hit it with max scale. So yeah, I think the leverage ratio is really, you could take it as high as you can go, as long as the dividend burden is something that the company can afford, internalize, and it's dependent on the yield and really the revenues or incomes of the business, as well as kind of the equity market liquidity. So yeah, we're keeping an open mind. We've obviously run a lot of models, but I don't think it's going to be a lot higher than the leverage ratio currently, which is about 70 basis points.
Awesome. What are your macro thoughts on Bitcoin this year? I mean, Bitcoin has kind of underperformed gold year to date. All sorts of headlines kind of swirling around about gold going on a run, and then now they're taking some profits. Maybe some of those profits are going into Bitcoin. 4-year halving cycle, is it now like the 4-month halving cycle, or what is going on?
Yeah, it's I think it sort of reminds me, obviously a very different market environment, but it sort of reminds me of 2020, where everything was running and tech stocks were running and macro assets are running, and Bitcoin is sort of just coiling for, it was obviously at 9,000, the high was 20,000. So it was like sort of the tail end of a couple year bear market. So different conditions, but I think that's kind of how I am looking at it. It's, from the on-chain perspective, like my old life as an on-chain analyst, there's been a lot of old long-term holder money that's kind of sold, right? So in one kind of the optimist in me is saying, well, it's pretty remarkable we're actually at 112,000 or whatever it is, just with the amount of kind of old OG coins that have been selling, right? So the ETFs, the treasury companies, other unknown actors are kind of gobbling up that whole supply. So I think eventually when we do break that high, we're going to really, really run. And for me, I'm not a big gold guy. I don't own really all that much gold at all, except for, the necklace around my neck. But I will say that, I view gold as sort of like the floor for the Bitcoin market, right? So, for a while we were saying 10 trillion and then 15, and now it's like 20, 25, 30 trillion, right? So that's sort of my bear case for Bitcoin. And I think that, the general investing community will, catch up to that view in due course. So yeah, I think it's good. It's definitely a bit ominous, to be frank, the gold run. I think it shows that a big debasement is coming, and countries, nations, big money in the know, not retail or even institutional, but sovereign level, regime change, macro regime change is coming, and that's what the gold market is telling me.
Awesome. Any closing thoughts, and where can people find you online if they're not already following you and Metaplanet?
No, yeah, I think just in closing thoughts, I appreciate you having me on. Appreciate people tuning in, Metaplanet investors, and thanks for all the support. We've, we've been a bit limited to what we can say and communicate publicly over the last month or two. So I would have liked to even share more, but so it's good to get out here though and have a chat. You can find me on Twitter, and I think sometime in the next month or two or three, or before year end, Tim will come in the studio and do a long rip and chat a bit more.
Awesome. Dylan, thanks for your time today. Really appreciate you joining us.
Thanks, Tim. Cheers.
Cheers. Stay right there. We'll be back in just a moment. Welcome to the Bitcoin Treasuries Digital Conference for October 21st, 2025. Bitcoin custody is evolving, and OnRamp leads this change with multi-institution custody, eliminating single points of failure. Instead of one institution or complex private keys, OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault backed by 3 independent, institutional-grade custodians. No single custodian can move funds by themselves, providing an unprecedented level of security that traditional custody solutions simply can't match. Protected by a $100 million Lloyd's of London insurance policy, all transactions are fully auditable on-chain, never rehypothecated, and executed only at your explicit direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp delivers comprehensive Bitcoin financial services, including lending, trading, inheritance planning, IRAs, and more. OnRamp functions as your private banking partner, coordinating key holder activity, removing technical burdens, and providing a personalized, trust-minimized experience tailored to your specific wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps secure generational wealth with unmatched security and peace of mind. Visit onrampbitcoin.com today to learn more, sign up, or book a free consultation with their team of Bitcoin custody experts.
Everyone should be able to save and protect their wealth across generations. We built this company so billions of people around the world can take control of their financial lives. We've reimagined savings and protection from the ground up with digital money and modern technology. We're the world's first Bitcoin life insurer. For the first time, people can save, protect, and pass on their wealth entirely in Bitcoin. 4 years ago, we started working directly with individuals. Today, as the Bitcoin economy has grown, some of the world's largest and most conservative institutions are joining us in our vision. Every economy is built on patient, long-term capital. Bitcoin is the foundation of the next phase of global finance. We're not just building a Bitcoin company. Meanwhile is the backbone of how everyone will save in the future.
Welcome back to the Bitcoin Treasuries Digital Conference. I'm excited to bring to the stage the President and CEO of Delphex Capital Markets, Patrick Wood. Patrick, good afternoon.
How are you doing?
I'm well. How are you, sir?
Good, man. I love the tie.
Thank you. Thank you.
No one wears them anymore.
Yeah. I love the tie, the suit and tie, right? It's the buttoned up suit coiner look.
Yeah. Well, you know what? I'm a traditional finance guy, and I mean, this used to be the uniform. There was no other casual days, that kind of stuff. It never existed back in the day. So it's nice to see somebody else doing it and keeping up the faith.
Absolutely. Maybe we'll bring it back. It'll be part of the revolution.
Well, I heard it's a movement. That's what it is. It's called a movement, right? So there we go.
Absolutely. For those unfamiliar, could you give a little bit of your personal and professional background
Yeah.
and we'll jump into maybe the first topic, which is as simple as it sounds. What is a treasury? Right? I think there's a lot there.
Yeah. So when I sent you those questions, by the way, Tim, those are just, just go off of like anything. Let's keep it fluid. But yeah, so my background, I'm a 30-year finance guy, working in I've worked in capital markets for that period. I started out in Toronto, actually, as a stockbroker in the early 90s. And I think I pretty much wore every hat you could in the business. Stockbroker, I was an institutional salesman at one point. I did a lot of investment banking work. I actually put out my own shingle and started my own company back in, I think it was about 2012, and we were a merchant bank / advisory. And that's actually kind of around that period, kind of 10 years ago, I guess. Somebody dragged me along to the Consensus Conference in New York. And that's where I really became kind of familiar with Bitcoin and smart contracts. We really liked that approach to things, specifically, the blockchain engine itself. And funny enough, we took, a few companies public during that period as well, that were in the Bitcoin ecosystem, payment systems, guys building platforms for new trading systems, that kind of stuff. So yeah, I became very familiar with it. And then, for a few years, we kind of got away from it. I got away from it, as did the company. And just very recently, we came back to the space because we saw a big gap that meant to be, or that we could fill. So to your question, what is a treasury? I think that's a great question. I don't think people ask that question enough. I think they should, because treasuries, in essence, they're essentially, they deal with, the strategy of the company, the cash, the liquidity, and of course the risk management. I think, in this case, you're looking at Bitcoin, liquidity, and risk management. The thing we kind of saw is that there's no real risk management. And so we, like I said, our company, Delphax, we came into the space kind of unbeknownst to that was our direction. But like I said, we identified an opportunity in a traditional finance kind of approach to bring a solution to the market that doesn't exist. And to be quite frank, we see it as an opportunity to hedge that no one else is actually doing right now. Because there's a big conservative base. I would say 95% of BTC investors are not invested in BTC yet. But if you could give them a preservation of capital theme within the treasury structure, then I think you could end up actually doing quite well. So we see it as an opportunity more than a cost of insurance or protection. So we've designed what we think is probably the best product on the hedging side in a traditional finance way.
For those that hear the word hedging, can you kind of give a 101 on like what you guys do, what the main kind of activity is, and how that kind of goes out into the ecosystem? Yeah,
100%. So if you're a treasury and you believe in Bitcoin, which clearly you do, you expect that the CAGR on Bitcoin will continue to emulate the last 10 years, let's say 84% a year, somewhere in that range. And I looked at it back in September, and that was the actual CAGR. I don't know what it is today. It's probably off a bit, but anyway, it's still very respectable. But if you're building a treasury and you want to attract a conservative investor to the treasury, one of the great ways to do that is to give them limited downside, and minimize the gut-wrenching pain that comes with 2022s, 2018s, big moves beyond like the normal 10% up and down that you see on an annual basis, like 3 or 4 times a year. These are like the gut-wrenching moves, which, a lot of people, because this was very, very, it wasn't really long ago, a lot of people still remember those years. And they were not small moves, down 73, down 64. Those are big moves that keep a lot of the, conservative institutions, life insurers, pension funds, high net worth, and other retail investors out of the game. They just won't touch it. Even though they know the upside is there, that downward volatility, it scares them, and it frightens that, once again, that person has that mandate. So if you can design a solution to that and come in and fill a gap that OTC options and IBIT, options won't fill, and I can get back to that in a second, describe what's different about this. But if you can give guys and investors kind of a downside cushion so that, the max loss they'll ever get is 15%. Sure, they'll sacrifice some CAGR, but once again, because of Bitcoin and the belief that it's going to continue to emulate, these massive returns over a longer period, you essentially, like I said, have created a buffer. You've differentiated the heck out of your treasury, and you're going to attract, if you market it well and right, you're going to attract a lot of capital that's sitting on the sidelines. Probably 95% of the capital that wants to be in Bitcoin is not in Bitcoin. But this is definitely one of the things that's missing, that they can't touch it without risk management controls. So when you talk treasury, you also talk about a treasurer, okay, in a traditional sense. The treasurers in crypto treasuries today are CFOs and CEOs. Not necessarily the guys looking for risk management. They're seeking alpha and they're seeking differentiation. And what we've said is like, hey, the way to do that and actually attract a bigger group, and fulfill perhaps something called the fiduciary duty a bit, which is normal in a treasury, is to put in a hedge and to pay for it, give up some CAGR and protect your investors. So that's our take, which is very different than what everyone else on your show is talking about. I mean, there's a different ethos out there, but that's what makes us different. That's what gives this product and this service a solution that is very, very opportunistic, I think. So.
Got it. So I guess as these Bitcoin treasury companies have proliferated, in your view, what's the difference between having Bitcoin in your own wallet versus like investing in one of the treasury companies? Because some of these treasuries, like Tesla, they just have some Bitcoin. It's not levered long, so to speak, or it's not a leveraged Bitcoin equity as some people have with these different terms, or it's not a strategy or Metaplanet where they're trying to be kind of 2x long. How do you think through all of that?
So I think the last 12 months says a lot. Okay. If you own just straight BTC, it'd be up something like 65%. If you own strategy, you're up like, I think 35%. The dynamics have changed. MNAV, ratios are being compressed, and they continue to get kind of smoked to the point where you got a lot of guys trading below MNAVs, and so that opportunity, for somebody to come into the space and say, look, I believe that a treasury is the right thing to do, but wait a minute, how am I going to do a treasury and encourage shareholders to give me that premium on MNAV? And that's where I think, once again, things have changed. And those are some of the headwinds in the segment right now, clearly, is that, there's a little bit of a lack of shareholder, perhaps, enthusiasm in the space. And maybe a move to 150,000 in Bitcoin is all it will take to actually get that back, which could easily happen, as we know. But right now, it's a challenging time for treasuries. And so with that in mind, people are smart. They can kind of see like, well, why would I invest in strategy right now? They've got lots of headwinds, which I won't go into. People can figure that out on themselves. But lots of headwinds, and if I just buy straight Bitcoin and hold my Bitcoin in my own wallet, I'm doing better over the last 12 months. So our approach to that is like, hey, if you're going to brand yourself as a treasury, why don't you try something different, something that no one else is doing yet, and that is show people that, hey, we might not do quite as well as the underlying, the underlying Bitcoin. However, we're protecting you. We're protecting you in a way that no other option, be it ITC or OTC or IBIT or any other kind of structure out there today, can protect you. And that is in a fully collateralized, zero counterparty risk way, where the counterparty is essentially the U.S. Treasury bill that forms the collateral. So that's kind of our approach to it. Is there's an opportunity here for a treasury or multiple treasuries to put this on, and it explains away very much so why the actual treasury might not be as great as the underlying, but still will generate fabulous returns. Because even if strategy's up 35% this year, or 38%, that's still a great return. And if you cannibalize that a little bit with a hedge, which will cost you probably 7.5% a year, that will bring in a lot of people. That's a really respectable rate of return for a conservative investor. Like I said, a pension fund, an insurer, high net worth, and others. So, yeah.
Can you describe, do you have clients that kind of are in different buckets, I would imagine, that are maybe not Bitcoin treasury companies? Or what's kind of the target market for
Yeah, great question, Tim. Yeah.
yeah.
So our backstory is that we're a credit markets group. We have been designing because we're a little tiny public company. We're actually listed up in Canada and on the OTC. Unfortunately, I was the guy who took the company public back in 2018, and I'm now sitting in the driver's seat, very reluctantly, by the way. But we're really excited about what we've been able to do now. But as a credit market company, we saw an opportunity on Wall Street where Wall Street stopped inventing and developing new products. There hasn't been an innovation on Wall Street for about 20 years on the credit market side. I would argue that Wall Street is also asleep on crypto. I think they are way behind the game. There are some groups out there, like some dealers, who are really taking an active stand and getting involved. But for the most part, it's created opportunities for little companies like ours to innovate and develop new products. Sure, we spent $20-30 million in legals getting to this point. But what we've been able to do is essentially structure a private placement security, not a derivative, that, unlike anything else out there, you're basically paying a premium for that protection, but you're dealing with a real custodian, U.S. bank. You're dealing with a real placement agent, a real broker dealer, who is us. And you're dealing with a hedge fund or multiple hedge funds on the other side that are basically collateralizing that downside with full collateral, which is held in a U.S. Treasury bill for the tenor of the structure. That's what makes it very different. I'm not sure if I actually answered your question or not, right, Tim? But I thought I would touch on that because the structure is pretty important. But as a credit company and a credit markets company, that's a very slow business. It takes a long time for guys to get back to you because you've got life insurers and others that are evaluating the product. But with crypto, when we were approached to do a treasury in the early summer, we said, well, there's too many treasuries out there. Let's not do that. But can we leverage our product, our existing goalposts? Can we change the game a bit, the field, and still leverage that product for crypto? And lo and behold, we can. So we're an SEC regulated company. Our product is basically a private placement security, which is very traditional finance. And we think by introducing a traditional finance product to Bitcoin, it actually strengthens the foundation. It takes the foundation from plywood to concrete. And I think having these types of goalposts kind of come in and preserve capital, I think the more you have that ethos of risk management, preservation of capital, as well as unlimited upside, of course, other than the cost of basically the hedge, I think you're really winning. And I think that does a lot for the ecosystem. I think it strengthens all of us, treasuries, funds, etc. We are talking with a current fund manager out there right now who's thinking about building his own, monster fund around this structure. But once again, for treasuries, it's kind of whoever starts doing this first. Because like I said, we just launched this product a couple of months ago, and we're just marketing it to everybody now. I think if you get to that point, then you could be one of the first people as a treasury to use the product and to tell the world that you're hedged. And I think whoever does that first is going to win a lot. So
awesome. Why do you think Wall Street hasn't introduced hasn't iterated in the credit markets? Like by just logic, you would think, well, if they do this, to everything you just said, it would then bring in the 95% of capital that's just kind of sitting there going, there's too much volatility. Is there something that we're missing?
I don't think we're missing anything. I think Wall Street's missing a lot. And unfortunately, and I really mean this, and I say it from like loads of experience, okay? It's mostly older people who are making the decisions, who don't want to take on any risk. They're waiting for a few more bonus cycles in their pay structure. They're comfortable. They do not want to take any risks above, what they're, anything that, could require bandwidth, as an example. They don't want to do it. Now, of course, they'll invest in things like Tricolor, and they'll have the portfolio blow up because of subprime mortgage or auto loans, and they'll keep doing that kind of stuff. But doing anything that requires some groundwork, they won't really do. And so that creates an opportunity for companies like ours and hopefully many others to come in and displace Wall Street. because that really should happen, because they're so far behind in the game, and let's face it, their results haven't been the best over the years at avoiding calamity and really thinking about risk management themselves. So yeah, I think we're in a kind of a great little space on that front. Sorry, I don't mean to trash Wall Street. I mean, I love the guys there, but you know, from experience, they're avoiding innovation and bandwidth usage, like, you know, to extremes. So
for those that might be familiar with the preferred products that Strategy launched this year, is what you do in a way for them to kind of do a similar thing without launching preferred products, or are you doing something that's completely different? Because they both kind of have the theme of stripping the volatility, if that makes sense.
Yeah, well, okay. So I used to sit on a preferreds desk too. So I know a lot about preferred shares. I used to sell a lot of them. You know what, Tim, I'm not going to comment on the leverage strategies of Strategy and others. I don't want to go there because that's a long discussion, but I do know that there are headwinds there on the leverage side and on the borrowing side, and I don't think a lot of people are remember, or they're not old enough to know what a credit market freeze is. And credit market freezes, you know, historically they happen quite a bit. I think I've definitely seen a few of them in my career. You know, that's a danger point. And that always scares me, leverage upon leverage and borrowing upon borrowing. I think it works wonderfully if there's a constant, you know, kind of rise in the underlying asset and the treasury itself. But, you know, things can get sticky at times, right? So our product is very different from that. Our product is saying, hey, and if your strategy, you know, this is a great way for you to go back to shareholders now and say, look, you know, we've got this great preferred structure out there. We've got this awesome convertible stuff that this debt that we borrowed, you know, essentially at zero way back in the day. But we're going to do something even better now. We're actually going to hedge your downside. You know, we're going to basically put in a floor. It will suck up a little bit more of the returns going forward. But, you know, when we've got leverage, we've got growth. Why don't we have risk management and downside protection? It's not an unreasonable thing to think, and it's not because Bitcoin is a bad investment or a bad, you know, asset to have in the treasury. It's just because there are moments in any kind of nascent thing like Bitcoin where you're going to have FTXs and other things crop up, and too much leverage in the system. In the fact that, you know, people are borrowing 50 to 1 for options trades these days. So you're going to have these moments like we had a couple of weeks ago, and some of them could be dramatic. So that's why we're saying, look, position properly, and you're winning no matter what at that point.
Got it. I guess I'll throw it over to you, one, for closing thoughts, but also where can people reach out to you and the firm? Because it sounds like there's obviously a lot to talk about.
Sure. Yeah. So people can reach us at delphex.com. So it's actually stupidest company name ever, but I didn't name it, so I'm not going to take the heat for it. But it's delphx.com, and they can email us at info@delphex.com. As far as closing thoughts, look, I think there's an opportunity with new products and new approaches, you know, and what we've done by basically introducing a fully collateralized zero counterparty risk hedge. That is essentially a traditional finance structure. I think that beefs up like I said, the foundation quite a bit. And I think more products like ours and more little companies like ours need to come to market and develop these types of things. You know, I love the guys who are doing the life insurance. I think, you know, lending, yield, insurance, estate planning in this ecosystem, all those things are great. But bringing in traditional finance, and especially in structured products, is the one thing that's kind of missing right now. So we're really stoked and pumped to fill that gap. So yeah, reach out to us anytime, please.
Awesome. Patrick, thank you so much for your time. Really appreciate joining us.
Thank you, Tim. Take care.
Thank you. Stay right there. We'll be back in just a moment. Welcome to the Bitcoin Treasuries Digital Conference for October 21st, 2025. Bitcoin custody is evolving, and OnRamp leads this change with multi-institution custody, eliminating single points of failure. Instead of one institution or complex private keys, OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault backed by 3 independent, institutional-grade custodians. No single custodian can move funds by themselves, providing an unprecedented level of security that traditional custody solutions simply can't match. Protected by a $100 million Lloyd's of London insurance policy, all transactions are fully auditable on-chain, never rehypothecated, and executed only at your explicit direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp delivers comprehensive Bitcoin financial services, including lending, trading, inheritance planning, IRAs, and more. OnRamp functions as your private banking partner, coordinating key holder activity, removing technical burdens, and providing a personalized, trust-minimized experience tailored to your specific wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps secure generational wealth with unmatched security and peace of mind. Visit onrampbitcoin.com today to learn more, sign up, or book a free consultation with their team of Bitcoin custody experts.
Everyone should be able to save and protect their wealth across generations. We built this company so billions of people around the world can take control of their financial lives. We've reimagined savings and protection from the ground up with digital money and modern technology. We're the world's first Bitcoin life insurer. For the first time, people can save, protect, and pass on their wealth entirely in Bitcoin. 4 years ago, we started working directly with individuals. Today, as the Bitcoin economy has grown, some of the world's largest and most conservative institutions are joining us in our vision. Every economy is built on patient, long-term capital. Bitcoin is the foundation of the next phase of global finance. We're not just building a Bitcoin company. Meanwhile is the backbone of how everyone will save in the future.
Cadena Bitcoin is a decentralized, peer-to-peer Bitcoin borrowing and lending marketplace. Lenders in this market are looking for a fixed fiat yield, while borrowers are looking for leveraged Bitcoin exposure. Cadena is building Bitcoin native financial services to power the Bitcoin economy with self-sovereign financial tools that do not require giving up custody of your Bitcoin, because as Satoshi said, the main benefit is lost if a trusted third party is still required. Learn more at cadenabitcoin.com. Bitcoin Treasury adoption just exploded past $84 billion, with 15 new companies jumping in this month alone. While your competitors stack Bitcoin, are you still watching from the sidelines? The question isn't if anymore, it's how fast can you catch up. Satoshi Institute pioneered the professional infrastructure that institutional treasurers can trust. Live simulation platforms, battle-tested risk frameworks, and the market's only Bitcoin Treasury performance indexes that track 800,000 plus Bitcoin holdings. Are you ready to join the Bitcoin Treasury revolution? Get your free strategic assessment at satoshiinstitute.com. Satoshi Institute is where billion-dollar Bitcoin treasuries begin. Check them out online at satoshiinstitute.com. The Bitcoin Treasuries Digital Conference is sponsored by Belgravia Hartford. Belgravia Hartford is revolutionizing corporate finance with cutting-edge Bitcoin Treasury strategies tailored for Canada's dynamic markets. Welcome to the Bitcoin Treasuries Digital Conference for October 21st, 2025. Bitcoin custody is evolving, and OnRamp leads this change with multi-institution custody, eliminating single points of failure. Instead of one institution or complex private keys, OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault backed by 3 independent, institutional-grade custodians. No single custodian can move funds by themselves, providing an unprecedented level of security that traditional custody solutions simply can't match. Protected by a $100 million Lloyd's of London insurance policy, all transactions are fully auditable on-chain, never rehypothecated, and executed only at your explicit direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp delivers comprehensive Bitcoin financial services, including lending, trading, inheritance planning, IRAs, and more. OnRamp functions as your private banking partner, coordinating key holder activity, removing technical burdens, and providing a personalized, trust-minimized experience tailored to your specific wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps secure generational wealth with unmatched security and peace of mind. Visit onrampbitcoin.com today to learn more, sign up, or book a free consultation with their team of Bitcoin custody experts.
Everyone should be able to save and protect their wealth across generations. We built this company so billions of people around the world can take control of their financial lives. We've reimagined savings and protection from the ground up with digital money and modern technology. We're the world's first Bitcoin life insurer. For the first time, people can save, protect, and pass on their wealth entirely in Bitcoin. 4 years ago, we started working directly with individuals. Today, as the Bitcoin economy has grown, some of the world's largest and most conservative institutions are joining us in our vision. Every economy is built on patient, long-term capital. Bitcoin is the foundation of the next phase of global finance. We're not just building a Bitcoin company. Meanwhile is the backbone of how everyone will save in the future.
Welcome back to the Bitcoin Treasuries Digital Conference. I'm excited to welcome to the stage Andrew Webley. Andrew, good afternoon, or is it good evening for you?
Yeah, it's 9:30 in the evening. So yeah, good evening, good afternoon, good morning, wherever you may be in the world.
Yeah, we're global, right?
Yeah, very much so.
So how is everything? We had a great episode in the studio with some of our other cohorts here in New York, but it looks like maybe you're back at home now.
Yeah, it was great actually. So I really enjoyed the conference that you did in New York. It was brilliant. It's probably my favorite Bitcoin conference I've been to. So that was great. And then afterwards we had the chat in your studio, and everyone seemed to enjoy that. And then we were doing a couple of days in New York, meeting some investors, and through the regulatory announcements that have come out after that trip, People have seen some of the reasons behind that, i.e. we announced fundraising. There was £8 million that came from a particular investor in the US. So yeah, it was a good trip when I saw you in New York. It was conference, some media stuff, and also some investor stuff.
Awesome. Yeah, I definitely encourage people, if you haven't seen the episode we recorded with Sonder Anderson and Jesse Myers, it was really great to get like more than one or two people in the same room and just be able to kind of be open and walk through some of these experiences and what's going on. I think that was hugely helpful for the community. Can you give us kind of a rundown of where Smarter Web is as far as Bitcoin on the balance sheet, the other kind of current stats, and then where you kind of see all of this going, maybe bigger picture over the next year or so?
Yeah, sure. So we announced this morning a couple more Bitcoin bought. So we currently hold 2,660 Bitcoin, which makes us the 30th largest public company in the world. We're still by far the biggest public company in the UK holding Bitcoin on the balance sheet, hold more Bitcoin than everyone else added together. And yesterday, we put our new analytics dashboard live on our website. So Jesse Myers, who works alongside me, and Alex, one of our designers, they've been working on a new analytics dashboard that we built in-house ourselves, using some of our own metrics in addition to all the metrics that people like to see, standardizing everything, trying to make it more in line with industry standards, such as sort of put in place by Strategy and others. So it's really good, actually. It's something we're really proud of, and we'll keep trying to build it from there. In terms of the other question, where we're at to, with stacking in recent weeks. So in this quarter, so what are we, 21 days into the quarter? Great number. Our Bitcoin yield is quite low, if I'm honest. In the quarter today, it's 1.7%. If you look at our analytics dashboard on our website, you'll see that last quarter, for the whole quarter, it was over 300%. That's just a reflection of the market. Obviously we believe it's going to go up, a reasonable amount as the quarter progresses. But times are tougher at the moment. But as people can see from our announcements, we're still raising money, we're still growing the yield, and we're still incredibly excited about the short term. I personally believe that it's going to be a good end of the year with Bitcoin, and therefore Bitcoin Treasury companies should benefit from some of that as well. And then I'm incredibly excited about when we go into next year as well. We've got some quite big catalysts coming up ourselves, which are very, very excited, and we're hoping to be able to talk freely about them soon. Yeah, I'm incredibly excited about the future. Everyone's got to remember. So I get a lot of people talking to me about the Smarter Web company and how well we've done and all of this sort of stuff. But as a public company, we are only 6 months old. The company's 15 years old in terms of when I set it up. Mm-hmm. But as a public company, we're only 6 months old. And if you think that what's been done so far in 6 months is good, well, you wait and see what will happen in the first 2 or 3 years. It will be mind-blowing if you like the first 6 months.
Stick around for more.
Yeah.
I think this is obviously a very interesting time, right? Volatility goes in both directions. Can you walk us through a little bit of the technicals and realities of being a public company and those blackout periods, quiet periods, quieter periods? Like what is all of that for those that are either not familiar or maybe they're familiar, but it's just like, but why, right? It's just like, well, there's more coming and within the next couple of months. And you've been hearing that not just from yourself, but from others in the industry. And so there's obviously a compliance and regulatory reason for it, but it might be super helpful. I know it will be for myself, for the community to hear just kind of the structure of that. And, is it, something that happens based on a certain event, or is it like certain times every single year? Kind of those kinds of details, if that makes sense.
Sure. I'm more than happy to talk about that. So, remember that the rules change in different countries, but broadly they're similar. So in the States, it's quarterly. In the UK, it's half yearly. In the States, it might be half yearly soon, but there's periods of the year where the management can't do certain things. One particularly annoying thing for us in the UK is the management are not allowed to buy stock at the moment because we're in a closed period, one of those 2 periods a year. And when your MNAV, your fully diluted MNAV is pretty much bang on 1, that's a bit frustrating. So you get blackout periods like that. The other thing that you've got to factor in when you run a public company or when you look at a public company is that the management are not allowed to say certain things until that information's been communicated in the correct fashion. So the correct fashion can mean different things in different countries. In the UK, which is where we're listed, you do something called an RNS, a regulatory news service. It's just an announcement. They normally go out at 7 a.m. in the morning. And that's where you put out the information. And then as soon as you put it out in the public domain, you can talk about it. And that's really important because that means that everyone gets treated equally. The information is dispersed properly. So that's the other thing. The other thing that is really worth mentioning, which is kind of linked to what you're asking, is if you're not used to running a public company or working with public companies or even big companies, things take time. So, I was talking to someone earlier today and I was explaining an investor that I hope will be on board fairly soon. And I was saying that from start to finish, you're probably looking at 6 months of conversations with one particular investor. We've had other investors that have got in touch and have invested within the week. So there's a real range. But what we're trying to do at the moment is we're trying to go after the largest pockets of capital, and those things take time. But the good news is that once they do invest, they invest for many, many years. So it is the capital that you want. I remember at your conference, Tim, Michael Saylor was talking, and he said capital is sort of a spectrum, if you like. So you've got capital that goes from easy to hard. And the capital that you want is right at the end, the hardest capital. But obviously it's the hardest, but it's the best capital. There is capital that you can get that's incredibly easy. Like, we get offered capital all the time that is not attractive or I don't believe is beneficial to our shareholders. So we've got to get the balance between capital coming in to further our treasury policy in a fashion that's accretive to our shareholders and capital that isn't sort of cumbersome to the balance sheet. Because if you look at our balance sheet at the moment, it's approximately £250 million of pristine digital capital, no debt. And that's pretty impressive, So yes, we want to grow incredibly quickly. And we have grown quickly, going from £3 million to £250 million in 6 months is quite good. But at the same time, you want to lever up, and we've got a strategy for that, which is a very good strategy, which is incredibly risk-free as well. But you want to do it without causing a problem for where you see yourself going. So yeah, in summary, in a public company, there's a whole host of rules that you have to comply with, but you just do your best to still communicate as you can.
What other updates are important to maybe cover? I saw an announcement either today or yesterday that you brought on an additional designer, I believe, or someone on the operating side of the business, it looked like.
Yeah, so about 2 or 3 weeks ago, we announced a new non-executive director who is the senior non-executive director for one of the FTSE 100, which is the 100 biggest companies in the UK, very successful company. We were really pleased that he wanted to join our company. And then yesterday, it will blur into one of the days. We were pleased that a new designer started. We put that out on Twitter because we don't have a regulatory responsibility to announce that in the same way, but we try and keep everyone updated as best we can on everything. He's really good. He's worked for on brands like Dyson, the Royal Navy, loads of good brands basically. And he's really talented. And I've been spending quite a bit of time with him talking about what we're doing, because his first project, which don't hold me to this, but I'd imagine it'll be about 2 months before people see the sort of the fruits of his labor, is a rebrand for the Smarter Web Company. So I don't want to spoil the surprise, other than saying that the name is not changing. But it's taking the brand that's evolved over quite a long time period and positioning it to be what we hope is one of the biggest companies in the UK. So clearly that needs a bigger, more comprehensive, more thought out brand that encompasses the operating business and our Bitcoin treasury strategy. And so far so good with the ideas that he's thinking about, and we're delighted that he joined us. And it's massively important, to communicate what we want to do in a coherent fashion, because it's not just about explaining what we do to people that love Bitcoin and Bitcoin treasury companies. It's about explaining what we do to every single person in the UK. That's the way that we achieve the mission.
Absolutely. Where can people connect with you, connect with Smarter Web online?
So the best place to go is if you go onto Twitter, or X, actually, we're meant to call it now. So my personal handle is ASJ Webley, or you can go to Smarter Web UK. You can find Jesse on X as well. Also, I would definitely recommend having a look at our website, which is www.smarterwebcompany.co.uk. If you go into the investor relations section within the website, you've got lots of information about us, all the regulatory news, presentations, research, media stuff, and importantly, the new analytics dashboard that we're really proud of.
Awesome. What events are coming up that you've announced you'll be attending? Are you going to be at Bitcoin Amsterdam, or what else is coming up in your travels?
Yeah, so no, I'm not going to Bitcoin Amsterdam. I couldn't fit that into the diary, unfortunately. But I'm trying my best to go to Bitcoin MENA, which is in December. So that's in the short term. There's also some other UK events that I can't remember off the top of my head. I've got to go to London tomorrow for another thing in the evening that I've been asked to talk at. So yeah, I'm very much looking forward to going to Bitcoin MENA, which is in Abu Dhabi in December, if I can fit it in. And then next year, I'm not sure which of the ones I'm allowed to talk about that we've been invited to. But we can talk about the event in Madrid in May, which should be really good, actually. It's a difficult balance because time is so limited now for us. I've been to so many places in the last couple of weeks, and that's not just the conferences, but also investor meetings. And we won't get this right all the time, but we're just trying to balance things in the right possible way. So we'll go to as many of these events as we can, but we have to push the business forward, and that has to be our priority. So if you can forgive us if there's the odd event that we won't be at, but we'll do our best to get to as many of them as we can.
Absolutely. Are there any metrics in particular from the new dashboard that are different from before that you want to highlight, or just highlight in general that are maybe the most important to you individually, or that you want to highlight for a specific reason?
Yeah, well, we're really proud of the PBID metric, and we built that into the dashboard because that's something that Jesse pioneered. It's a way of looking at your MNAV versus the Bitcoin yield. So that's something that's a really good metric to look at. We're hoping that it becomes a standard metric that is used in all of these Bitcoin treasury dashboards. And if anyone is building a Bitcoin treasury dashboard and they want our help, I can volunteer Jesse to help on getting that done, because it's something that's really good for investors. We also put sats per share because we thought that that's quite an easy thing for people to use to track that side of things. We put the head count of the business in there, which is 10. So that's all the directors, the non-executive directors, the people on the operating side, 10 people. We thought that that was quite a good thing so people could see the number of people versus the size of the business in terms of the NAV. We changed market cap to enterprise value because we felt that that was a better comparison for everyone. To take a look at it, we've also put in some volatility figures because the volatility in our stock is pretty immense, and that means that there's a lot of value in that. So some of the options that we've got for investors who want to invest in us, we've got something called Smarter Convert, which is the UK's first Bitcoin denominated bond. So if people look at that product versus the very little downside that it's got relative to Bitcoin, because you basically get your Bitcoin back if it doesn't convert into equity, they can overlay then the volatility of our stock and they can see that it's an unbeatable, in our opinion, value for something. And then things like we've included like some volume figures because we're really proud of the liquidity in our stock. It's incredibly liquid for the UK. And that's a good thing that we wanted to signpost to people as well. So there's loads of stuff in there, but if there's anything in there that people think should be in there that isn't in there, being a web design and web development company, we can pretty easily add it in.
Awesome. I feel like for all of us, or at least most of us, there's like pre-Bitcoin and then after Bitcoin. How is like holding Bitcoin for you changed how you think about capital allocation specifically, or also more generally?
Yes, great question. So it probably wasn't until the end of last year that I allocated almost 100% of everything that I've got to Bitcoin or Bitcoin treasury companies. So I've been investing in Bitcoin for almost 10 years. And in the early days, I used it as a speculative, trading type thing, I suppose. It wasn't until Strategy came out with their strategy that to me it became something that was a much longer term investment. That's the great thing that Bitcoin treasury companies offer, in addition to the way that you hold it, in addition to the profile of the investment, in my opinion. I think you can probably answer that question, though, more to do with your outlook of the rest of the world rather than your outlook of Bitcoin itself. Because if you believe, like I do, that fiat currencies are a complete waste of time and that most other investments are incredibly cyclical, Bitcoin is the easiest investment in the world, in the sense that if you believe what I believe, which is Bitcoin's going up forever, and therefore it doesn't have the cyclical nature of a lot of companies, as an example, or even gold, to be fair. Like there's a lot of people talking about gold at the moment, which has had a very good year, admittedly, in gold's terms. But you look historically at gold, it's not really a very good thing to hold for 20, 30, 40, 50 years. Yes, it is a good thing to hold in the sense of it holds a value against inflation. It's done that for like 2,000 years. But in terms of investment performance, it's not really as good as other things. But a lot of those other things, you would have to be quite active and move from one to the other, every couple of years or whatever. Whereas the great thing about Bitcoin is you can basically hold it and forget about it. Bitcoin treasury companies, the same. Obviously you have to accept the volatility, but a well-run Bitcoin treasury company, you can buy and hold just like you hold Bitcoin and take an incredibly long-term time view. But then also the people that love trading stocks, Bitcoin treasury companies are awesome for that as well, So that's the way that I look at it. But I certainly wouldn't recommend to most people to put 100% of everything that they've got in the world into Bitcoin. I know that I'll be very unpopular for saying that, but I think that you have to really believe in something to do that. But at the same time, I think that everyone should have at least a couple of percent allocated to Bitcoin, whether that's through Bitcoin treasury companies or whatever. But obviously that massive gap between, say, 3% and 100% comes down to the individual and their stage in their life and their risk attitude and all of those sorts of things. I'm not a financial advisor.
Absolutely. What type of feedback? I know we talked about this maybe a few conversations ago. Have you received both from shareholders, but also internally at the web design operating company? And how have those conversations or themes from those conversations kind of informed your thinking as we're all kind of iterating and progressing along here?
Yeah, so I speak to a lot of people that have never invested in Bitcoin, and take our new designer, for example. He said to me today, he said, after reading a lot of the information that I've read, I want to take my money out of my savings account and put it into Bitcoin. And that's a very typical reaction. And what I say to all those people is, just slow down a minute, spend more time learning about it, and then phase it in if that's what you think is the right thing to do. We've got a challenge with the operating business that we need to push the different sides of our business forward. So that's the operating business and the treasury strategy, and to make them complement each other. And we think we've got a very robust plan of how we can do that. I've said it before, but I still have not met anyone that's put the effort into learning about Bitcoin that doesn't believe that it's one of the best assets ever in the world. And I think my only slight disappointment, which we're working on very hard actually, is that our massively increased public profile hasn't probably transferred into as much business as I thought it would. So if there's anyone out there that's looking for a website, a brochureware website, or we've got a really good ready-made service that it gives you a professional website really, really super quick, pretty cheap as well. Please do get in touch with our team, because we love the Bitcoin side of the business, but the web design side of the business, which is how the Bitcoin side of things came into existence, is a very, very good product if you need a website.
Awesome. Any closing thoughts? I really appreciate you joining the digital conference today.
I just want to say thank you to everyone. We've had a great ride for 6 months. The start was gravity defying, and we managed to stack an awful lot of Bitcoin. Then the market became a bit tougher, and we've kept going. People can look at our announcements. We have announcements every single week. Bitcoin buys most week, fundraisers most weeks. So in the good times and the bad times, we've delivered. We believe that things are about to improve, hopefully dramatically, for the sector as a whole. And so I just wanted to say thank you to everyone, and reassure everyone that we're working our very hardest to try and get to where we want to be. And some of the things that we talk about that we haven't been able to fully talk about yet, we hope to be able to talk about in the not too distant future as well.
Awesome. Andrew Webley, thanks for your time. Really appreciate it today. We'll catch up with you soon.
See you soon. Bye.
Thanks. Stay right there. We'll be back in a few minutes with Ben Workman. Welcome to the Bitcoin Treasuries Digital Conference for October 21st, 2025. Bitcoin custody is evolving, and OnRamp leads this change with multi-institution custody, eliminating single points of failure. Instead of one institution or complex private keys, OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault backed by 3 independent, institutional-grade custodians. No single custodian can move funds by themselves, providing an unprecedented level of security that traditional custody solutions simply can't match. Protected by a $100 million Lloyd's of London insurance policy, all transactions are fully auditable on-chain, never rehypothecated, and executed only at your explicit direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp delivers comprehensive Bitcoin financial services, including lending, trading, inheritance planning, IRAs, and more. OnRamp functions as your private banking partner, coordinating key holder activity, removing technical burdens, and providing a personalized, trust-minimized experience tailored to your specific wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps secure generational wealth with unmatched security and peace of mind. Visit onrampbitcoin.com today to learn more, sign up, or book a free consultation with their team of Bitcoin custody experts.
Everyone should be able to save and protect their wealth across generations. We built this company so billions of people around the world can take control of their financial lives. We've reimagined savings and protection from the ground up with digital money and modern technology. We're the world's first Bitcoin life insurer. For the first time, people can save, protect, and pass on their wealth entirely in Bitcoin. 4 years ago, we started working directly with individuals. Today, as the Bitcoin economy has grown, some of the world's largest and most conservative institutions are joining us in our vision. Every economy is built on patient, long-term capital. Bitcoin is the foundation of the next phase of global finance. We're not just building a Bitcoin company. Meanwhile is the backbone of how everyone will save in the future.
Cadena Bitcoin is a decentralized, peer-to-peer Bitcoin borrowing and lending marketplace. Lenders in this market are looking for a fixed fiat yield, while borrowers are looking for leveraged Bitcoin exposure. Cadena is building Bitcoin native financial services to power the Bitcoin economy with self-sovereign financial tools that do not require giving up custody of your Bitcoin, because as Satoshi said, the main benefit is lost if a trusted third party is still required. Learn more at cadenabitcoin.com. Bitcoin Treasury adoption just exploded past $84 billion, with 15 new companies jumping in this month alone. While your competitors stack Bitcoin, are you still watching from the sidelines? The question isn't if anymore, it's how fast can you catch up. Satoshi Institute pioneered the professional infrastructure that institutional treasurers can trust. Live simulation platforms, battle-tested risk frameworks, and the market's only Bitcoin Treasury performance indexes that track 800,000 plus Bitcoin holdings. Are you ready to join the Bitcoin Treasury revolution? Get your free strategic assessment at satoshiinstitute.com. Satoshi Institute is where billion-dollar Bitcoin treasuries begin. Check them out online at satoshiinstitute.com. The Bitcoin Treasuries digital conference is sponsored by Belgravia Hartford. Belgravia Hartford is revolutionizing corporate finance with cutting-edge Bitcoin Treasury strategies tailored for Canada's dynamic markets. Welcome to the Bitcoin Treasuries digital conference for October 21st, 2025. Bitcoin custody is evolving, and OnRamp leads this change with multi-institution custody, eliminating single points of failure. Instead of one institution or complex private keys, OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault backed by 3 independent, institutional-grade custodians. No single custodian can move funds by themselves, providing an unprecedented level of security that traditional custody solutions simply can't match. Protected by a $100 million Lloyd's of London insurance policy, all transactions are fully auditable on-chain, never rehypothecated, and executed only at your explicit direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp delivers comprehensive Bitcoin financial services, including lending, trading, inheritance planning, IRAs, and more. OnRamp functions as your private banking partner, coordinating key holder activity, removing technical burdens and providing a personalized, trust-minimized experience tailored to your specific wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps secure generational wealth with unmatched security and peace of mind. Visit onrampbitcoin.com today to learn more, sign up, or book a free consultation with their team of Bitcoin custody experts.
Everyone should be able to save and protect their wealth across generations. We built this company so billions of people around the world can take control of their financial lives. We've reimagined savings and protection from the ground up with digital money and modern technology. We're the world's first Bitcoin life insurer. For the first time, people can save, protect, and pass on their wealth entirely in Bitcoin. 4 years ago, we started working directly with individuals. Today, as the Bitcoin economy has grown, some of the world's largest and most conservative institutions are joining us in our vision. Every economy is built on patient, long-term capital. Bitcoin is the foundation of the next phase of global finance. We're not just building a Bitcoin company. Meanwhile is the backbone of how everyone will save in the future.
Welcome back to the Bitcoin Treasuries Digital Conference. I'm Tim Kotzman. I'm excited to welcome to the stage to talk Bitcoin with Ben Workman. Ben, good afternoon. How are you? Good evening, 5 o'clock.
We're getting close. I'm doing, Tim. How are you?
I'm well. I mean, it is 5:02 p.m. on the East Coast, at least.
I know if I had it my way, you'd be rolling into hour 48 by the time I'd come on stage, so I could talk to the delirious Tim. But it's incredible what you're doing with these things. I love that you keep doing them. I think it keeps the conversation going. And the beauty about anything connected to Bitcoin is that market's always changing. So there's always something different to talk about.
Yeah, no, I think I definitely appreciate, and the community appreciates when people come on, even when they have a lot of stuff that they can't talk about yet. Just, there's a lot of stuff to talk about. Even, Pomp just posted, gold's down today and Bitcoin's up. So any thoughts there? Are people, are the gold bugs taking profits and finally throwing it into Bitcoin, or what's your take?
Oh, I don't know. I think it's too soon to start doing any victory laps on the gold bugs. There are near cousins here with sound
Yes.
money. They understand sound money. That's been a principle in the gold community for a long time. So I was happy to see them get their win. I think it's a precursor for what's to come for Bitcoin, quite frankly. You're going to see capital rotating out of areas of weakness and into the assets that people see long-term strength in. So when you start seeing assets like gold or assets like silver start running and you see Bitcoin lagging and starting to coil a little bit, it just makes you start to think that next move's probably a little closer than we all thought it was.
Absolutely. The one thing I've heard from so many people is how impressive the Strive kind of lineup is, from the board all the way down. It's just like this Avenger group of superheroes in the Bitcoin space. Can you talk a little bit about that and what the experience has been of being really close with these guys that are just very experienced and are not someone that's like, I got into Bitcoin last week. Right? It's been like a decade in some cases. It's just unbelievable.
Yeah, absolutely. I mean, when you're building a team like this, particularly when you're building a company that's meant to endure for decades to hundreds of years, you really have to start with a foundation of choosing people that are going to stand for excellence. And that's the first thing that you do. And the team that Matt really assembled at Strive is purpose-built for this mission. When you look at the backgrounds of everybody that's involved in this, everybody either comes from a Bitcoin background. We've got people from academia, obviously on our board. We've got Sharish from Strategy. And so we've just really built a team where you've got a wide range of opinions and you have a wide range of expertise. And when you bring all those together, the conversations you're able to have and the way that you're able to really dial in what that vision is for the future, it changes because you get challenged a lot. I mean, we did not pick people that are meek. You have a lot of people that are very willing and eager to voice their opinions, to dissent on certain things when they don't agree and provide a different point of view. And I think that's something that has to be cultural within a company, right? That has to be the foundation that the company was already built on. And for someone in like Matt's role, where you're the CEO of this organization, that's got to start with you. You've got to really be willing to be challenged and be challenged regularly because this is an evolving space, right? When you think about the Bitcoin treasury companies and then you think about digital credit, this is a new concept and it's going to be evolving, and it has been evolving for years. I mean, strategy has been evolving since 2020, and their view on things today is very different than what it was in 2021 and 2022. And so to go down that journey, and particularly to start now, where we have the benefit of hindsight, being able to go back and analyze each step that strategy took, look at what worked, what didn't, what types of capital were they taking, what types of capital weren't they taking. You want people that are in a position and feel empowered to be able to push new ideas forward. And that's what we built. And I've been, I'll admit I've been a little overwhelmed in my first couple of weeks here because these guys move. They move fast. And I knew that coming in, right? Obviously, I started on the board at Strive, so I was very aware. But it's one thing to see it from the board level, and it's another to be on the ground, watching people execute. And I think it's probably the case with a lot of these companies as well, where you don't get to see behind the scenes very often and see the people that are really making things happen. Because in this industry, there's a massive amount of collaboration that has to happen, right? Doing this part, being out on the internet and talking and evaluating the market, right? That's the fun stuff, my opinion. But there's a huge amount of accounting and legal and all kinds of different functions that are playing a role in being able to execute these strategies behind the scene, right? So strategy, they can't just ideate preferred and then have it out the door the next day with one or two people. There's a reason that team has scaled and gotten larger over time. And it's because you need that expertise and you need those people behind the scenes that can really push things forward when you're a public company. So it's been a steep learning curve, and we're ramping up quick here, but it's really exciting. Even when the markets, are down like this, obviously it drains sentiment out of the market. You've been seeing that. Anyone who's been spending any time on X knows that sentiment has drained quite a bit from where it was. And that obviously comes from, all these long extended drawdowns. They'll beat down investors in a serious way when they go on for several months. But I don't think that's forever. When we look at Bitcoin's just getting started on its arc. And the companies that are building on top of Bitcoin are in the same spot. You got to remember that until about 6 months ago, there were maybe 3 of these companies in existence. You had Strategy, you had Semler, and you had Metaplanet that were kind of out there for a little bit, but it's very recent that new companies have entered the market. And when you start to see challenging market conditions like this, people very quickly start to wonder, can all these companies survive? And sometimes I think as an investor, these types of shakeouts and these types of events that'll really start to challenge your resolve and make you question your investing philosophy can really be good, because it can allow you to reposition for the long term. You can now look at the playing field. You can see how the companies are responding. You can look at the capital structures that they have and try to figure out which companies are placing themselves in the best position to be able to execute over the next several years. And this is the time when that capital gets allocated and gets put to rest for the long term, where the benefits are ultimately realized, right? These are long-term plays. They're not 1 week, 2 week, 1 month, 2 month plays. These are year-long plays. And for a lot of us that have been around with strategy, that was how it started. It started with a vision that you could conceptualize over a period of a number of years. And ultimately, that thesis proved out to be true as they continued to execute down the way. And I think that's going to be the same for a lot of these new companies. But it doesn't mean that it's not going to come with serious speed bumps along the way. And we've got one of those right now. People are starting to form different opinions about the different companies. But I still think for most of them, it's too soon to make that call.
how do you see AI kind of interacting with Bitcoin? Like, is it more present day or soon to come over like quarters or a year or two, or is it kind of like, is that pulling it forward too much? Is it like, yeah, all these AI agents are going to want Bitcoin, but that's maybe like a couple years out in your view?
You know, you've heard it said several times that Bitcoin's effectively purpose-built money for the internet.
Hmm.
And I think that's an incredibly powerful concept when it comes to AI, right? You need a solution that can be trustless out there. And I don't think we have any idea what that impact is going to be yet, right? Is Bitcoin truly going to be the money that AI operates on when all of a sudden you've got, you know, AI to AI connections being made and value trading between those programs? I don't know. But I'm really excited to see how that evolves. Clearly, right now, you've seen this massive emergence in the focus that's going into AI and in the Bitcoin community for good reason, because a lot of the companies that are front and center in that discussion started their journeys as Bitcoin miners, right? It's a way where you can effectively monetize power early without having to go out and find a customer, right? I can just go buy the Bitcoin miners, plug those in, start monetizing right away. And now what you're seeing is that a lot of those companies were actually evolving over time and becoming data centers. And I think that's a powerful shift out there in the market. So it's capturing, you know, people's attention right now in a big way, as you saw these Bitcoin miners that were getting beaten down for years. I mean, I started my X journey as an analyst in the Bitcoin mining space. That was the very first sector that I was covering. And several other members of True North were the same. I know Adrian did as well. And the thesis over there was always find the Bitcoin miners that ultimately are not going to be Bitcoin miners. And that was how we tried to find value in that sector. But it was a long-term hold, right? It's another one of those where you have to reiterate that while everyone's seeing the success today of, you know, companies like Iron 10xing in the matter of a couple months here, you know, those companies were the butt of the joke for several years in a row when everyone told them how bad the business model. But what was happening was people just couldn't see what they could become. And I think that that's going to be something very similar in the Bitcoin treasury space. Is right now, people see the phase where you're in the digital gold rush, right? People are rushing to accumulate this asset that they know they want to hold. It's digital capital. It's the best collateral that we've seen, but they're not quite sure what phase two looks like. And I think that's going to be what one of the interesting parts about this journey is. What do you do as a company when you're holding these massive piles of digital credit? You know, and issuing these, or digital capital, but issuing these digital credit instruments, you know, is a massive, massive market. But that's not the route that every company is going to take. And I think that's what's going to be really interesting is people are going to find ways to ingrain Bitcoin into these businesses and scale and launch new types of businesses using the Bitcoin that they're holding on the balance sheet. So these companies are going to be some of the most well-capitalized businesses in the world. And so I think we're going to be in that similar phase that you saw Bitcoin mining in, where people couldn't see what was coming next. And I think you're going to see the same thing here in the treasury space, where people are going to have to use their imaginations for a little bit. But as soon as you start to see it later on, you're going to go, oh, it was so obvious.
Makes sense. When you look at the, as we like to say, MNAVs of a lot of the like large tech companies, it's like in the dozens or 50, maybe not 100x MNAVs, but it's a big double-digit number. And Mark Moss had shared recently that when he was in DC with Saylor said, look, 3x should be the floor. What's your reaction to that? Maybe both now in the present, but also kind of where we're going when you consider everything that you just said about this being this pristine digital kind of capital.
Yeah, I mean, MNAV's gotten highlighted in a serious way right now, but really it's a reflection of the way the market's valuing the companies, right? We don't get to pick what the floor or what the ceiling is for an MNAV, and I'm not going to try to pick one because I don't think that that's something that we can really assign. That's going to ultimately be up to the market. What I do believe is that companies that are able to use their capital structures and issue securities and apply leverage to Bitcoin deserve a premium over the assets that they're holding. These are active businesses that are continuing to accumulate and build that Bitcoin exposure per share that they're holding for their shareholders. And I think when you can do that in a way that individuals can't, there should be a premium on there. Now, what that premium is going to be, that's going to ebb and flow. And I think that you'll see very different premiums during different market cycles and for different sizes of companies. So for instance, when you recently saw Metaplanet do its parabolic run a couple of months ago, you saw that MNAV really expand. And when people saw that, they started looking to companies that were at a similar starting size to where they were at, because it looked like at the time that the value in this investment was going to be on that parabolic growth phase. And now that those premiums have compressed, everyone has to reset and look at these companies and go, okay, where is this value going to come from? Where do I think a stable premium is going to be? And where do I find a zone where I see value in the plays? And that's a complicated question, because you have to go through several thought exercises. The first thing you have to do is look at the company and go, do I think this company is structured to be able to deliver value for me as a shareholder? And if your answer to that is yes, then you have to ask yourself, well, what is the right point where I feel like I've got a good entry into that opportunity? And the hard part with investing is that usually the right time to buy is when nobody wants to buy, right? All the excitement's
like right now.
Well, that's going to be up to everyone individually. But,
Right.
when you look at market sentiment getting drained out, you have to ask yourself, do I really believe that the thesis is dead? Or do I think that there's an opportunity here? And you also have to combat what has changed in your own mind as it pertains to this. And I think what changed for a lot of people over the last, I'll call it 4 months, is as you saw parabolic runs happen, timeframes compressed. People started looking for shorter returns, and all the metrics started getting tailored to reward really short-term execution. And when you look back at the company that was the most successful at doing this in Strategy, you have to remember that there were quarters where they didn't do anything, right? In the early day when they were scaling this, right? We're seeing them 5.5 years now, a little over 5 years into this journey. So we're seeing the result of years of steady accumulation. And as an investor, when you're in one of these high pace areas, it's really easy to convince yourself that you need to move your money constantly to try to find the fastest horse at that time, right? And constantly be rotating it. But for most people, most of the wealth gets created over long-term conviction bets, right? You have a thesis, you find an opportunity, you find the right entry point, and then you sit on your hands. And I think that's ultimately, now that people are going to get the chance to reset, it's going to give them the opportunity to analyze their own thesis and their own investing behaviors. I've had to do that several times over the course of my own investing career. But when I look back at Strategy, what I see was several years of slow foundation building and evolution in the way that they were deploying the strategy. When we're looking at the new companies, we're seeing companies that are plugging in further down that journey, because now we see the end result of all the trial and error that Strategy had to do. But launching one of these doesn't come without its own growing pains. We saw that recently with all the PIPE activity. And what's hard to see when you're doing those deals is that effectively that capital was coming in for startup companies, right? These companies weren't even public yet when those PIPE deals were actually struck. And so you get this overhang as these companies become public companies, and now those shares become freely traded, right? They're now available float that these companies or that these investors can trade with. And there's a path there as well. But my view is that's temporary pain. It is pain, no doubt about it. But it's temporary pain because it's laying the foundation and it's capitalizing the entity to move to the next phase. And when you have scale on your balance sheet and you've carefully crafted your capital structure, you're in a position where you can set yourself up and your investors up for a long-term win. And that's the next phase of this journey. So I look at all the compression that's happened. I'll admit that it compressed further than I thought it would. All the number of companies you now see that are trading at 0.8 MNAVs or even lower, I didn't think we'd see as many of them get down there as did. But I think that you're seeing an entirely new industry going through the growth phase, right? It had its parabolic run. Everyone got excited about it. You started finally seeing the success and strategy that took years to really develop in a major way. It got people moving to the smaller bets, hoping that they could capture that magic in a bottle and pick the next strategy that was going to be able to scale. You saw that blow off top. Now you've seen what I think is an overcorrection the other direction now, where everyone's decided that this can't work and they're not seeing the opportunity. And eventually we'll swing back to an equilibrium here as these companies get back into the market and continue to execute the strategy. So this is going to be a journey, right? There's no quick wins. Anything that comes easy, has some strings attached to it. So for most of these companies, they're focused on the long term. They're undeterred. I know we're undeterred. We see a very bright future here in this space, and we're just going to continue to execute on it from here.
Awesome. Yeah, it just reminds me of we were together New Year's Eve for a 100K party, and we went up to 126, and now we're kind of right in between that, more or less. It was at least 113,000 at some point this morning, and it's like we didn't move that much, but when you have amplified Bitcoin or levered Bitcoin equities, by definition, you're leveraged. You're going to move a little bit more than that, or twice that amount, or whatever it is. And that's just by definition. So
leverage goes both ways, right?
Yeah.
Leverage isn't a one-way ride up, right? It's a volatile ride, and these equities are designed to be volatile. And as we enter the next phase here, that volatility is going to continue to be a long-term feature of this strategy. So hopefully people are ready for that ride now.
Yeah, absolutely. Where can people connect with you online and Strive online, in addition to seeing you at all of your various appearances, events, the Hurdle Rate Pod, True North, and whatever else you're doing in your spare time?
Too many things these days, but for me, the simplest place to find me is just at Ben Workman on X.
Awesome. Ben, thanks for your time today and joining the digital conference. Super appreciate your time.
Absolutely. Thank you, Tim.
All right. I'm excited to welcome to the stage Mr. Kevin Bell. Kevin?
Thank you, Tim. I'm super excited to be here.
Good evening. Is it evening wherever in the world you are?
It's 3:30 in the afternoon here.
Oh, even better.
Yeah, works well.
So for those that are not familiar, you might be a newer face to some. Cadena Bitcoin. Cadena in Spanish means chain. Am I getting it right so far?
Absolutely. Yeah, perfect.
And what is Cadena Bitcoin? What are you guys doing over there?
Yeah, so Cadena Bitcoin is a new marketplace for borrowing and lending Bitcoin. And so we just launched last week. The language we use around borrowing and lending isn't perfect because we're taking vocabulary from the same banking rails that brought us agriculture and railroads, and we're trying to apply that to the digital economy. So, the product requires a bit of explanation. One way to think about it also would be hedging Bitcoin exposure with smart contracts. And so we have a peer-to-peer platform that allows clients to lend and borrow Bitcoin. And maybe I should back up and just say that Cadena Bitcoin is a registered Bitcoin service provider in El Salvador. It's also a no KYC platform, so it's a username and password access. There's no fiat on-ramps or off-ramps, so everything we do is on the Bitcoin blockchain.
Wow. I mean, that's a statement. Can you kind of take us through a little bit? I know, at least I appreciate a little bit of your background, both maybe personal and professional, your journey to Bitcoin, and then we'll kind of get into some of the details with present day. I think it's endlessly fascinating to hear people's stories and kind of give some color around like the.
Yeah, no, I think it's a good story. It's a good story. So it's worth, so most of my career was in the foreign exchange business. And so that's an over-the-counter market. It's a spread business, kind of counterintuitively. The smaller clients, you're taking a much larger spread. But the business is really about crossing the bid-ask spread as often as possible. And so there's some risk-taking that goes along with that. So that's kind of one side of it. but then because it's an over-the-counter market, there's a really big settlement risk issue or counterparty risk. So, if we're doing a trade and I'm giving you $11 million for 10 million euros, one of us has to let go of that money first. And so that creates a significant risk. And, I think one of the things that attracted me to Bitcoin initially was the idea that you had programmable money and you could really manage that risk. And so, all kinds of colorful characters in the foreign exchange world, with one firm, what I learned, and so before crypto trading, to date myself, often people would trade currencies online and, use leverage and other things and, in some ways maybe gamble, entertain themselves with this type of product. And, what I came to learn was that some of the exchanges in this space would basically just take the other side of their client's position because they knew that the client eventually had to close that position to take money out of the platform. And so, from a risk management point of view, you would have these exchanges with, $50 million positions that would be offside, and if everybody asked for their money back at once, it wasn't there, but somehow the business operated. And, I think we've seen some of that kind of creep into the Bitcoin space. There was a firm in Canada called Quadriga many, many years ago, amassed all kinds of funds for the idea that they were buying Bitcoin. And then when people wanted the actual coins, the principles disappeared. And so, foreign exchange, I think about from kind of settlement risk and market risk perspective, but my experience was really helping, commercial, corporate, institutional clients hedge foreign exchange exposures and deal with global macro risk. And so I left that world in 2015 and then went to kind of explore the world of personal finance. I opened a mortgage brokerage. And so that kind of segues very nicely into the problem that we're trying to solve. And really there's, from my perspective, two issues with the mortgage business. One's kind of a technology issue. And, the technology is a lot of paperwork. The matrix requires, identification, income documents, liability information, assets, and a credit report to get a mortgage approved. If that goes well, we appraise the house. If that goes well, we send them to an expensive lawyer. If there's any expensive problems any problems in the process, we have expensive judicial processes and time. Everything can get resolved. And so that's kind of one, I don't know, way to see banking now. And then the second problem is really an economic problem. And, I think the Bitcoiners understand this problem as well as anybody. But, in that world, winning is essentially the bank creating money out of thin air, giving it to somebody so that they can invest in a non-productive asset that they quite likely overpaid for. And, nobody can figure out why their kids can't buy a house. And so, I think this Bitcoin thing solves quite a few problems related to that. And then, maybe a bit more on the journey. I'm Canadian. Mm-hmm. So I had taken out a bunch of cash from the bank machine during COVID, as we do in preparation with the toilet paper and hand sanitizer. And I found this sitting in my desk a few years later, and I was going back and forth to Ottawa. So I was giving cash directly to the truckers. And then Comrade Trudeau started freezing everyone's bank accounts who had donated to this protest. And so I was very fortunate that I had given cash, and that was kind of, dumb luck. And I think I'll say, and so for me, that really kind of cemented this issue with counterparty risk. It really flipped it on its head for me because I thought, if everything's in the bank, it's safe and I don't need to worry about it. But, turns out that's not always the case. And, that's not just a case for Canada. That's, an international issue, and I know in the United States they have banking and debanking issues also. And then, I have the CFA. So from a modern portfolio perspective, I've been thinking a lot about Bitcoin. And if you have these assets, you have a bond that's giving you this return and has this standard deviation, and stocks give you this return and this standard deviation. If we introduce another asset into that system that has, a substantial different profile from a risk return perspective, by adding that to a portfolio, we're going to increase the risk adjusted return of that portfolio. And, that is what they teach you in finance. And so, I'm kind of stunned and still waiting for, all of TradFi to really grasp this concept. And to me, it's unclear whether that, if it's not 15 years, is it 20, is it 25? Like, at what point do you take your head out of the sand and, realize that this thing is actually real and pretty important? And so that's my story.
Got it. Can you walk through like the foreign exchange markets, mortgages, like other existing Bitcoin lending solutions in this space, and how all that kind of like?
Yeah, and so I came to this kind of naturally. So I moved to Costa Rica a few years ago from Canada, and I have two assets. I have a house and I have Bitcoin. And if I wanted to borrow money, it's really expensive not being a resident to be able to borrow against a house in a Latin American country. And so I was looking at the options to use my Bitcoin as collateral. And, still, I think they fall into two main categories. And one is this centralized solution where you're sending your coins to a custodian who is holding on to the coins and then giving you fiat. And you hope you get it back at the end. And so to me, that was really a non-starter. Kind of didn't fit with the Bitcoin ethos, didn't fit with what I thought was possible with programmable peer-to-peer money as I understood it. And so, my rabbit hole from there involved reading a bunch of things Nick Szabo had written about smart contracts and trying to figure out what was possible. I think the other thing I'll say I discovered in this process is there's this, people seem to think there's a trade-off between the programmability of Bitcoin and security. And, I would just say that Bitcoin is what it is. And there's a lot of programmability that has not been explored at all. And so, we were able to do something here that I think is going to have a lot of application in terms of developing credit markets for the Bitcoin economy. And so, the other thing I'll say about credit markets, I think people often in the Bitcoin space, maybe not the Treasuries space, can be a bit wary of credit, but credit is what actually helps grow the economy. I mean, in Costa Rica, they don't have established credit markets. The GDP per capita is a third what it is in Canada. In the US, you have established credit markets, the most liquid in the world, and you also find the most innovative companies and the highest GDP per capita. So from my perspective, credit markets are essential to growing the Bitcoin economy. And when I looked at those solutions, which to me seemed like, TradFi businesses built on Bitcoin, it just seemed to me that there had to be a better solution than that.
And how did that whole process work from there has to be a better solution to where we are today?
Yeah, it's a great question. And so it's a bit over a year process. The first 4 or 5 months, we're talking to different people who wanted to build a solution, on some type of second layer, some type of side chain, or again with a custodian. And so really, the hardest part for me was finding the team of Bitcoin programmers to make this a reality. And as soon as we connected, I think we were, pretty clear that this could be done. In July, at the beginning of July, we put out an MVP, really just to test the technology between friends and family. and it worked. It was a bit of a ugly app, and then last week we put out kind of a 1.0 version of the technology, kind of a nicer front end, hopefully people think, greatly improved experiences with an iOS app and an Android app. We added loan to values, and so we had a 50% loan to value product and an 80% loan to value product, and a 30-day, 90-day, 180-day, and 365-day loan now. And so again, I'm using the word loan as, a bridge to TradFi.
Got it. If there was a better word, what would it be?
Yeah, I'm open to suggestions, but really, for us now, we put a lot of work into building this marketplace, and now it's working, and we're talking to a number of different exchanges, liquidity providers, and people who have interest in adding liquidity on both sides of the market. And from my perspective, there's really, again, this traditional market where people are using these Bitcoin-backed loans, sending them to a custodian and paying, 12% interest. With those solutions, they also face liquidation risk, which is not an issue with our product at all. So there's no margin calls, no liquidations during the term of the loan. So that's one side, is people looking for leveraged Bitcoin exposure, maybe treasury companies, maybe whoever. And then on the other side of the market, there's a number of people who are looking for yield, and often, in this space, a lot of that seems to be, I'll call them alts, to be nice, but on that side of the market.
Got it. Where do you see Cadena like 12 months from now?
Boy, it's a good question. One day at a time is kind of how we take things here, and like doing the most important thing that we need to focus on today. I do think there's a lot of interest in kind of this digital credit idea. And, what I'm proposing is an alternative view of kind of trading, TradFi audited paper claims held by a third-party custodian. And we're dealing with Bitcoin directly. And so, I recognize that in that world, people have alternatives to borrow money in a margin account and a number of other ways. But, I would just point out that is a different underlying security.
Got it.
I can walk through a loan if that's helpful, and
yeah, absolutely.
It's kind of but I mean, it's two transactions. What the result is two transactions on the Bitcoin blockchain. And so, I'll just walk through an example. If we had a 1-year loan at 50% loan to value, and so if I'm the lender in this case, and I want to charge 10% interest, and maybe just to explain the site, the contract sizes are standard 0.1 Bitcoin contract size. So the way we have it set up, it's a $11,000, depending on the day. Originally we had a 1 Bitcoin contract size, but wanted to make it accessible. So we still have that running in the background. In addition, we've created a 0.01 Bitcoin contract size. And I think we'll, once we have some liquidity in the market, offer those. But, using an example of just say 1 Bitcoin, $100,000 Bitcoin price for simple math, I'm the lender. I'm putting in 1 divided by 1.1 of that, which is 0.454545 Bitcoin. And it's easiest to understand this product from the lender's perspective. And so today I'm putting in $45,454 worth of Bitcoin. And a year from now, when this contract settles, I'm going to get $50,000 worth of Bitcoin. And so from the borrower's perspective, again, it's a peer-to-peer situation, so they're literally opposite sides of the same coin. The borrower in this case is putting down 0.545454 Bitcoin at the beginning in the funding transaction. And then for the settlement of the trade after a year, what they're going to receive is whatever remains after the lender has received their $50,000. And so, it's just this time-locked on the Bitcoin blockchain collateral pool that is sitting securely and waiting for a price to determine how it's going to be paid out between the borrower and the lender. And so, my hope in offering this product is that we can, cut out a lot of middlemen in the financial universe. And now, what this provides me as somebody who has Bitcoin is now I can, hodl Bitcoin. I can leverage my Bitcoin exposure, or if I have fiat liabilities, I can generate fiat income from the Bitcoin. And so, everyone's their own bank now in the Bitcoin economy is how I would describe that. And so walking through the technology, the app is to sign the transactions. As far as I'm aware, we've built the first commercially available app that allows for signing of adapter signatures. If anyone else has one, please let me know. I'm interested in talking. And so what's happening is the clients are signing the funding transaction initially, and they're also signing 5,000 transactions of what could possibly happen on the back end. And once there's an oracle involved, once the oracle attests to the price, whichever whichever settlement needs to take place is what gets published on the Bitcoin blockchain.
Got it. Awesome. I guess I'll throw it over to you for closing thoughts, and where can people find you, find the firm, and any other touch points that are important to shout out.
Yeah, of course. On Twitter, or X correctly, Kadena Bitcoin, kadenabitcoin.com, and you can email me at kevin@kadenabitcoin.com. Really interested in connecting with, I had the opportunity to go to Montreal last weekend and connect with the Bitcoin community, and the Bitcoin community is definitely the best community. So, I'm happy to talk to anybody who has questions, who's can provide support, liquidity. Really looking to spread the word and our message of love and decentralization at this point. And so, I really appreciate the platform, Tim. It's super helpful to be able to get the word out and have, people like you spotlight innovation taking place in the sector.
Absolutely. Thank you, Kevin, for your time and joining us today. And we look forward to following along and catching up with you from time to time.
Sounds good, Tim. I really appreciate it.
Absolutely. Thanks so much. Cheers. All right. Next up, I'm going to wait for one gentleman to turn on his video, but welcome to the stage, Mr. Dan Hillary. Dan, how are you, sir?
Good. How are you, Tim? How are things?
I'm doing well. Also bring to the stage Mike, also known as Grain of Salt. How are you, Mike?
Fabulous. Can you hear me?
It's a little quiet.
It's a little quiet. Okay, let me
Yep.
boost the volume. Go ahead.
Yep.
Is that better?
A little bit more.
A little bit more. Okay. Is that better?
Yeah.
Getting there. Yep. All right. What's going on, gentlemen? Any takeaways from the market sentiment recently, from Bitcoin Alpha out in Santa Monica? I think we are all comfortable saying we were out there attending and participating.
All true. I mean, Yeah, I think it was a great event. We got to speak to some of the smartest people in Bitcoin and working in the Bitcoin system. So, I felt very re-energized. I think the recent price action of Bitcoin is not something to be too concerned about. Lots of sell pressure, and if you look at the general macroeconomic indicators, the economy, the underlying economy, except for AI capex spend, really hasn't heated up yet. So I'm super optimistic about Bitcoin moving forward, and I think we finally have crushed the 4-year cycle narrative. Mike?
Yeah, I totally agree that the 4-year narrative is pretty much done. I think that we're going to see next year that has matured as an asset class over $2 trillion, and I think that we've seen that even an asset like gold, which has a very large market cap, it could also run quite a bit in a short period of time. So people like to quote something like, law of big numbers. A big asset can't move fast. Well, we've seen this happen with a stodgy asset like gold. I own no gold, but good for them. I don't wish anybody ill will on that, but we've seen that even large assets can actually have big percentage jumps. So good for them. But down in Santa Monica, the amount of conviction that's there, and Tim, just going back to this, thank you for putting this together with, whatever we have. I'm looking right now. I think we have like 48,000 people on the call. I remember last year just saying to you, you should go create a podcast and go interview Tad, and all of this happened, and you did it. And now it's a year later. I just can't imagine, 48,000 people listening to me. I mean, I think this is really pretty something amazing. Congratulations.
Thank you. And yeah, I was actually just in the studio with Tad earlier this afternoon, and we did our 1 year, right? We sat down 1 year ago, November 5th of 2024. So we did the 1 year anniversary podcast. That'll be out later this week. So that was a lot of fun.
I think, going ahead, to say some things different, and we'll be a little bit more technical here, Dan and I think what I posted, I've been relatively quiet on X recently. I think that people have to be able to look at things and objectively and come to their own conclusions. And sometimes that may be counter to what the group of people are saying. And that could be large communities on X. And sometimes the math is correct. You look at the math and it's not the math that's wrong. There's something else that's causing some fundamental changes. And I think that's the takeaway you need to look at it. One of the terms that I'm going to say, I've never posted this before, I never talked about this, but basically, liquidity is the enemy of convexity. And this may be something weird. Convexity means for each dollar amount that comes into something, that it jumps up in price. And so the takeaway here is that having massive liquidity is not necessarily your friend. Something in short supply, and I'll give a good example. Bitcoin, we're getting a lot of feedback here, but Bitcoin in short supply, we all know it has a fixed dollar amount, and it's approximately 1.5% is the emission rate. But you want to have a low float of shares to drive that price up. Those supply and demand dynamics are critical. I'll take any questions on that. But that's, you'll see me posting about this, that liquidity is the enemy of convexity. And we want more convexity. And convexity just means that once people run to buy something, it runs up fast. If there's lots of liquidity, if there's lots of shares around, or if Bitcoin had 210 million Bitcoin, the price wouldn't go up. So scarcity, whether it's for shares or Bitcoin or power or data centers or so forth, those are fixed supplies. You can't just go run out and manufacture, a power plant, right? And I think that, that's the interesting part to look at now.
Yeah, and everything Grain's saying is totally spot on. I mean, that's kind of how we've pivoted. I know Grain was extremely early in the MicroStrategy trade, and I hopped in there as well. And we were, bulls during a time where there were very few Bitcoin treasury companies, very limited amounts of share dilution, and low floats for these equities. So they could get squeezed up. And that's where you want to position, whether it be long calls or a risk position into those sorts of equities. We've been investing in some of the miners recently because we like kind of the low share dilution in the form of CleanSpark, and we appreciate kind of the AI HPC moat that some of these players have, or the power infrastructure moat they have to switch over into those different types of revenue generating models, especially because some of these companies aren't doing the traditional Bitcoin treasury playbook, which we've seen play out in a detrimental manner, but instead they're kind of generating revenue internally, keeping the outstanding share count low and allowing those equities to be squeezed. If you're going to deviate from Bitcoin, you want the possibility of a squeeze. That's kind of how I look at it.
Yeah, is my microphone better now?
So much better.
So much better. Okay. So what Dan was saying is, it's the whole thing when you have this, really nice podcasting mic and you don't have the app running correctly on it. So what Dan is saying is exactly right. Why does price go up on something? Price goes up because there's a lot more people buying it. And what really makes it jump is that it's really scarce. And so what I want people to think about is that, look, why do I like Bitcoin? Why do I love Bitcoin? Is because the US has a budget deficit of $2 trillion a year. And then there's the interest on top of that. You have CPI at 3%. Everybody that knows me privately, what do I say to people privately? Got CPI 3%. Let's just assume it's a little bit higher. And they're printing over the past 25 years, 6.5%. The budget deficit is never getting fixed. Anybody wants to take the other side of that bet, let me know. So if you have a $2 trillion deficit, how do they fill that deficit? They print the money and it balances out. And so what happens is that that's why there's more dollars going. So Bitcoin's not going away. The price is going to run. Do I know the exact date? No, I wish I did. But what's going to happen is anything in short supply. So when I'm not going to name any miners, but when I look at miners, why do I like miners? Well, because they like Bitcoin and they're very used to having power contracts, understanding that relationship between spending spending cash, which is not a hard asset, but electricity is, the contract for the electricity is, the data centers. If your data center is full and your new data center is going to take 2 years to build, you're out of capacity. So the ability to bring on more data centers, acquire more chips, whether they're NVIDIA chips or so forth for AI, but you have to understand the power markets. And that's exactly where we are today. So from my view, Bitcoin's going to do great. And have we pivoted a little bit? Sure. But does that mean that, I want to thank Michael Saylor for what he has done by creating this whole Bitcoin treasury industry. I mean, that is huge, because if Bitcoin is good for an individual, it's good for a company, and it's also good for a nation. And we'll see nation states adopt it. I don't know when in the future, but that's the one thing we want to impart. If there's any CEOs of Bitcoin treasury companies that are watching this and want to talk to me, reach out.
Mike, the last time we did a digital conference and we were talking later in the evening, you said something that is very common sense, but also is like, wow, that's a great point, which is we'll know early next year whether the cycle is holding or not. Because if the price goes up next year to new all-time highs, and it almost seems no one knows the future. This is not financial advice, but
correct.
Like all of this, the interest rates are going down. I mean, just all of the different factors seem to be pointing in the direction that risk assets and maybe even safe haven assets may be going up over the next little bit, and that really would put that 4-year Bitcoin halving cycle kind of to rest.
Yes. So let me comment on that, and then Dan can chime in. So basically what I was saying is that 18 months after the halving, so 2017, 2021, and now in 2025, you should get an all-time high. So it's about a year and a half after the halving, you tend to get the high of each peak cycle. So what I'm saying is that because Bitcoin's a $2 trillion plus asset, to next year, if it doesn't get too high this year, in theory, not much room for it to drop. So if Bitcoin hits an all-time high in 2026, that means that the 4-year cycle is dead. And why do I think that's going to happen? Cue what I just said 3 minutes ago. $2 trillion deficit, CPI at 3%. They're not going to fix the interest on the debt. And the other thing I'll throw into this is that year after is in the US is a midterm elections. And so what you tend to see is, whether it's through luck or timing or whatever, the Fed's probably going to have to cut to avoid more more unemployment. Now, as of right now, our government is shut down. So once those numbers come out, I believe October 29th is the next Federal Open Markets meeting. Dan, you could chime in on this. You talked about this. That's my takeaway, what I said to you. If Bitcoin takes an all-time high next year, then I believe the 4-year cycle is permanently dead and it has become a global asset.
Yeah, I think Grain pretty much laid out the entire framework for looking forward. And I think a big mistake here is expecting a massive drawdown. In the hedge fund and in our personal accounts, we prepare for drawdowns, but we don't expect one, much like you could have expected going into 2022 or 2023. And I think the reason for that is we've seen subdued PMIs, that's the Purchasing Managers Index, which pretty much gives an overview of the economy, less the CapEx spend in the top AI stocks. You get a sense of if purchasing orders and consumer confidence and business confidence is expanding or contracting. And there's a really strong correlation between the PMI and the Bitcoin cycles. And so I think for Bitcoin to really have an exponential bull run, that getting up to prices of 250 in short order, you'd need to see the economy start to overheat. You need to see inflation tick up, I think, a little bit with rates coming down. And I think those things will happen, but it really looks like they're poised to happen in 26 as opposed to 25. And I think a lot of the froth people are seeing in the market is a result of this CapEx build out and this AI infrastructure build out. And it's continuing and it's raising valuations, but we haven't seen that sort of bubble, for lack of a better term, flow into the economy in general and then flow through to the Bitcoin prices. So I think good things on the horizon.
How does AI play into all of this? Is it here now, or is this more of like a few years from now, all of the AI agents are going to want Bitcoin, and it's more of a quote unquote use case at that point? Or any other thoughts on AI?
So I'll chime in on this. I think I'm pretty good at Excel, but what I am capable of doing in AI is absurd, because I know, like, for instance, when I want to create a document, I'll say make the headers, half inch on top, half inch on the bottom, center justify, left justify. I'll say make an Excel spreadsheet. I want to use linear scale for X, do do time on the bottom, Y scale. I'll do 3 Y scales. So I always know what the chart looks like at the end. So if I had to do that in Excel, sometimes that would take me half an hour to go do it, to get it right and make it nice. I could do the same thing in AI now inside of like 5 minutes. So whenever anybody sees me post a table or a chart, not only did I do it in ChatGPT, I also ran it through either Perplexity or Grok to verify with a different AI to make sure it's correct. And I could do that in minutes. And that used to take me at least a half an hour to an hour. And now I just do it. This is like fun for me. Like some people look at baseball stats. So it has changed everything. The other thing that is done is that any type of 8K document or 10Q that you look at, you can import that into AI, and I don't have to read a 100-page document. I could say, search the document for this, or I could say, search Edgar, the SEC filings, for this in an 8K document. And I do that, and it comes back 3 minutes later, 2 minutes later. It's like, oh, we searched 50 documents for you for the past 2 years, and that's not in it. I'm like, oh, well, go find it for me now. And it does. So AI is, the people that use it have a massive advantage. It is not even close. And so if you're not using AI, please learn to use it as fast as possible. And probably, you need to learn how to query it with these questions. And that's the part. Like, if you want to go on a vacation or a trip, you ask AI, hey, I'm leaving from this airport to this airport. Give me the best flights, times, dollar amount, and what's the best hotels to stay at for under $100 a night. And it will tell you that. It's crazy.
So we have breaking news from the Kobesi letter. I just retweeted it about 60 seconds ago. OpenAI is now the world's most valuable private company, valued at $500 billion. That's 3.5 times higher than Spotify's market value of $144 billion, and almost equal to Netflix at about $520 billion. OpenAI estimates its annual revenue would reach $13 billion in 2025, 3.5 times higher than last year, 2024. So by comparison, Netflix and Spotify's annual sales are set to reach, 45 billion, 17 billion respectively. Meanwhile, OpenAI's estimated subscriber count is about 20 million compared to Netflix's 300 million and Spotify's 276 million. And the last sentence just says OpenAI has a lot to prove. Your reaction?
OpenAI has nothing. They've already done it. Look, I pay the subscription for ChatGPT, Perplexity, and for Grok. I pay for 3 AIs each month because it's that critical. Now, if I had to cut one, I would cut one. But for me, the value for paying $200 a year, I think that's what Perplexity was. If you pay it up front, it's $200 for the year. The value that you get at far surpasses that dollar amount. And what I would tell you is that I think they've already proven themselves. And I will tell you, it's the fastest that I ever went from an unpaid subscription to a paid. It was like, I don't know, 2 hours. Once it limited the amount of queries I could do, I was like $20 a month. I don't work for these companies, but that was very easy for me to buy that. I mean, Dan, how often do you use different AIs?
Consistently, everything, right?
And I do that, and not only do I work in one AI and generate a workflow, and I'll spend maybe whatever half an hour in it, and then I just give it cold into Grok, and I don't tell Grok any context, and I say, Grok, analyze this. Is this plausible, correct, or whatever? And it's amazing how well that it backs it up. Every once in a while, there's something that it misses, but we're going into a place where we have synthetic or artificial money, which is Bitcoin. There's a reason why they don't call it, there's a reason why we don't call it synthetic intelligence with artificial intelligence. But the other thing is that everything has shifted. I've said this before in the macro indicators. I almost wear no cotton. All of the fibers are all, Viore, Lululemon, Bird Dogs. I don't get paid by any of those. I'm not an influencer. But everything has been virtualized. Netflix has put Blockbuster out of business. Amazon put Sears out of business. This is all, anything that can be virtualized or changed will be done. Robo taxis, unfortunately, are taken away from real taxis, although I still use real taxis. But that's where the world is going. And you have to adapt for that. It's, again, you have to pivot. If somebody says, I don't like AI and I never want to use it, that is not a winning strategy. It's just not winning. And for those people, I try and help them along, but if they don't, I'm like, it will make your life easier if you learn how to use it. So Tim, are we having like a cohesive picture here of where the world's going?
To AI and Bitcoin, with gold as a safe haven, maybe it's almost like a trade at this point. It's like, for all the noise of gold and how well gold has done this year, but if you zoom out and look at it against Bitcoin, it's like, oh, I don't really know if I want to be in gold that much.
But I'll tie it back. Gold is Blockbuster and Bitcoin is Netflix. Gold, everybody knows this on the call. I don't need to repeat this. You want to ship gold, go find an armored truck to ship it. It's not particularly easy to transport. You got to verify and so forth. Everybody wants to hit click. I want to get an answer with AI in seconds. And so with the Kobayashi letter, again, I'm not sponsored by them or anything. That guy, the guy that founded it, I didn't even know the guy was a real guy. He was on CNBC today. I wasn't following him. So that letter is awesome. I don't even pay for the subscription. And I think that I think we're going to also see Bitcoin treasury companies pivot and make changes. What are those changes? Don't know. But what I can say is that they're not going to keep on doing the same thing. They're going to make changes probably, I don't know, next 90 days, next 180 days, and they're going to function differently than what they did for the past year. So I am bullish on them if they make changes. Strategy is in a class by itself because there's 640,000 Bitcoins. But the smaller Bitcoin treasury companies will do some form of a pivot. Do I know what it is? No. But I think if they do make a pivot, I think that we get Bitcoin goes to an all-time high next year, they could come back very, very quickly. And everybody will be like, oh, what happened? Like, well, the world changed. We knew it was going to happen.
Yeah. Any thoughts from either of you on kind of these small cap stocks and their correlation to Bitcoin. I mean, by definition, if you're levered long or amplified Bitcoin or whatever term you want to use, then maybe you're 2x Bitcoin, but it seems to be more than 2x in both directions.
So, Dan, I seem to be monopolizing, but you just jump right in. So that's where this liquidity is the enemy of convexity. So when you see a vol number, if a vol is 50%, vol's 50, like, okay, what does that mean? That means it can really go 25% to the upside, 25% to the downside, and that's a 50 vol right there. But it could go 50% to the downside, and everybody's like, well, I don't like that. Go 50% to the upside. So vol is some range, right, between 50% to the upside, 50% to the downside, or 50-50. And so the other thing is that you have lots of liquidity, that's where it becomes easy to sell, to transact things. When you want a price to go up, just like Bitcoin, you want a fixed supply. So going back to what you're saying is that no financial advice, you have to look at maybe the narrative mathematically is correct, but after this past year, maybe there's going to be a change happening sooner rather than later. And that's why Dan said we pivoted, to things that have other supply constraints, power, cooling, data center space, when I say power, meaning energy, on the AI play. And if they have smaller market caps, then they're more interesting because, there are groups that are talking about them 24/7. Dan, you got to comment on that? Yeah.
No, I completely agree, Grant. I think the one indicator we're looking at a lot is the IWM, which is the Russell 2000 small cap index. And if you look at the correlation of that between the business cycle, we're just breaking out from a 5-year range there. While Bitcoin obviously has grown in price because of adoption trends, this, that, and the next thing. Small caps have barely taken back their all-time high. So there's a lot of stocks out there that just aren't performing the way we've kind of been trained to look at only the top performers in the Mag 7. So I'm super bullish on Bitcoin, Bitcoin's fire and energy and just liquidity pouring back into the system. Even though people are saying the liquidity cycle's top and the top is coming, I don't think the business cycle has. So we'll have to see how the next year plays out. But global liquidity, while it drives asset prices, doesn't. If you look back at 2018, if you look at the global liquidity cycle, liquidity peaked and came back down based on kind of a Michael Howell global liquidity chart, but asset prices stayed relatively unchanged. So I actually expect something like that to happen in the next couple of years.
What do you guys think about Mike Alfred's takes? He literally 2 hours ago, I just retweeted an image of a ball just like exploding up out of the pool.
I don't think so. There's just been so much OG selling, which makes sense why the price is where it is. But it's going to take time to reclaim the all-time high and then keep moving past it. Like if you're rotating that much supply, that many coins, it's like working through a common equity ATM. Like there's just a ton of supply. New holders have to buy it up, and then the pressure gets put on the outstanding flow. And until then, I don't think you're going to see this, 100% pop in a month yet.
Yeah. So let me here's some hopium, but not financial advice. So the amount of Bitcoin in Bitcoin Treasuries and in Bitcoin spot Bitcoin ETFs is 1.5 times larger than was on the Bitcoin exchanges. So that crossover, somebody could fact check me 6 months ago. I just posted this a couple weeks ago. That surprised me. I didn't think it had happened yet, but there's 1.5 times many there. So and then we saw BlackRock basically go to whatever $100 billion into IBIT. To me, it's the most successful it's the most successful ETF of all time, getting to $100 billion the fastest. So do I think that those people, whenever somebody says to me, oh, it's going to go to makes the flippant remark, oh, Bitcoin's going to go to zero. I'm like, yeah, it could go to infinity. But I don't, going back with what Mike Alfred said, I will tell you that this is true for most people, for many people. Agree, the reason why my X handle is grain of salt, take everything with a degree of skepticism. And so what I'm saying is, I don't think we're going to have, a God candle or a mega candle or the beach ball is going to burst up. It will be interesting to see what happens on October 29th with a rate cut, and if the government, fixes the shutdown. But this shutdown could go on longer. I haven't researched it. I'm not an expert because I haven't researched it for 5 minutes in the past week. Let me research it for 3 minutes and I'll be an expert on it. But I think, saying that jokingly, I don't think the shutdown helps, but I think that once the shutdown's over and then people can go forward, and the longer the shutdown happens, the more likely that they're going to have to print more money.
Mm.
So
has anything changed in your personal lives, Dan and Mike, because of the government shutdown? I mean, I forget that it's happening. I'm like, I didn't even know, didn't even remember. I mean, I knew, to be clear. I don't know. I mean, the AWS outage yesterday affected my life more than the government shutdown, just personally.
Yeah, I think it was kind of weird. TradingView yesterday, the Bitcoin price didn't move for me for like 3 hours. It wasn't moving. I was using the Coinbase reference price, so I just loaded another price and it was working, which was kind of weird that it got stuck. I don't know if it was AWS related or not.
Yeah.
So I don't know. I didn't get the alert that I'm not on Coinbase. The alert, oh, Coinbase went down. Were there any alerts that Coinbase went down yesterday?
Not that I saw, but anything's possible.
Yeah. I could, I think that the takeaway right now, what's going on is that you'll probably have problems, if the shutdown goes a lot longer. Like if the Federal Reserve can't announce their interest rate that they're going to do on October 29th because they don't get reports in order to make that decision, because they might say we're data dependent, that would be problematic. And that I think we're waiting to see that. So, but I would think that those people would necessarily, that make those reports, those should be, critical infrastructure.
Dan, CIO of Stravera Capital. Tell us about Stravera. What is it? What are you guys doing? Where are you going?
Yeah, we're just a small private placement hedge fund. We're lucky enough to have Grain as an advisor, and we're trading around Bitcoin Treasuries at one time, no longer, energy, equities, Bitcoin mining, equities, and a lot of volatility arbitrage between IBIT and different other Bitcoin-related companies. So all our hedge fund performance is on our website, straveracapital.com, and we take any sort of accredited investor who's looking to diversify out of their current Bitcoin or Bitcoin equity exposure.
So you're a vol trader, or would that be or no?
We use it to our advantage, but not
fair
only.
Enough. Well, fair enough. Mike, anything to add?
No, what Dan has said is correct. So the trading in Stravera is different than what I do in my personal accounts. So with that, I've talked to Dan about the strategies those are more hedged and more conservative than what I do. And so from that perspective, I think that, if you're interested in it, you could reach out to us and we could talk about it. I think the key part here is that we're always changing with new information. Getting stuck in your same thinking is not good. And that's one reason why I use the word pivot. You're going to have to make decisions, based upon information. And based upon that, you may say, well, this worked great for, a year, 2 years, 3 years, but now things are different. And based upon that, that's what we learn from. So we're constantly evaluating what we do. And then from there, we go to different assets in order to get gains.
What's your take on the historical reality between now, which was Uptober, now it's just Voltober, to through the end of the year, right? The calendar end, the fiscal end, the guys on Wall Street end of the year, getting those gains maybe, hopefully, before the holidays hit, which is really not that far away.
Want me to go?
Go ahead, Grant.
Yeah, look, sorry, I was getting a phone call. So how do I see it? it's the same thing every year. Many people in the Bitcoin space, they don't care about the year end. They're like, well, it's Bitcoin. I'm going to hold it till I die. What happens with with other people? I don't have a day job, so I have to buy and sell in order to fund my life. But what does happen at the end of every year is tax loss harvesting. This is not a surprise. Everybody should know what tax loss harvesting is. So if you made a bunch of money on something and you lost a bunch, it's not financial advice. It's most basic, but not financial. You made a bunch of money on something, lost a bunch of money, and what you do is if you close that position before the end of the year, it reduces your right tax loss harvesting. Now, if you wait until January 2nd to do it, it opens back up again, help you at all. And so that date, December 31st or whatever the last trading day of the year is, that's where people will look at it and say, oh, I had some winners here, but I had some losers. Well, I'll sell my losers, not because I don't think they're going to go back up again, but because if I sell that loser, it offsets the gains that I made somewhere else. I don't sell those, right? It offsets the gains. Then you wait 30 days or 35 days so you don't have a wash sale, even if it's a new tax year. And then you just rebuy back in. Now, if you're so concerned that in those 30 days it's going to run right up, I mean, for me, on that, I would look at that tax loss harvesting. And if people get to the end of the year, they see that. In other cycles, and I'll give you a good example of what happened in the NFT cycle of 2021. People make a bunch of money in Bitcoin. They go buy NFTs, non-fungible tokens, right? So they make a huge run up in Bitcoin. Then they pivot into NFTs. NFTs go way up, then they come way down, right? Well, they sold all their Bitcoin. This is what happened in 2021. Well, tax day is April 15th in America. So now all of a sudden they get to they do their tax returns like, oh my God, you made $1 zillion in Bitcoin. You made $100,000 in Bitcoin. And they're like, well, you got to pay your tax bill. Let's say it's long-term cap, 20 grand. They're like, yeah, but I lost all my money. I bought, NFTs. Well, you should have go get your time machine and go back to December 26th and go sell your losses in your NFTs. And so many people didn't do that, and they're like, they got a tax bill. So that happens every year. And so I'm not giving any financial advice. You should go talk to a financial advisor, an accountant, whoever. You should always evaluate your winners and the ones that have gone down in value and say, what do I do at the end of the year in order to reduce taxes? And that is a basic understanding of what's going on. Now, if you never sold anything, then you don't have anything to worry about it.
Dan, anything else that we didn't cover? Any closing thoughts? Where can people reach out, find you, find the firm?
Dan, you're on mute.
Yeah, if I'm not frozen here. Yeah, you're good. Can you guys hear me? Yeah,
we can hear you. Yes.
Cerveracapital.com. Yeah, cerveracapital.com.
A lot of anticipation for that. That's good. Okay, we're on the edge of our seats. Is Dan frozen? Will he come back? No, you don't look frozen, and we hear you just fine. So might be some static on your end, but loud and clear over here.
I'll wrap up, Tim, from my side. If you have someone to go to next, what I'll say is this: there's going to be a change in the industry, in the Bitcoin Treasury industry. It's going to happen. And I don't know what those changes are. I have some good ideas what would help. So from that perspective, if any Bitcoin Treasury companies want to reach out to me, a grain of salt at Z06, Z07. I'm a car guy, so it's like the worst at symbol to have. But reach out to me. I'd be happy to talk to you and see what we could do in order to change the trajectory of Bitcoin Treasury companies. And with that, I am very bullish on Bitcoin and the fact that I don't think the budget is going to get fixed ever. So they're always going to print. It's going up forever.
And I guess Laura is going to be, Ladozier, I think, tweeted this today. Laura is also going to be kind of in the history books forever because of the saying, right? It's going up forever, Laura.
It is. And you know what? Anybody that, the bummer of where we are today is anybody that owns assets, hard assets, whether there's maybe 100 stocks in the whole stock market that really make all the gains. In fact, the Mag 7, if you take those out, then the S&P 500 almost has no gains over like the past, 5 to 7 years or 10 years, whatever it is. And so it's always the asset holders that win. And so the only way you can win is to become an asset holder. And you got to be smarter than the other people that are doing it. Buy and hold is a completely plausible strategy, a completely plausible idea to just do that. But after you've been in it for a while, you want to take a little bit of leverage and see what happens. And I think that's where we are today. And with that, Tim, thank you for doing this. I'm checking right now, 51,000 people on the call, which is crazy. When's your next speaker coming on?
They're coming up soon. We're going to take a little break as soon as we're done here.
Yeah, I just want to say again, congratulations. I will tell us the people, I had no idea what would happen after Santa Monica last year to where we got to today. And today I feel the exact same way. I think that by next year, if the price, when and if the price runs, we'll do these calls with 100,000, 200,000 people on it. And that's where we'll be. And I think, congratulations and all the hard work.
Awesome. Thanks for the support. Great to have you on. Appreciate your time. And we'll obviously check in with you from time to time. So thanks.
Sounds great. Take care.
Thanks. Stay right there. We'll be back in just a few moments. Welcome to the Bitcoin Treasuries Digital Conference for October 21st, 2025. Bitcoin custody is evolving, and OnRamp leads this change with multi-institution custody, eliminating single points of failure. Instead of one institution or complex private keys, OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault backed by 3 independent, institutional-grade custodians. No single custodian can move funds by themselves, providing an unprecedented level of security that traditional custody solutions simply can't match. Protected by a $100 million Lloyd's of London insurance policy, all transactions are fully auditable on-chain, never rehypothecated, and executed only at your explicit direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp delivers comprehensive Bitcoin financial services, including lending, trading, inheritance planning, IRAs, and more. OnRamp functions as your private banking partner, coordinating key holder activity, removing technical burdens, and providing a personalized, trust-minimized experience tailored to your specific wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps secure generational wealth with unmatched security and peace of mind. Visit onrampbitcoin.com today to learn more, sign up, or book a free consultation with their team of Bitcoin custody experts.
Everyone should be able to save and protect their wealth across generations. We built this company so billions of people around the world can take control of their financial lives. We've reimagined savings and protection from the ground up with digital money and modern technology. We're the world's first Bitcoin life insurer. For the first time, people can save, protect, and pass on their wealth entirely in Bitcoin. 4 years ago, we started working directly with individuals. Today, as the Bitcoin economy has grown, some of the world's largest and most conservative institutions are joining us in our vision. Every economy is built on patient, long-term capital. Bitcoin is the foundation of the next phase of global finance. We're not just building a Bitcoin company. Meanwhile is the backbone of how everyone will save in the future.
Kadena Bitcoin is a decentralized, peer-to-peer Bitcoin borrowing and lending marketplace. Lenders in this market are looking for a fixed fiat yield, while borrowers are looking for leveraged Bitcoin exposure. Cadena is building Bitcoin native financial services to power the Bitcoin economy with self-sovereign financial tools that do not require giving up custody of your Bitcoin. Because as Satoshi said, the main benefit is lost if a trusted third party is still required. Learn more at cadenabitcoin.com. Bitcoin Treasury adoption just exploded past $84 billion, with 15 new companies jumping in this month alone. While your competitors stack Bitcoin, are you still watching from the sidelines? The question isn't if anymore, it's how fast can you catch up. Satoshi Institute pioneered the professional infrastructure that institutional treasurers can trust. Live simulation platforms, battle-tested risk frameworks, and the market's only Bitcoin Treasury performance indexes that track 800,000 plus Bitcoin holdings. Are you ready to join the Bitcoin Treasury revolution? Get your free strategic assessment at satoshiinstitute.com. Satoshi Institute is where billion-dollar Bitcoin treasuries begin. Check them out online at satoshiinstitute.com. The Bitcoin Treasuries digital conference is sponsored by Belgravia Hartford. Belgravia Hartford is revolutionizing corporate finance with cutting-edge Bitcoin Treasury strategies tailored for Canada's dynamic markets. Welcome to the Bitcoin Treasuries digital conference for October 21st, 2025. Bitcoin custody is evolving, and OnRamp leads this change with multi-institution custody, eliminating single points of failure. Instead of one institution or complex private keys, OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault backed by 3 independent, institutional-grade custodians. No single custodian can move funds by themselves, providing an unprecedented level of security that traditional custody solutions simply can't match. Protected by a $100 million Lloyd's of London insurance policy, all transactions are fully auditable on-chain, never rehypothecated, and executed only at your explicit direction. This means complete transparency and control over your assets at all times. Beyond custody, OnRamp delivers comprehensive Bitcoin financial services, including lending, trading, inheritance planning, IRAs, and more. OnRamp functions as your private banking partner, coordinating key holder activity, removing technical burdens, and providing a personalized, trust-minimized experience tailored to your specific wealth preservation goals. Whether you're new to Bitcoin or an experienced holder, OnRamp's approach helps secure generational wealth with unmatched security and peace of mind. Visit onrampbitcoin.com today to learn more, sign up, or book a free consultation with their team of Bitcoin custody experts.
Everyone should be able to save and protect their wealth across generations. We built this company so billions of people around the world can take control of their financial lives. We've reimagined savings and protection from the ground up with digital money and modern technology. We're the world's first Bitcoin life insurer. For the first time, people can save, protect, and pass on their wealth entirely in Bitcoin. 4 years ago, we started working directly with individuals. Today, as the Bitcoin economy has grown, some of the world's largest and most conservative institutions are joining us in our vision. Every economy is built on patient, long-term capital. Bitcoin is the foundation of the next phase of global finance. We're not just building a Bitcoin company. Meanwhile is the backbone of how everyone will save in the future.
Welcome back to the Bitcoin Treasuries digital conference. I'm excited to welcome to the stage Boyd Cohen, Boyd, good afternoon or good evening, depending on where you are.
Afternoon. I'm in Ciudad de Mexico. Here it's 4:30 in the afternoon.
Awesome. What's the elevator pitch for Arcadia, right? I've heard Arcadia is going to redefine treasury strategies in Mexico. So you're from what I hear, having quite a few meetings. What's the highlight, the tear sheet, the pitch?
So Mexico is a market ripe for treasury strategy. I know there's a lot of fun in our space right now, but we're still bullish. There's no direct exposure for institutions to Bitcoin in Mexico at all. We have no ETFs. There really is no other pathway. They're conservative, but there's a lot of capital here, a lot of trap capital. There's a grassroots Bitcoin movement. Our underlying business been operating a Bitcoin services business for 8 years in Mexico, so we're the longest running in the country. We will be one of the first Bitcoin native companies that's also aggressively pursuing their LBE strategy. So we have this like really interesting dynamic of being able to go to institutions and say, we can meet you where you are. You want exposure to Bitcoin? How do you want it? Do you want it in self-custody? We got you. We have a brokerage for that. You want it where we custody it for you? We have a custody service for that. We have a trust model for that we've gotten approval from the government for. You want exposure through a publicly listed instrument, debt, equity, we've got you there too. So we're very unique in that regard, I think globally, but in Mexico, we're the only one.
Got it. What's the big difference, or is there more than one big difference between a treasury company in Mexico versus other markets, other countries?
Yeah, I mean, obviously, the unconference in New York, whatever that was a month ago, was pretty awesome. Just getting to meet other treasury executives from other markets and, learning from them. And, thankfully for your event, I've been able to have direct conversations with several executives since then that have advised us as well. Obviously, every market's different. We all know that. You have the tax arbitrage angle in Japan, and that's been made famous by Metaplanet, but we actually have one too, which is kind of a curious one. In Mexico, if you are an individual retail investor and you buy spot Bitcoin and you have a capital gain when you sell it, you're subject up to 35% tax. If you sell a public equity that has exposure to Bitcoin, you're capped at 10%. So there's a huge margin opportunity there. Another thing that's really interesting is there's 350 billion in the pension funds in Mexico. They tend to underperform, and there's obviously fairly strict regulations regarding where they can deploy their capital. They have a cap on how much they can invest internationally, and the bulk has to be invested domestically. But like some of the other international treasury companies, we've seen this where they're launching in markets that don't have a lot of liquidity. There's not a super active equities market in the public space. Mexico's like that too. Mexico has a bigger debt market, which we're planning to tap into with preferreds and converts and all the rest. But we also think we can follow the lead of, Andrew Webley, who you had on earlier, and, Metaplanet as well, in terms of being a lightning rod, hopefully in a positive way, for, creating dynamism in the public markets here in Mexico. So those are some of the unique aspects of the market.
Got it. Are there things that investors in Mexico are like that you see as a theme that they're either curious about or skeptical about, or most inquisitive about when you talk to them about Bitcoin?
Yeah, there's a couple. I think a lot of the FUD, obviously we have Mexico is famous for having some issues with narco traffickers and all the rest. And that leads to fear, to two things. One is perception that Bitcoin is just like a tool for the thieves to get away with things. So we have to help address that FUD. And the other one, which is understandable, is the concern about self-custody Bitcoin and the fact that there's a higher rate of kidnappings and threats to people's lives in Mexico than you'd find in other developed markets. So those keep people away. Those are common. And then I think, there's compared to say the US or some of the more developed markets, I think in general there's better understanding from lived experience regarding what happens when inflationary situations happen, but they're more conservative. They're less risk prone when it comes to making investments. They're less knowledgeable investors. So there's going to be a lot of education that we have to do, and we have been doing just on orange pilling the average, high net worth individual or company or pension fund or institution, but then getting them to actually decide they want to make a leap and be part of the Bitcoin ecosystem and have exposure in a direct way. So those are definitely some challenges we face with the people we engage with.
Got it. And then are there some milestones that you can talk about that are kind of coming up for Arcadia, or what does the next maybe 12 months look like? And which is an impossible question, but
Can you promise that Bitcoin's going to go up forever again sometime soon? That would help. So yeah, obviously we have to be cautious about what we say publicly, as we're, a private company right now. We're going through a process. We're working with a major global auditing firm to get through the process so that we can be publicly listed. Something that's fascinating in Mexico, and I probably should have answered it before when you asked what's like unique about Mexico. I haven't seen this in many markets. Maybe you've run across it with some of your interviews, but Mexico has a mechanism for private companies to issue instruments in the public market that are tradable securities, can be debt, convertibles, not directly equity until you're fully publicly listed, but they can be convertible to equity. And so what they are, they're these, they call them like certificates basically. And you have to go through some rigor of process to actually be eligible to issue them. But there really is pretty minimal restrictions on how much money you can raise in that journey, and you can do that before you're public, or you never even have to be fully public. So you can remain a private company and have publicly listed tradable instruments in the public markets in Mexico. So we are doing that, and there's a new instrument that was approved. I want to say it was probably like 18 months ago. It was legally approved, but then there was all this like hurdles that the stock markets in Mexico had to meet to be eligible to allow these to be listed. But it's called, in Spanish, it's called régimen simplificado. I have no idea how to think about how to translate it, but it's basically like a simplified convertible instrument that is faster and cheaper to deploy and allows more companies more exposure on the sell side or the buy side. So that is happening first for us. We're going to start seeing the first of this kind of certificate released in Q1 of next year. That's the plan by the government and the exchanges and the markets. And we hope to be in that with our first instrument. And then we can continue to release these other instruments within and outside of that domain, because once you've released one, it's easier to release the more public ones too. And gradually, the intention, of course, is to go public, but we're not in a rush for that for a couple reasons, including the fact that the market here is way more hungry for debt or convertible or preferred instruments than straight equity issuance.
Got it. Super appreciate your time, especially with all the meetings you guys have going on. Where can people find you online? Where can they find Arcadia online? And if you have any brief closing thoughts.
So I'm in Twitter, I'm at Boyd Cohen. We're arcadiab.com. We have all our socials out there. As you know, but some of your audience may not, your partner in crime, Ed Julien, recently made a big investment in Arcadia B, and he's also an executive on our team. So he's wearing dual hats. So you can find us through him as well. Then my other co-founder is, Mexican born, and, he's the one who started the company 8 years ago. And his Jose Carlos Flores, you can also find him. And in terms of closing thoughts, I'll go back to sort of like the joke I made about, can you promise the number go up? We're tracking very closely what's happening in the Treasury space, and there's so much FUD that's been going around for so long. But I think, Bitcoiners are real Bitcoiners have an understanding of what it means to have conviction about something. And everyone I know that's really in the treasury space has the deep conviction because we know what's happening with fiat, with debasement. We know how much trapped capital there is out there. We have this kind of odd situation where a lot of TradFi mindset has seeped into the Bitcoin community via the treasury space. And I know that some of that is also the fault of some of the instruments that treasury companies have released with large discounts and a lot of retail not being happy with that. But what my concluding thought is zoom out, recognize that all of the underlying drivers that created the thesis that Michael Saylor started and that all the other companies have been following, not one single thing has changed in that thesis. It's all true. We've been proving it out to be true. I think what we're seeing in the macro environment is just further evidencing where the world is heading, where our economy is heading. And I fully, truly believe this, that the future S&P 500, however you want to call it, the Mag 7, the whatever, is going to be almost directly correlated to how much Bitcoin you have in your stack. Those will be the companies that will be the most successful in the future. I think we just have to have low time preference, have patience, keep building what we're building, keep raising however we can, leverage our operating business. In our case, we have the benefit of being a Bitcoin business already. So we can use both sides of these and just keep growing because the future is bright for all of us, in my opinion.
Awesome. A great place to leave it. Boyd, appreciate your time. Thanks for joining us on the digital conference.
Thanks, Tim.
Take care. All right. I'm excited to welcome to the stage for the first time ever on Bitcoin Treasuries, Fred Krueger. Fred,
Hello.
How are you, sir?
Tim.
Yes, sir.
See you again.
Yeah, great to see you.
Yeah.
What are your takeaways from the event? And congratulations on a great event.
My takeaways is that Bitcoiners like to hang out with other Bitcoiners.
Absolutely.
I honestly think, the event is a backdrop between a lot of really exceptional people getting together and enjoying each other's company. And, certainly the Pacific Ocean and the Hotel Casa del Mar and the Shark and everything else that provide that backdrop. But at the end of the day, it's just about people. And, the amount of exceptional people who showed up for that thing is just off the charts. And anytime somebody tells me that I'm going to be hanging out with 100 to 200 really exceptional people, I'm in, like that's going to be a really amazing time. And so, that's my takeaway. It's just, there's a lot of really bright people in the Bitcoin space.
Absolutely. I had lunch today with Tad Smith before we went to the New York studio, and he told me there's a rumor flying around that you want to do a Bitcoin Alpha event in another country. Any truth to that? Anything you want?
Yeah, I mean, one of the things I think would be kind of cool to do. I mean, as much as I love my hometown of Santa Monica, I think it would be really cool to kind of do this thing as a rotating tour of the world,
Mm-hmm.
And there are some great spots to have these kind of corporate retreats, and I would not mind doing one in. I'm sort of investigating the idea of doing one in Austria.
Okay,
and the Alps. It's a beautiful environment. You're outside of Innsbruck. You've got the Alps. You've got perfect German architecture and impeccable food and all this stuff. And we could do sort of a 2-day event in Austria, pretty much not much extra cost. And it would be great to have another one of these in, I don't know, 6 months to 9 months, something like that.
Mm-hmm.
That's a locale that I think would be safe for Bitcoiners, and would bring in some other people that, honestly, there are a bunch of people who flew in from Europe. And, there are some additional European Bitcoiners that I wouldn't mind, tapping into. So, yeah.
Yeah. Talk to us about MSTR. People may be surprised or may not be surprised that at least my take is you're a bit of an MSTR bull. Would you?
Yeah.
Is that
Yeah.
accurate-ish?
Okay, so I think, look, I think I am not one of these people who think that we're ever going to go back to, probably ever going to go back to 3 times M now. I doubt it, right? That doesn't mean that you're not supposed to hold the thing. I do think it can potentially outperform Bitcoin, but just not, you have to set your expectations correct. I think they can do a lot of really interesting things for the space. I think they're probably going to perform on par with Bitcoin, especially considering they have some leverage. They've got about 20% leverage. So if Bitcoin does as well as we think it is, having 20% leverage, will ceteris paribus will increase your rate of return by 20%.
Yeah.
If you're going to go 10x, well, maybe that's 12x. With some leverage. It might be even more than that, right? And maybe the leverage increases. So I think as long as you don't go too crazy in terms of expectations, I think it's an okay thing. I think where everybody went a little bit nuts was, in the days of right after the previous conference, when everybody was talking about 10x being the new normal. And I did think it was a little crazy then. I think it's more crazy now to think we're going to ever go back to those kind of era. So
Okay.
I don't know what do you think?
I think it remains to be seen. When Saylor tells Mark Moss in DC that 3x should be the floor, that's a interesting and some might say a bold statement.
Well, he's selling his own merchandise. He used to say on Wall Street.
You're selling the swag store that you have.
Yeah, exactly. I think 3x should be the floor. A lot of people have been hitting me up. I posted something sort of not negative, but sort of more like, I don't think I don't think 3 to 10x makes sense. And somebody said, well, I think it was Ben who said this, said, well, the S&P 500 trades at 4 times book, or, all these kind of reference like that. But these things are not directly applicable. If you want to make these arguments were made last year too, right? And you have a lot of very smart people saying why you should buy Metaplanet at 10x.
Yeah. Some people have called you a math guy. I'm obviously some people. So we had Dylan LeClaire on earlier. He said right now Metaplanet's leverage is like 0.7%. And Saylor has said, with preferred products, you may be able to leverage up to 20, 30, 40, 50% leverage. How do you think through that from a math standpoint, and what would that mean? The one thought that I've had is that an interesting sort of potential flywheel if the price of Bitcoin starts running, and then to keep that amount of leverage that these larger companies like Strategy and Metaplanet need to kind of keep buying to keep that leverage ratio in that.
I don't think it's going to be material, honestly. Look, first of all, where's the demand coming from? The demand's coming to the ETFs, really, right? The bulk of the money is going to the ETFs. It's not going to treasury companies. So treasury companies can represent, 30%, 40% maybe. They're not going to be the majority of money coming into the asset class. The majority of the money is going to be either ETFs or people deciding to custody directly themselves, right? Which I think increasingly we're going to see. So I think the ETFs is a small. I mean, the treasury companies is a small subset, and look, most of them are not leveraged. They're not leveraged at all, right? So, I think one of the things is you have to ask yourself why. Why is MicroStrategy not levered more than 20% right now? And I would argue probably they can't. You know what I mean? They can't really, these markets aren't deep enough for them to really do that. I think if Saylor could sell, $50 billion worth of STRC, he would. He should. You know what I mean? It's he does not have to pay that dividend if things go horribly wrong. And if there's demand at 10% and the CAGR of Bitcoin is 38% or 42%, that's a smart move, But yet he only has, I don't know, $3 billion worth only has $3 billion worth of STRC. You know what I mean? And he's been iterating over these things. None of these things individually have made a material number on their balance sheet. I don't think. So I look at it and I'm like, I'm kind of waiting to see, does he in fact lever up like this? So I would like to see more leverage. I think if I had more leverage, that would be more of a reason to own the stock, right? At 20% leverage, and there's an MNAV, so there's an MNAV risk, right? There's an MNAV risk that you could drop 40% just on a compression to 1, right? So you might have that in a bear market. I would want a scenario where in a bull market, I'm going to make all that back in the next year, right? So, I think he's playing it cautious from his point of view. He's playing it really actually extremely cautious. He says sell a kidney to buy Bitcoin, but he's selling a fingernail. He's not really going all out. But again, I think it's an okay strategy. I think kind of to what Asteroid was saying, at the conference. He's already won, right?
Yeah,
Michael, you've already won. You've won the battle. You're doing great stuff for the space. There's nothing left to prove. You don't get some kind of medal if you get to 1 million Bitcoin.
But maybe you do. I don't know.
I mean, he could award one to himself posthumously.
Yeah.
I don't know. Like, to me, he's already got the pole position of the company that's probably forever going to have the most Bitcoin for its own balance sheet.
Yeah.
Unlikely that anybody reaches him.
How long could it take for these preferred markets to develop? And that might be an unknowable question.
Here's the thing. I think that the structure is not the right structure, personally. Okay.
What would be the right structure?
Look, I think more of a bit bond structure is more preferable. Look, I used to trade fixed income, and I recognize these things as innovative. But if I'm a fixed income investor, I want a maturity. I want to know that I'm getting my money back at some date. You know what I mean? And that's what I like about the bit bond proposal from BPI. I think that's exactly what people want. They want a 10-year bond, that has a sort of a guaranteed payout, and they'll be okay with a low current yield, a low coupon, great, but they want to at least be guaranteed their money, right? And they'll take a kicker in Bitcoin. I mean, how great is that? That's a great thing. And I think there's that investor, and then there's another investor who wants just I want to borrow money. I want to place my money in Bank of Saylor at 10%, right? But STRC is not Bank of Saylor at 10%. That because I can buy STRC, and if something bad happens, the price of STRC now may go from wherever it is today, 99 to 97. Okay. Well, that's going to take me, 3 months to get back, just to recoup that, right, back in interest. So I don't think it's exactly kind of what people want. And either I just feel like he's creating these instruments in, AI, but I'm not completely convinced that that's what the market wants. I think if there was a strategy 2-year note that paid 10%, I think everybody would be interested in that. Like, why not? Like 2 years, I get my money back. I think it would trade at well below 9%, right?
Yeah.
So it's sort of like me as an investor.
Mm-hmm.
I kind of like something like that more than I like STRC. I'm not saying these are bad, but they're not, they're the tutti frutti flavor of ice cream, and I'm kind of a plain vanilla kind of guy. Strawberry sometimes on weekends,
Got it. Strawberry on Sunday.
Strawberry on Sunday when I go completely crazy, let my hair out.
Yeah.
But I'm more generally, I just order vanilla, and when I have my fixed income hat on, I just want yield. I don't want to think about what their dividend policy is going to be, or how fast they're going to increment something. All those things are cool, but I just I do think there's a tremendous opportunity right now, especially because I think interest rates are going to go down quite a bit, right? As you probably think too, right?
Yep.
I think you have Paul Tudor Jones sort of saying, look, my 1-year projection is we're going to get to 2.5% interest rates, and I think it sounds crazy because we're at 4, but we're going to be at 3.75 in what, 9 days? We're going to be at 350 in December. We're going to be at 325 in January at the Fed meeting, and this is all before we get our new Fed chair, right? So, I think everything. I don't remember the exact date of the January meeting, but let's just say we're 325 in January, and then we get some ultra dovish, Fed governor. First thing they're going to do is lower it by 50 basis points day one, right? So I think May we're looking at 275, 250. You know what I mean? With possible further cuts in June. So I just think this whole idea of very high interest rates is, it's going to change dramatically, in the near future.
Yeah.
And then I think, a lot of people are saying, well, I think this is going to push long-term rates higher. I disagree. I think that there's going to be I think every time you've seen this happen, what do you have? You have a search for yield, right? You've got 30 trillion in the latest video Saylor did with Mark Moss. He was saying there's $30 trillion of under 1 year paper out there, there's $7 trillion of cash out there, right? Cash and money market. So you've got trillions of dollars, and they're basically, their rate of return is going to go down by 40% in the next 90 days. I mean 30% in the next 90 days, and they're going to want to. They're going to, they've gotten used to that cash flow. So how do they get that same type of cash flow? They have to extend, right? They have to either extend or they have to go to worse credit, right? So I do think, all these preferred type things like STRC, et cetera, they all look better in a world of 2.5% interest rates than they do in a world of 4% interest rates.
Sure.
Even though maybe you shouldn't be valuing that, psychologically 4% feels like, yeah, I'm good at 4%, The minute you get into below 3, it's sort of like you feel like I'm just, I'm going to die. I'm going to run out of oxygen. So, and I really feel like last cycle there was this, it wasn't a cycle about Bitcoin really, even though there was El Salvador and Saylor stacking. I really feel like the big narrative of the last cycle was yield, right? It was interest rates were at 1%. You could get 0.5% from your account at Bank of America, and meanwhile Celsius was offering you 6, 7, right? And then Terra Luna was offering you 20. And so that feels to me like that was what drove this market, right? Was this mad craze for yield. Yeah. And if I had to guess, I think for every Bitcoiner out there who really believes in Bitcoin, there's another 5 guys out there who are resisting the idea and who just want yield,
Yeah.
So I do think he's onto something with that idea of, kind of creating something that's close to a money market as he can. But I think I think maybe there's another couple iterations. I don't think he's hit the iPhone moment quite yet. He might be the I don't know. I won't say the Newton, because I think it's not a stillborn invention, but he's more of the iPod moment. You know what I mean?
Mm-hmm.
The iPod came out first, then we came out with the iPhone. The iPod was a success. A million songs in your pocket.
Yeah.
But I just feel like there's some more financial innovation and tweaking that are going to happen.
Mm-hmm.
And I do think that there's going to be more financial engineering from all the participants. I mean, I'm very curious to see what Jack Mallers is going to come out with and Tether.
So I guess speaking of tweaking and engineering, for companies that wherever they are in the world, for simplicity, let's say it's the U.S.
Yeah,
they're private companies that they haven't gone public yet. What would you tell them, if anything, for what they can tweak or engineer or do differently, so you don't have these pipes unlocking and stocks going down 90% and is there any workaround or something that's obvious to you, or it's something that's no, there's no simple answer, Tim? Like if there was, they would do something.
Well, it happened to MicroStrategy too. The stock got ahead of itself, right?
Mm-hmm.
I think everybody gets too carried away in bull markets. They just tend to love everything.
Mm-hmm.
And, I think if you just sit back and be more rational, little plug for my book. One of the things I try to do with this book is not just sort of say where we're going, but how fast we're going to go. I think hyper Bitcoinization is going to take a long time, right? It's going to take, I do think we're going to get there, but I do think, it's a couple decades from here, and so, we got this long passage of doing it, and the world's not going to suddenly wake up and start valuing Nakamoto at 20 times NAV. That was crazy, right? It will never get back there. Those investors will never get back. But look, I own some Nakamoto now because it's trading below NAV. So I think it's kind of dirt cheap. What I'd like to see all these companies do is prioritize their own stock more, right? Including MSTR.
What does that mean?
Well, that means that, let's just say for Nakamoto, right? If your stock is trading below NAV, below the Bitcoin value of the stock minus the debt that you have,
mm-hmm.
Well, your CEO should be personally writing checks, big time. You know what I mean? David Bailey should be buying his own shares. That would be he should be announcing, I am selling my private jet and I am buying my own shares, right?
Mm-hmm.
I'm in a mortgage, taking out a mortgage on Bitcoin Magazine, and I'm buying back shares of Nakamoto because it's cheap, and I believe in Bitcoin.
Mm-hmm.
So that's the first thing you should do. So, second is, I think he should be buying to the extent that he has extra cash, and I know he's getting some more extra cash through the refinancing this leverage. I would buy back shares before buying more Bitcoin. The amount of Bitcoin he has doesn't matter. It doesn't matter. Whether he has 5,900 or 6,500, who cares? We don't care. But the shareholders do care what the price of Nakamoto shares are. So I think that makes. I think that, and then I think all of the players should stick more to their scripts. If you say you're not going to do ATMs below 2, then don't do ATMs below 2. Or maybe hold a conference and say why you may do ATMs before 2. just say it and then do the opposite. That's not really it seems just common sense, but I just don't, I haven't seen that much in public companies, and it's just it shows you how much love Saylor has that he can even get away with that. We all love Saylor, so I think that we just feel a little bit like it's sort of like you're dating this really beautiful girl throwing a drink in your face. You got the drink all over your face, then you're like you're about to say something to her, then you look at her and you go, well, you are beautiful. I bought you another drink,
Right.
That's kind of the analogy, you know what I mean? Like, so, I think everybody loves Saylor, everybody loves his intellect and what he's done for the space. And we also love the fact that he's buying Bitcoin. It's good for Bitcoin, right? But, as a small MicroStrategy shareholder, I kind of wish he would do less buying of Bitcoin, and possibly add a little bit more leverage, right? So I don't think anybody's done terribly wrong. I think the communication has not been great. And I think that I think some of the analysis on this space has been a little erroneous, in my opinion.
Can we dig a little bit deeper on buying back the stock? I was on the phone with an investment bank, and they're like, yeah, this one stock, they bought back their stock. It brought the price up a little bit, but not a lot of it. And they said, Tim, what would you do? And I said, well, I don't have like a great answer. I would just consistently buy the stock back and message that out to the market in the same way that you consistently buy Bitcoin. But that's the best answer I have. It's not a great answer. Basically,
well, it's not only the company buying the stock, it's also like the CFO of MicroStrategy just sold $20 million worth of stock. You know what I mean? So when you have insiders selling like that, it's a red flag. I'm not saying I don't completely care about it, but it's the appearances are not great.
So the end of my comment back to this investment banker was just, the obvious statement of we need Bitcoin to take the next level up, and that covers up a lot of stuff. And then, right, the markets open back up a little bit more. Is there anything we're missing there?
I mean, look, the part of the problem is I think there's a lot of hope on these companies for what they could be in the future, and I have hope. Like, I think that 20 years from now, we may be in a completely new era of banking, right? And, maybe we'll be, MSTR will be financing the next Amazon, right? Because the only thing people are going to be accepting is Bitcoin, and the only person who has got all the Bitcoin to lend out is MSTR and other major companies like that, right? So that could end up becoming it could end up becoming a major thing way down the road, right? But this is all far. We don't know. Nobody's ever lent out Bitcoin and achieved a yield. It's too early to do that. Nobody wants to borrow against Bitcoin, right? It's too early to talk about, what becoming a Bitcoin bank really means. It's, people have talked about developing a trading desk around it. Well, let's see it. You don't build one of those things overnight. Those things organically have to grow until you develop a business. In the interim, I think these companies are in really great fundamental shape, right? Because they own a lot of Bitcoin, and Bitcoin's probably going to do fantastic over the next 10 years. So all these companies are great, and all their downside is limited, because even if it trades down to 40, even if it trades down to 1 times MNAV, given that they have 20% leverage, the pain is going to be not huge in Bitcoin terms, and Bitcoin's going to maybe 10x. I just don't, I think it's sort of like we're talking about just whether they should have bought IBIT or MSTR. In many cases, you don't have the choice, right? Because certain people can't buy IBIT; they can only buy MSTR. So, I think it's, I think these companies will do just fine, and I think they're going to do, relative to the rest of the financial sector, they're going to do fantastic, right? And I do think there's probably opportunities with other hybrid instruments that haven't yet been fully invented and fleshed out. But look, Saylor's doing a reasonably good job, I think. And I think he has already won. He's in, it's just a question of what should that company be valued at. And I would say it feels kind of fairly valued right now. It doesn't feel massively undervalued. And it doesn't feel massively overvalued either. So, I'm not itching to go in and convert all my IBIT and all my Bitcoin to MSTR. I don't see that need. But I think that the people who are buying it are going to be okay. So that's what I think. And, other than MSTR and, a few others, Nakamoto and Metaplanet, I just don't follow them. I just don't follow any of the smaller ones at all. So I have really no comment. But I think it's sort of like, I remember when crypto started a while ago, there was a bunch of things like crypto, Long Island Iced Tea or something was a crypto company or something, and then so a lot of these things are penny stocks that have dubious management. You can't trust them. I would say stay far away. You know what I mean? So in general, I'm only interested really in MSTR as a personal investment. I'm sort of vaguely interested in Nakamoto just because I think there's an opportunity, a short-term opportunity to kind of get, a little bit above fair market value. But I think ultimately, I think for most people, I think MSTR is the one to stick with. That's kind of my view.
All right. Before I let you go, what's the name of the book and where can people find it?
Okay, so the name of the book is Bitcoin 1 Million on Amazon. And paperback, audiobook coming soon, and then and Kindle. So yeah.
And it was number 2, and then it went to number 1, or what?
Yeah. So it got to number. I mean, I don't know where it is today, but it was number 1 in Bitcoin. It eclipsed the Bitcoin standard, and number 1 in macro. So I beat Ray Dalio.
That's great.
And then number 1 in money and monetary theory or something like that too. But I get a lot of chuckles thinking that my book beat Ray Dalio in the macroeconomics category. So
not bad bragging.
It's also good bragging rights when I'm debating, as I do with Joe Carlasale. I'm like, Joe, you realize you're talking to the number 1 macroeconomist in the United States, and he's like, I'm not. And I go, well, you actually are, according to Amazon. So yeah, it's fun.
And Amazon's a good reference if you just forget about the AWS outage. So
yeah, exactly. Right.
Awesome. Fred, thanks for your time. Really appreciate you joining. This has been fun.
Enjoy it. Thank you.
Bye. Thanks. See you. Bye.
Bye.
Ladies and gentlemen, please welcome to the stage Sam Callahan. Sam, how are you?
What's up, Tim? How you doing?
Oh, doing well. I don't know that I've seen many of your appearances or any appearances. Maybe you've done a few since you've been representing Araj. So would love for you to tell us the story and where the company is right now, and kind of how it all unfolded, maybe a little bit of your background as well for the couple of people that may not be familiar.
Yeah, thanks. Super excited. It's Orange BTC, but I understand why you Orange. Makes sense.
It's just a fun word to say. Okay, Orange BTC. Okay, got it.
Well, Orange BTC is the largest Bitcoin treasury company in Latin America. We're listed on the B3 stock exchange in Brazil. We have 3,701 Bitcoin, 26th in the world on the Bitcoin 100. So we listed a couple weeks ago, and Brazil is a really interesting market to launch one of these Bitcoin treasury companies for a lot of reasons, so we can get into it. But really, why I joined was I think Brazil is going to be an exciting time to invest over the next 10 years for some of these larger structural macro forces. I think right now, due to local regulations and rules, there really needs to be a regulatory compliant way to get exposure to Bitcoin in that market. There's a lot of trap pools of capital. There's some tax advantages to having a domestic equity wrapper or a Bitcoin backed security for investors there. I think the team that we've compiled here really has the expertise to execute and really launch a strategy like company, Metaplanet-like company, a pure play Bitcoin treasury company in Brazil. And, we're off to the races. We've stacked Bitcoin every single week since we've been listed. We got a BTC yield of 1.7%, and we're ready to go. It's been really, really exciting already out of the gate.
Anything that's surprised you to the upside or downside, just kind of getting in the weeds and the day-to-day of like, okay, I'm behind the curtain, as some people say now, and having conversations, whether it's with prospective investors or service providers or regulators or everyone.
Yeah, no. I think the biggest thing has been the reception. Even this morning, we were talking to 20 of the largest asset managers in Brazil, and their questions were really, you could tell that they'd done their homework a little bit. And it was less about teaching them about Bitcoin and more about the operating model of a Bitcoin treasury company, why we're doing what we're doing. And the questions were smart and the reception was good. And so, lately, the last 2 weeks, it's been amazing just to see the reception in Brazil for a company like Orange BTC. The other thing that's been good is just the reception from the community. Obviously exciting when we're buying Bitcoin every single week. It's been great to come on shows like you and your show here. And, that's probably the main thing is just the reception from the asset managers and the community broadly in Bitcoin.
Got it. For those that are still, myself included, getting their arms wrapped around, you have the Bitcoin treasury side of the business. And then is there an operating, quote unquote, traditional kind of operating side of the business? And if so, what does that kind of entail at this point?
Yeah, we went public via a reverse merger. It was an education company, education infrastructure company called Integras. And so the way the Brazilian education system works there, similar to like the United States, the SAT and the ACT, if you want to go to university in Brazil, you have to take these prep courses, right? And so this company built an entire infrastructure of online curriculum and courses where students could go study for this and get into college. And so we thought it was a perfect company to merge with as a Bitcoin treasury company, because we can use that education infrastructure to develop Bitcoin curriculum and teach the market about Bitcoin. And so one of our core goals is education, because Bitcoin or Brazil right now has a little bit of a hole when it comes to Bitcoin content, Bitcoin educational materials, courses. It's not like the United States where there's a plethora of places to go to learn about this thing. It's akin to 2018, when the Bitcoin standard was just coming out and there's some blog posts here and there. And so we want to fill that gap. We want to be known as leaders in education in Bitcoin. So that's why we chose that company. Our founders were very specific about, which company would be a good fit for the long-term goals. And so that's what we're talking about with the operating company side of things. But, we are a Bitcoin treasury company as well. Our focus is accumulating Bitcoin and increasing Bitcoin per share for our shareholders, similar to a strategy or a Metaplanet.
Got it. I guess on the capital structure side, are you looking at things similar to, as you just said, strategy and Metaplanet, where maybe there's an ATM-like mechanism and a preferred mechanism, or other sorts of things that you would consider as part of the strategy on the structure side, or a capital stack, as they like to say?
Yeah. Look, that's actually one of the things that the co-founders were very, very thoughtful about how they structured this company from the get-go to be optimized to be a Bitcoin treasury company. And it's very important because unlike the United States or Canada, we don't have an ATM mechanism. So similar to other Bitcoin treasuries around the world, you had to replicate it, but we did it in a very interesting way. That's we had to kind of teach the regulators about how we structured the corporation that gives us flexibility to access the capital markets and raise capital when it's opportunistic to do so, and accretive for our shareholders, which is important for a Bitcoin treasury company, right? So that flexibility, given our corporate structure, we think gives us an advantage over other companies in that market. And so we are purpose built to be a Bitcoin treasury company from day one. And that's really important because, like I said, we had to get kind of creative with how we replicate an ATM, and we were able to do that.
Got it. Awesome. Might be an impossible question. What does the next 12 months look like?
The next 12 months, we're laser focused on teaching the market. Like I said, taking meetings, teaching them about Bitcoin, teaching about Bitcoin treasury companies, building that liquidity in our common stock to meet our goals. When we think about, adding leverage later on or collateralizing things like a preferred, it really starts with the common stock. And we have to teach the market about what we're doing to get them excited. And like I said, there's really no publicly listed regulatory compliant vehicles to gain exposure to Bitcoin outside the Bitcoin ETF and may lose. That's it. When you look at the United States, we got 11 spot Bitcoin ETFs. We got all the mining companies. We got a lot of infrastructure plays like the Coinbases of the world, Blocks of the world. There's probably like 50 or 60 ways to get exposure in the public markets in the United States. There's like 2 in Brazil. And so we think it's really interesting to incorporate that into that market because, as I mentioned before, there's the state pensions that can't buy spot Bitcoin. There's the private pensions that can't buy spot Bitcoin. There's the insurance companies that are restricted from buying spot Bitcoin. We're trying to unlock those pools of capital, and that takes education efforts. And so we're grinding. We're already talking to as many asset managers, as many investors as we can to teach them about what we're doing with this Bitcoin treasury strategy. And that's been our focus from day one. And then we have to really focus on building that liquidity, building that excitement around our common stock so that we can kind of think through our medium to long-term goals. So that's been our focus.
Got it. Maybe we can zoom out for a moment because many people know you from all of the research that you've done, analyzing kind of where we are as a market. You have gold ripping and now gold going this way and Bitcoin going this way. Is it like, the gold cash is going into gold profit takings going into Bitcoin, and I'm half joking, but half right. It depends on what chart you look at and what, but kind of zooming out, where are we? And, I guess we'll know next year whether the price hits new all-time highs. But is the kind of 4-year Bitcoin halving cycle kind of slowly fading into the past, or is that too premature to say?
Yeah, maybe I'll address your first point around the gold. Look, if Bitcoin didn't exist, I'd probably be a gold bug. But I just think Bitcoin is better at being gold than gold. Mm-hmm. And it's kind of the fastest horse in the race. But to see gold rally like this, it's an insane rally. If you look back at the chart to 1971, it's just gone completely exponential. It's doubled market cap in 24 months. It's insane. It's now $30 trillion. And really what you have to think about is what we're witnessing here is a massive devaluation of fiat currencies against hard monies. And I think it's related to the fact that global debt's sitting at $340 trillion. And I don't think it's so much about the U.S. defaulting. It's really about what the government's going to do to try to get them their way out of it, right? So that's financial repression, currency debasement. And I think the market's really waking up to that. Gold has a track record of thousands of years being a safe haven asset and a reliable store of value. So large institutional investors, central banks, they trust gold. And so that's their monetary alternative that they're going to. But increasingly, investors starting to wrap their head around the fact that Bitcoin also has safe haven characteristics, right? And so Bitcoin's really attractive. People see it as volatile and risky, but it's attractive for all the risks you avoid when you own it. There's no duration risk. There's no dilution risk. There's no counterparty risk. There's no business risk. There's no sector risk. There's no physical risk, right? And so when you strip away all those risks and think about what asset do I want to hold for the next 50 years, what asset do I want to capitalize a company on, really it comes down to Bitcoin. And so the two major advantages over gold that Bitcoin has is that the supply's fixed. And Lynn Alden and even Saylor just talked about this in his keynote. 1.7 annual inflation rate for gold, let's round it up to 2, that has a half-life of 35 years. Okay, so you lose half of your purchasing power in 35 years. You lose basically all of it in 70. It matters. And so when you consider, the rate of monetary inflation is 7% a year roughly, and gold's inflation rate's 2%, you would think it's going to appreciate about 5%, and that's basically what it's done. So it's basically kept up with the rate of monetary inflation. And so that matters, like 2% versus a 0% inflation rate, or Bitcoin will eventually be 0%. That really matters when it comes to long-term wealth preservation. And the other thing Bitcoin has going for it is it's just smaller. I mean, literally, it's a $2.2 trillion market compared to a $30 trillion market. And we know that Bitcoin has superior monetary properties. And since it's a smaller market, each incremental dollar that goes in there will affect the price more than, say, a dollar going into gold just because it's larger. And so that's why Bitcoin has a very, very unique value proposition in the market as a safe haven asset with the asymmetric growth potential of like a tech stock, and that's super attractive to a lot of people.
Do you think the run that gold just went on, let's just say it doubled, says something to the contrary about the theory of like the law of big numbers, the law of large numbers? Like, well, volatility is going to go down because it's just the numbers get bigger and bigger. It's like, well, look at what gold just did. If gold did that, then what could Bitcoin do? Just in that comparison, and even leaving aside what Bitcoin's historically done, maybe.
Yeah, no, I think there's a lot of pent up demand for apolitical neutral monetary alternatives right now, given the widespread currency debate. And I don't think people quite understand when you look at the M2 money supply expansion, even the last 15 years across major currencies, it's significant. And so I think people are just going to flood to hard monies to protect their wealth once more and more people wake up to this fact. For Bitcoin, I think there's something off here, right? I mean, Bitcoin's about 7% of gold's market cap. And so, I mean, gold's like a 13x premium. And I talked about how Bitcoin has these superior monetary traits. I mean, either Bitcoin is materially undervalued right now, right? And so, like, even if it achieves 20, if gold hits $5,000 and Bitcoin takes like 20% of that market cap, you're looking at Bitcoin price of like around upper 300,000s, like 400,000s. So if you think that like Bitcoin's like 20% as good as gold, like you're still looking at pretty significant returns. And I think it's better than gold, right? Over the long term. So something's off here in terms of how the market's valuing gold relative to Bitcoin. And I think it's that Bitcoin's undervalued.
Got it. Any closing thoughts on the Bitcoin macro Orange BTC end, and where can people reach out to you and to Orange?
Yeah, I think like one of the interesting things about the macro setup for Orange specifically is that basically Bessent and Trump have telegraphed that they want a weaker dollar, right? And they need it to meet their policy goals, to reshore their manufacturing base. You got to make the exports more competitive. They want a weaker dollar. And you see the pressure on the Fed to cut rates. They're already cutting rates. They've already talked about reducing their QT. And maybe we might see some QE on the horizon if things start to break. You already see some kind of cracks in the liquidity. You got 85% of central banks around the world already cutting rates. And so what that means is if we do have a weak dollar cycle, emerging markets tend to outperform developed markets. If you look at the early 2000s, EMs went on a complete run, and you have a lot of similarities and parallels to today, including a weak dollar cycle. You got gold ripping, you had the Fed cutting rates after the dot-com crash. And so there's some similarities there. And why that matters for Orange BTC is, as a domestic equity, and like Strategy's done with the NASDAQ 100, if we build up liquidity and hit certain thresholds, we'll get included in indices, right? And benefit from those passive flows. And if we're correct about this weak dollar cycle, there's going to be this massive structural macro rotation into emerging markets. And Orange could be a beneficiary of just those large structural flows into these EM indices that we're a part of. And so that's part of our goals. And that's how like Orange is differentiated, say, from the ETF on the market, right? The ETF will never be included in these indices, but we will benefit from those large macro forces. And so it's part of why I'm bullish on Orange. Is I'm bullish on Brazil. I think Brazil is a export-driven economy that is really rich in natural resources and commodities. And as Luke Roman says, like, we're moving to a world where those who have hard assets instead of paper assets have the power. And so I'm very bullish on Brazil, and that's a part of why I decided to join Orange from a macro standpoint. And so it's an exciting time. We're just getting started. And so thanks for having us on the show. I really appreciate it, Tim. And great job doing everything you're doing. You know, the conference in New York was fantastic, and you got to be tired right now. I mean, how many hours right now?
Yeah, we're going 5 or 6 hours today. So
that's nothing for you, right?
Yeah. It's not 21 like a few months ago. Where can people reach out to you and reach out to Orange BTC?
Yeah, well, you can follow the company. We're at Orange BTC. That's our ticker, our handle on X. My handle on X is at Sam Kalla, SAMCALLAH. And then you can check us out our website, orangebtc.com. We're going to be releasing some educational research reports soon, as well as planning on launching our dashboard, where we'll be very transparent about our treasury operations. And so check out orangebtc.com if you want to learn more about the company.
Awesome. Sam, thanks for your time. Thanks for joining the digital conference, and we look forward to following along and checking in with you from time to time.
Yeah, thanks, Tim. Appreciate it. Have a good night.
You too. All right, that's it. Thank you so much, everyone. Thank you to the sponsors. Thank you to everyone that's viewing. This has been the Bitcoin Treasuries Digital Conference for October 21st, 2025. We'll be back next month. Follow us on X at BTC Digital Conf and at Tim Kotzman. And we will see